It's the time of the season. Bum, bum, bum. It's the time of the season. Dee, dee, dee. It's the time of the season. All right. Good morning. Good morning. All right. Let's get ready for the opening bell. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, July the 1st. Got some bad news last night. A friend of ours' wife died. And one of my best buddies' grandson died. It's been a hell of a night. I've been staying up all night talking to people. Crazy.
Can't avoid tech. That's a nice place to leave it, Max. It's always great to see you. That is Max Kettner of HSBC. Meanwhile, let's take a check on futures and on tech ahead of the opening bell. You can see we're down slightly across the indexes right now. The S&P 500 down by about 0.3%. We did hit record highs 2 days in a row, so it's hard to complain too much. You can see the NASDAQ 100, where those big tech names live, down about 0.4%. And the little guys are your biggest losers at the moment. The Russell 2000 down about 0.6%. We'll walk through all the action up next. This is Bloomberg.
When you need pizza delivery, everyone knows Ultimate California Pizza has the best pizzas on the Grand Strand. UCP has teamed up with DoorDash, so order now for fresh hot pizza right to your door.
Artificial intelligence is redefining what's possible. At CoreWeave, our cloud platform is purpose-built for AI to provide the world's leading innovators with the performance and efficiency they need to realize AI.
All right, let's get ready. I apologize for being a little sidetracked. It's summertime. You can imagine summertime with a 15-year-old and a 18-year-old in the house. Summer, arranging trips and activities. What time is it? Okay, 9:25. My clock isn't displaying. Why is that? Oh, it's desktop clock. Let me force quit that. Okay. There it is. Okay. I just couldn't see it. Okay, let me drag that over. Um, okay, SPY is inside of yesterday's lower range. Okay, it's important that when you start off the day, I find that instead of moving in 15 different directions, always just wait for the markets, unless you have something in mind and you see something that's moving pre-market, and that's what you're trading. I find it's best to just kind of stay focused and wait for the markets to tell you what to do. One of the ways I do that is I look at the New York FANG components. I can see that they're all mixed. They're all lower at the moment, so that's telling me to just chill. I'm looking at the futures, trying to make a higher low, so maybe we'll do something there. Let me go look at Bitcoin. So there's a workflow, basically. Whatever works for you. I like to just step through the markets like this and see what the different asset classes like gold and Bitcoin, bonds, yields, what are they all doing? What are they saying? What are they saying to expect? All right, so we'll look at junk bonds. We've got 3 minutes to go. Junk bonds. Okay, junk bonds yesterday. Okay, let's look at the weekly trend. Like the S&P 500, similar. We look at these number of weeks. This has been up 4 weeks. We're at highs. There's no reason why we can't continue to move higher. But as we start to add weeks to the trend, I get a little bit more cautious. If you read the update this morning, Brett's talking about selling premium in those positions that are in the top right part of that gamma update. At the bottom of the gamma update, there's a graph. Okay, and the stocks on the right: Intel, XOM, Apple. We got Hims and Hers, AMD, Baba, SMCI, Coinbase, DraftKings, and Adobe. Those have very high implied volatility. You might want to think about selling some premium. So look at the gamma update. I won't belabor it right now because we're getting ready to start the day. But okay, let's get back to the SPY. So the New York FANG says just chill right now. Amazon's trying to bounce. Watch Amazon. Anyway, I had a buddy of mine. His wife died. I didn't realize he was divorced. Just found that out. Just talked to my wife. One of my best buddies that put me up while I was living with him while I was going through my divorce. His grandson died. That really sucks. All right, so I'll focus on the markets. Just got a lot of shit on my mind right now. Summertime, kids home. Okay, and we're open. So check your profits. First thing I do is look at taking some profits off the table if it's necessary. I'm gonna let a few of these continue to run. Okay. So New York, the NASDAQ 100, we've got about 30 stocks green. We'll see if we we're adding more. I can see them adding as I speak. More stocks are starting to advance. Okay, and we had 30, we got about 35, 40 now. That's good to see. That's another thing. If you have a way to track with TOS, you can have a list in a grid or in a list format from top to bottom. You can rank these by performance. Mercado Libre is number one. Let's go through these real quick while we're waiting on the New York FANG. Okay, Apple turning up. Mercado Libre. Apple broke out above the. Let's focus on Apple for 1 second, okay, if you don't mind. Apple, because I was thinking about this. Apple's above the 50-day. Okay, here's the 5-minute. Apple's above the 50-day. Okay, so we want to see this start to expand. Okay, there goes Apple. Apple broke above the 50-day Monday. Okay, Apple's looking more and more like a proper long. What's a proper long? One that you would take and you put a stop underneath the low of the day, which is what I'm going to do. I already have a position, but I'm going to add to it. I have, I believe, August. No, July. And we go out July 25th. I got some singular calls here at 210. Okay, we're only a couple of bucks out of the money. Let's see. How do I add to this? Okay, let me Apple. So Apple is something that I'd be interested in. You can see Bollinger Bands are starting to expand, and everybody's been hating on Apple lately. Okay, Tesla's down this morning. Most stocks are down, a majority. What I'm looking for now is what stocks are starting to emerge from being down on the day. Keep an eye on Apple. It did pop, but we're going to wait a few minutes before we do anything. Nvidia is trying to get something going. Netflix is lower. Tesla's lower. Tesla down to 294. Okay, so but look at Apple. It's coming out of the squeeze, or trying to. Okay, trying to come out of the squeeze. Let's look at the 60-minute. Okay, 60-minute. Okay, it's above a flat 20 EMA, so this needs to start sloping upward. I mean, we could wait a few days. Think about it. If you're trading Apple, what's the idea? The idea is to make money. Do you want to make money quickly? Do you want to day trade it, or do you want to swing trade it? Well, it's setting up to start trending. So looking forward to swing trading it makes a lot of sense because we're in the right side of the pattern, right? So as we start to break from this, most people hate this stock right now. Everybody's like poo-pooing it because it hasn't been working, but it's in the right side of the pattern. It's probably, well, it's done enough over the last week, consolidated Bollinger Bands. This is the area where you want to consider buying options are inside of a squeeze, not over here when things are expensive. That's where you want to sell premium when Bollinger Bands are wide. Okay. Okay, S&P X, SPX gap down. All right, so on the right side of the pattern, so we know what we got to do with Apple. Apple's going to be a swing trade soon. Okay, we could probably run this for, let's see, where are we at right now? We're at 206. We could run this for 15, 20 points in the near term. Okay, short near term. My mother-in-law put the trash out. Holy shit. This lady is really good. My mother-in-law is staying with us for now. All right, so Apple. Google Translate making it much easier to understand her. So we get along really good now, my mother-in-law and I. What's Fanny talking about? I don't know. I'm rambling at the moment. Watching Apple, watching the stocks there. Okay, Apple's holding up fairly well. A little selling right there. All right, so we had a little bit of selling just now on Apple. Okay. A little liquidity grab there. Liquidity grab. The hedge funds or the market makers push this up. People buy it, chase it. They grab a bunch of liquidity for whatever reason. Could have been profit taking. Looks like Apple wants to go. I'm going to take a little bit of risk here and try. Okay, I'm going to go a little further out. Apple. I'm going to buy some time. Apple. I'm going to go out to September. You know what? Let me just check one thing first. Apple. Apple. July 31st. All right, so I don't want to go out that far. Let me just stick with July for now. I have options in July for Apple. Okay, Apple's starting to go. All right, so I already have a position, so I don't have to chase. I already know that I have exposure. But I would like to buy some more of these July 25th 210s. Trade Apple July 25th. July 25th. 210s. Let me buy some more 210s. 210s are $4.85. Buy. Do you want to do vertical?
Consumer prices rising to 2% from a year ago, up from May's 1.9%. But tariffs is still a little large. So how do you see that developing?
Well, first of all, I would note that we are at 2%. And this is the latest reading. This is also
Okay.
target that we have had, and this is the projection.
Okay. So I'm going to start some 210, some more 210s.
When I say target reached, okay? And I think we should start by recognizing that. We faced massive amount of shocks occasionally, and we are now through that disinflationary process that we have developed over the last 3 years.
Okay, Apple. All right, Apple's looking good. All right, so I just bought on this little wick down. Okay, so Apple, just keep it to a few stocks at the moment. See if this the Nasdaq list is growing. Nasdaq 100.
So we have to continue to be extremely vigilant. We have to continue to be committed to delivering on our target. And I think we are at this point in time in a very good position.
Okay, let's see. Let me go here. Got 56.
Chair Powell, tariffs are not yet showing up in inflation. Is this forcing you or your staff to actually rethink what the models say about how much the tariffs
Nearly 60.
ultimately reach through some of the final prices?
So thank you, Francine and Christine. Thank you to you and your colleagues.
Okay, so Powell's speaking right now. Powell's speaking. Jay Powell speaking.
I guess I would start by saying that the U.S. economy is in a pretty good position. Inflation has come down close to 2%. We're at 2.3 headline, 2.7 core.
Okay, Jay Powell speaking. Oh, there goes Apple. Okay, so good entry. Good entry, Vinny, so far. Apple looking good. Okay.
As we have expected and hoped that it would. We haven't seen effects much yet from tariffs, and we didn't expect to by now. We've always said that the timing, amount, and persistence of the inflation would be highly uncertain, and it certainly improved that. So we're watching. We expect to see over the summer some readings, higher readings, but we're prepared to learn that it can be higher or lower or later or sooner than we'd expected.
But Chair, would the Fed have cut more by now if it weren't for the tariffs?
So I do think that that's right. In effect, we went on hold when we saw the size of the tariffs, and essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs. We didn't overreact. In fact, we didn't react at all. We're simply taking some time. As long as the U.S. economy is in solid shape, we think the prudent thing to do is to wait and learn more and see what those effects might be. And again, they haven't really shown up. So for now we're waiting.
Governor Reed, I mean, South Korea's economy is, of course, highly reliant on trade. Putting aside the deals that each government could strike the Trump administration, what can central banks in your position do to shield economies from the impact of trade tariffs?
Actually, about the tariffs impact on inflation, our current inflation is well stabilized around 2%. And we believe tariff tends to be deflationary rather than inflationary for 3 reasons. One is Korea is not likely to use retaliatory tariff. Second, we import 22% of our import from China. And recently, in export price of China has been falling at 5% a year for several years, and we believe that it will continue to do so. And at this moment, our growth rate is 0.8%, which is well below our potential growth rate. So aggregate demand pressure is much lower. So our problem is not the inflation itself, but the gross impact of tariff.
So what does that mean you'll do going forward?
Yeah, actually, we have been in easing cycle, and we cut our interest rate 100 BP from last October, and we will continue to be in an easing cycle given our growth rate. But recently, financial stability risk has been rising, especially housing price in metropolitan area is increasing very fast. So we are keeping eye on this.
Okay, so
risk.
Apple,
Pace and the timing.
it's going to be a process over the next few days to confirm. Okay, so you want to scale in. I took 5 calls. I would normally take like 25 or whatever. So I'm going to scale in if I'm wrong on this entry. I got plenty of time. I think this is going to continue though. So we might get shaken early. Okay, you got a buy order block early right there. So you can put a stop underneath this, say 205, something like that. Maybe buy some shares. Just talking out loud. Watching Amazon now. Amazon. Okay, keep in mind what junk bonds are doing.
So I think the key judgment for us is, are we going to get second round effects from
Junk bonds. Okay, that did gap down. So taking a break. So it looks some of these traders obviously are risk averse. So if they think that it's time to take a little profits, we'll see a little gap down like we're having this morning. So that makes sense. 6,200 is resistance, right? 6,200. Okay. Okay. Let's see what 0 day. Okay, so this is without 0 day right now. Okay, so this right here without 0 day, add 0 day. And there's not much today. Not much going on so far. You can see this node up here at 62.35. There's a little positive gamma there. Positive. This is dealers, positive gamma. Okay, so people selling some calls up here. Dealers, positive gamma. Okay, that's going up a little bit. So 61.80 in the money. Okay, so it takes a few. The other reason I like to wait is because we don't really see what dealers are doing until the trend starts to develop. So that little purple line, I don't know if you can make it out. It's just started to get going. We're only a few minutes into the trading day. So once we start to see a trend, we can better determine which direction we want to trade. S&P 500 big cap, if at all, or SPY. Maybe you want to trade SPY. You want to keep an eye on that hedging flow. It's too early to tell exactly what's going on right now. We're just kind of moving sideways. So I would wait a few. Always getting direction from the markets, not assuming I know what's going to happen or taking more risk than I need to. Okay, Apple is a good example. Apple is breaking a downtrend. The 50-day, that's a major deal. 50-day is a major deal for me, especially when the 50-day is pointing down into the right. And then over the last 2 weeks, it starts to flatten out. What do you think happens after it flattens out? Well, it could roll back over, obviously, if the news on Apple's significantly worse. But if it starts to turn up, that's a very important signal, right? RSI is rising, volume increasing. So that's institutions. It's pretty obvious that there's some institutional activity right now. MACD is showing bulls are in control, histograms above 0, and stochastics rising. Why is stochastic rising on this chart? I mean, why do I have it included? Because it tells me, as this is trending for the last couple of weeks, expect a close in the upper half of the daily range. Now, the range per day hasn't been that great. Yesterday was pretty good, but look how we closed in the upper half of the daily range. So George Lane, the creator of stochastics, used to trade cotton futures back in the day when he created this indicator. He wanted a way to look at cotton futures and understand what's the probability that prices are going to trade and close in the upper half of that daily range for the cotton futures that he was trading. So he created this indicator, stochastic. Now there's several variants. I use 14.3, but the importance here is that when it's rising, you should look for close in the upper half of the daily range. All right, so we already started the day. Do we make a stab lower first? Do we make a stab lower first, or do we start going? Okay, we're already starting to expand this daily candle. This is for the new people. So we're already starting to expand today's candle. So let's say we run up and we produce 100% of ATR. ATR currently on Apple is $4.37. All right, so we know we have a $4 range. We're already up almost $3 of that range. Okay, we dipped a little bit into yesterday's wick. So we got another $1 or so that we could see out of Apple. Okay, $4.37. I'm already starting to think swing. So I'm buying July calls. Now, what I'll do with the July calls is perhaps roll them at some point, take profits, roll some, and then continue this trend as it continues to produce positive results. Okay, it's the only stock right now that looks like it wants to go. Amazon's starting to tick up. Amazon's starting to work too. Amazon. Okay, Tesla's down, of course. Tesla's down. Okay, below the 50-day. So this is a change in dynamic. Now, yesterday I told you that there's a possibility this is starting to base again, base on base pattern. So we were hoping that the 200-day was going to hold price.
Become appropriate later this year to begin to reduce rates again.
Okay, so here we are with Tesla. Okay, we're in the bottom of the base. You can see that the breakout level was tested 3-4 weeks ago. It came back down to the 50-day, bounced, hit the highs, came back down. So it looks like it's basing. Volume is tapering off, so that's a good sign on the drop. It's not on an elevated volume like it was here the first week of June. You see that big candle there? That big volume? That's not the case right now. So this might be a trick for people to sell. There goes Apple. There goes Apple. Okay, Apple going. So this was a good entry so far. Apple 209 and change. Thank you, Corey. All right, so Christine Lagarde is yapping right now. Is Jay Powell there? ECB forum. I don't know if Jay Powell's there. Wasn't paying attention. Okay, we're down 12 handles on the S&P, trying to regain. All right, the S&P is starting to go.
The attractiveness of euro-denominated assets, which is also an interesting phenomenon that we've observed lately.
But I mean, is it fair to say, I know, nothing is guaranteed, number one. We all
Okay, 6,200 resistance.
Is July just too soon to seriously consider a rate cut?
All right, UNH is starting to go. All right, UNH is up 1%. Okay, so UNH, like Apple, has been doing nothing. Okay, so UNH has been doing nothing, right? Finally, we're starting to see a move. Now, Scott, are you still in those calls that you bought? Scott was buying calls at $3. They expire Thursday. He bought them at $3. They're probably at what, $6 now, something like that, 5 or 6. So it looks like we're going to come out of the squeeze. Let's go. Let's do this, and let's go. Let's break it down to 2 bars. Okay. Squeeze, squeeze, squeeze. So there's a 4-hour chart, basically. Okay. Let's look at the hourly chart. 60-minute. Okay, 60-minute. And we'll go.
Sectors which affect our economy, aluminum, steel, and cars. We can easily say that it has an impact larger than close to 1%, now GDP growth.
Bank of Korea governor. So it must be okay. Look at UNH. UNH.
Supply chain. So the impact will be larger. So, but I hope that scenario won't come.
What is the most concern for the Bank of Korea? Is it a stalling South Korea exports, slow down in global trade, or a downturn?
Mondo.
Right, so, right, so the global economy slow down. And one thing I mentioned.
Got red list full of bull. Okay. Dude, you're like a comedian. You find the punchline and everything. Okay, bull. In sympathy to what? Weeble. Robin Hood. Yeah, triple digits looking good, Frano.
From China to elsewhere. So relatively speaking, you are well prepared. And second, still good thing is that we have some strong industries such as semiconductor, which benefit from the AI technology development. So I hope that we can manage it. But on the other hand, given the just we look at the sheer size of export dependence, we will be significantly affected.
Governor, do you think interest
Looking good for the long term, right?
Inflation and trade dynamics.
That's a subtle way into the R-star question, actually.
Okay, we got S&P starting to rally pretty hard now.
The whole discussion of the level of R-star, therefore, sort of where it's going to reach in the cycle. There is huge uncertainty around it. What I think is important, and what we spend our time looking at, is how restrictive is policy, both now and going forwards. Last after a huge amount of work on that front to judge the restrictiveness of policy.
Who is this? Bank of England? Okay, Bank of England. GDX, GDX, GDX. You know, it's interesting, Frano. You're talking about looking for triple digits. This is some of my positions. Okay, you can see Qualcomm's new, of course. Qualcomm, looking for that to continue higher. But some of these positions have done very well. So this is one of the accounts right here. It's up at 210,000. So not unusual to for longer term. This is one of my investment accounts. Longer term. Look at Caterpillar, for example. Look at Caterpillar. Entry was 128. There's only 75 shares. I haven't added to it. I haven't done anything with Caterpillar in a while. But the long term, you know, the markets are going to move higher. So having a core group of stocks that you can hold on to as part of your investment strategy, or having an index fund, having 10% of your money in something like SPMO, right? Which I happen to like right now, SPMO, the Momentum ETF. Okay, SPMO. I don't know if you saw this. Did it not change that? All right. So many of these stocks are continuing to rise. For example, Zscaler. You can see Zscaler right there was up. The entry was right around 100. It was only 50 shares, but holding on to it for the longer term. You know, part of your investment strategy should be, some of your money should be in an index, right? Yeah, I agree. Oh, sympathy to Robinhood. Oh, Webull. Yeah, that's what they do, right? Okay. So Robinhood. Webull just needs to do some of the things that Vlad has been doing over at Robinhood, making a lot of good changes. My son uses Robinhood. There goes Apple. Okay, Robinhood. Very nice. So Robinhood, I did take some profits off maybe a couple of weeks ago. So I missed some of this run up. But what I'm looking for now is the next base. All right. So if you're chasing Robinhood up here, you might be making a mistake. I have no idea. This could probably keep going till it gets to 100. But I'm thinking it gets to 100. It does something like that. Creates a base. Okay. So I'm looking for the next base to start doing something with Robinhood. Robinhood looking really good. SPMO. Okay, I have a core position in SPMO, also have a core position in SPXL. Okay, both of these are doing well. Also have SPHD. SPHD, this is a high dividend paying. It's not moving much, but it pays a lot of dividends. And I have the dividends that come out the end of each month. The last week of the month, SPHD pays a dividend. I just have that rolled back into shares. I've had this since 2014, SPHD. Okay, so it's been around for a while.
The range of estimates is very wide.
SPHD.
At least we think we can say the current rate is below neutral.
All right, Apple's still going. Apple looking good.
Jay said,
All right, so Tesla bouncing.
Jackson Hole conference, which was like, we are guided on stuff, but on the cloud sky.
President Lagarde, can you talk to us about scenario and why this is, because of the shocks and actually the changes that are going very fast, why scenarios make more sense as a template of the economy?
Oh, okay. So this is a topic that we have largely debated as part of the strategy assessment that we conducted in the last year. And I think, in fairness,
Webull coming out of a squeeze. Yeah, I could see working that. I could see working that Webull.
we work and we determine our monetary policy stance holds and is decisive in our consideration. But at the same time, our staff has, I wouldn't say forever, but as long as I know myself, has always conducted scenario analysis, sensitivity analysis in order to arrive at, the most solid baseline. It is probably the case that we will do more of it, more systematically, that we might publish more often than we have. We have published, I think, in the last few years, in four circumstances, we have published scenario analysis. The invasion of Ukraine was one, COVID was one, the oil crisis as well, and the tariff threats. So all those were
Okay, so Webull gets going.
hitting our screens. I think we might do more scenario analysis.
Yeah, that could look good. That could look good, Corey. Maybe some January calls. Some maybe some 50 deltas, something like that. That'd be a $15 strike. Apple's still looking good. Apple. Tesla doing a nice job of coming off the low. So it looks like a shakeout to me.
So for many years, we
Okay, so he is there. Okay, so it's the ECB forum, central banking forum.
very useful. I think many of my colleagues do too. You have just many different 6 or 7.
S&P looking for the higher low.
They're often the topic of discussion.
You're looking at Honeywell. Okay, Honeywell.
We have not taken a step.
NASDAQ 100 is still hanging out at about 50 stocks advancing, exactly 50 stocks advancing right now out of 100. 50 out of 100 on the NASDAQ 100. Number one is back again. Apple oven. Okay, Honeywell's breaking out. Okay, so the perfect area, usually the perfect area to buy calls is inside of the Bollinger Bands. Once it takes out the high just preceding the squeeze, 230. Once it takes that out, that's your long confirmation. That happened yesterday. So good trade there. Trade there, dollar. Looks really good. Now let's look at the weekly. Dollar pointing it out. All right, so this looks good. Basically a multi-year breakout. It looks like it's looming. Okay, multi-year breakout for Honeywell. Okay, so multi-year since 21, it really hasn't done much. It tried to get above it back in 24, came back down. Now it's trying to break out. Most likely will. Honeywell. Let's go see what Honeywell earnings are saying. Honeywell. Okay, let's look at Honeywell earnings. Okay, so I always wanted to see all 4 of these metrics green. So you do. Okay, Honeywell looks good. 11% earnings growth, almost 12. Revenue growth 7.9. Last time around, it beat the top expectation dollar. So this looks really good.
Very much in the same spirit as colleagues.
conglomerate,
We introduced two scenarios in the
aerospace,
rounds and the May report.
control and sensing, security for buildings, industry, turbochargers, automotive products, and chemicals. Honeywell, nice conglomerate.
If I'm wrong in my judgments, how wrong am I going to be?
Okay,
Do I think I'm going to be? And
looks
what would be
good.
the consequences of that? And what would we then have to do to deal with them? And is it manageable? And that was helpful. And I think the question
What's free cash flow? Free cash flow.
communication. I mean, this is the big step. It is challenging. I tell you what, because I say this quite a lot. We make a lot of conditional statements. You may have detected this in all the many interviews you do. And I'm not making a personal comment now, Francine, but a lot of those conditional comments get immediately translated as unconditional comments. It's sort of
Okay, Honeywell looks good. I like it. I like it a lot for a swing.
And so the reason I say this is that if we, and that's about
July 24th earnings. Okay, cool.
That's a message to us that you're going to have to do this very carefully.
Snap is going. Okay, so these small caps were the most heavily shorted they've been in years, right? IWM, the most shorted in years. That was pointed out on Bloomberg, I believe, over the weekend. Excuse me, I think I heard that on Bloomberg over the weekend. No, you know what it was? It was on Yahoo, because Yahoo has a weekend broadcast. They just repeat what they talked about during the week. They're pretty good. They have some good segments on Yahoo Finance in the morning. They have a channel. Just check your local channels. LG. No, I have a Samsung TV. One of its channels is Yahoo. Anyway, here goes Apple. Apple's on the move. There goes Apple. Good entry. Good entry. Buy order blocks looking good. Looking good. Okay, everybody's hating on Apple. Okay, Apple. Very nice price action on Apple. Okay, everybody hating on Apple, which is a good thing. U.S. judge ruled that Apple must face an antitrust lawsuit from the Department of Justice, alleging it unlawfully dominates this. Huh? It doesn't dominate the market. Samsung is a huge rival. Stupid judge. Stupid judge. I hope the stupid judge is listening to the broadcast. Class action against misleading about AI features. Okay, so given all of this, what is price action telling you? In the face of all of this news, institutions have been buying, and we got a nice squeeze breakout. So far, Apple looking really good. All right. Hope everyone's having a good morning. It is Tuesday, first trading day of July. July tends to be a very strong month for tech. Okay. Tech tends to be a very strong month of July.
Well, I'd say two things. First of all,
Sentiment-wise, July tends to be a very strong month.
it's important to bear in mind what the definition of a reserve currency is and how it's evolved over many years. So I like generally, I don't see the
Okay, here's the industrials. Look at July. Look at July. The industrials, seasonality. Industrials, July. Okay.
As much as it is about sort of pure exchange rates, I think we're along that sort of that change happening. The second thing was going back to something Christine was saying earlier. I mean, when we look at financial conditions, which we do, of course, but I do think particularly, I mean, I always.
Okay, let's look at SPY, seasonality.
The reason I say that is because we've seen
SPY.
correlations.
Let's do S&P 500 SPY.
So you look at exchange rates, you look at equity risk premium, for instance.
Okay.
Those correlations are not the ones that, we
Okay. IWM small caps.
time, so you have to look at it much more carefully.
Not as much.
Stories to my mind about each
Um,
component of that. So when I look at
Qs. Whoops.
I look at it very much on that basis.
Qs.
I don't think it's sensible to pack it all up as we normally would and say,
July.
it's all behaving.
June, July. Look pretty good.
Correlations are not.
Specifically SMH Tech.
I mean, there's also many colleagues at
Okay.
central banks, I guess, around the world
And
that
XSW.
alternative to the dollar.
Okay. Software tends to be pretty strong during June and July. This is seasonality I'm looking at.
Areas like
Okay.
for China would do
XLK.
improving the efficiency and convenience of their currencies, like the kind of things we were discussing this morning, capital markets integration, and these things will change the degree to which the role of the dollar may decline in the future.
I'm gonna look at it.
I think, I don't know if 2025 will be a pivotal year. I would tend to think that, yes, it might very well be. But for a major change to occur will take a lot of time and will require a lot of effort. And I completely agree with the points made by Andrew about the dichotomy that we're seeing at the moment. And that might be an indication of the fact that
Okay. Apple looking pretty good.
this is what investors are
Apple's
saying.
at the high.
They ask questions.
Okay. Tesla, nice bounce. So if you bought Tesla at the low of the day, you're probably happy there.
A general lack of confidence that will be further fueled by more uncertainty, more
Bitcoin is ripping. Bitcoin.
unknown on several fronts, not just monetary policy, not just even the economics, but beyond that, in terms of security at large, for instance, I think remains to be seen. It's not going to happen just like that overnight. It never did historically. There's no reason it should now, but there is clearly something that has been broken, and whether it is fixable or whether it is going to continue to be broken, I think the jury is out on that front.
And Chair Powell, how do you think we'll look back on 2025?
So, here's me, how we're gonna look back on 2025.
Yeah, how will historians look back on this year? Is it pivotal?
It's clearly an important year. There's a lot going on, with trade. And I think I'm hopeful that we'll look back on it as a year where we successfully challenged some significant economic changes. And, our job is to make sure that that is the case.
You get attacked by the president a lot on a personal basis. Does it make your job harder?
I'm very focused on just doing my job. I mean, there are things that matter are using our tools to achieve the goals that Congress has given us: maximum employment, price stability, financial stability, and that's what we focus on 100%.
Madame Lagarde, if you were in the same position as Chair Powell, would you do anything differently?
I think I speak for myself, but I speak for all colleagues on the panel. I think we would do exactly the same thing as our colleague Jay Powell does. The same thing. Yeah. Right?
Yes.
Governor, is the rest of the world decoupling from America but pulling tighter elsewhere? How do you see fragmentation happening?
Okay. Apple looking good.
Fragmentation, were it to happen, in my view, is bad for activity in the world economy. No question about that. And if we reduce the openness of the world economy, that will be bad for activity in the world economy. Now, I temper that in one respect, because obviously we have learned a lot about the robustness of supply chains over the last 5 years.
Okay. Apple looking good. Flagging at the moment.
There will be adjustments to that. But if we see a breakdown of the openness of the world economy sort of beyond that sort of
Apple.
resilience that we do see as needed, then that's bad for activity, it's bad for the world economy, and that'll be very exciting.
Thank you for the update, Money.
Yeah, we need
Thank you
to-
for the update.
I've said a number of times that there are reasons why this is happening, It's not like
Okay, we're above the 207.50 call wall. 210 is next.
What I think is very important is that we get back to a governance of the world economy where we can address these issues in the appropriate multilateral fora and get to the question of what lies behind these issues, what's at the root of these issues, what exactly are the issues, and what do we do about them? And I can't emphasize this enough, but I think it's an obligation for all of us who are obviously very heavily involved in the governance of the world economy. We've all got very big responsibilities. Just saying that is our duty to get back into the process of saying what's caused this and what do we do about it and what do we deduce are the underlying issues and how do we address them? Because otherwise, say fragmenting the world economy is a bad outcome.
But what kind of fragmentation would it be? Is it again, are you fearful that the world is splintering irrevocably, or is there a pool that's just moving?
Well, I think if it was a breakdown of trade in the world economy, obviously exactly how that would manifest itself would remain to be seen. But it would be running against a long period now where we've been building the resilience of trade in the world economy. We've been building openness. But as I said, I want to sort of temper that by saying, look, there are issues. I don't think we should say there are no issues. This is all made up. There are issues, and we need to address what they are and work them out. But we need to do that in the context of a commitment to a robust open world economy.
Governor, as the only governor here representing a non-reserve currency country, how concerned are you about fragmentation of the global financial system and the risk at the end of the day that the US may be less willing to provide dollar liquidity in a future financial shock?
I think I mentioned that we are quite vulnerable to the fragmentation.
Apple looking good.
In reality, as a small country, it's a pity that we can raise our voice, but in reality, we cannot change the course. So we have to probably take it as an environment and to adapt to it. What matters is we talk about economic fragmentation. For a country like us, the most serious issue is combined with security. And for that issue, let me stop here because I don't want to go further. But as for the dollar liquidity support, as demonstrated during the global financial crisis and pandemic period, the standing dollar facility swap lines, financial centers, and the 9 ad hoc temporary swap lines for the 9 non-reserve currencies. That was crucial.
Okay, there goes Apple. Nice move on Apple. Got that one early this morning, added to position. There goes Reddit. Reddit breaking out there, Frano. All right, so I know you probably already said it, Reddit.
One other problem for a country like us is we know that the U.S. provide ad hoc supplies as long as there is a global dollar shortage. But issues that happen if there is our own and there's no global dollar shortage. Our understanding is that Fed cannot extend the swap lines in that case, and we have to self-defense ourselves. That is why I think having adequate, sufficient level of reserves is very important. And recently, thanks to the introduction of the FEMA repo facility by the Fed, actually these reserves become much more effective tool to defend ourselves.
Your power and fragmentation.
Well, I guess I'll just agree with what Chang Young said, which is or point out that nothing has changed relative to our swap line. We still have the same authorities, and we're still prepared to use them in situations where it's within our legal authorities and where we think it makes sense. So that is, we're aware that that's a big contribution that we can and do and will continue to make to global financial stability.
Given you how much do you think about fragmentation and the impact it's going to have on Japan?
See, on the trade side, I think a lot about what will happen to Asia, even Asia excluding China. So this will depend on the relative tariff rates imposed on the region relative to.
Okay, looking good. Apple's going.
Also, there's new countries like India.
Qualcomm stock's looking good. Excuse me. All right, trading at all-time highs, lest we forget. There goes the S&P. S&P breaking out. Looking good. Ba-da-ba-ba-ba-da-ba. Uh,
It would be important to keep trying multi approach to things like swap lines. We have 10
yeah, UNH looking good. Yes, sir.
You've often spoken about the role that Europe could take in a fragmented world. How do you see that developing and in what kind of time frame?
Well, I think Europe has witnessed in the last 4 years, in particular, well, since 2022 in particular, the last 3 years, major challenges to its way of doing business, to the assumptions that it made about security.
Okay, Amazon going. Amazon.
Destination, whether you look at what the horrible Russian invasion of Ukraine has precipitated.
There goes Amazon. Okay, so it looks like traders are nibbling on these dips. Okay, so what's great about dips? I keep saying this. What's great about a dip? All right, so let's take a look at Google. Let's say you go long right here. You know you have supply overhead, but your stop is like right there. Conversely, if you bought over here yesterday, you bought the high of the day, you chased, you got all crazy with FOMO, you're sitting on a losing position. Now you have to sit here and wait until this gets back up there. And hopefully it happens within a couple of days if you have options. Otherwise, your theta and deltas are getting slammed, your implied volatility. So buying on dips, I cannot say it enough. Your stop is right below the current low. So you don't know for sure if Google's going to keep going, but at least you got to stop right below. So you can take the setup. I don't personally like Google right here because it has supply right overhead and on the daily, but it's just an example of what's starting to bounce. All right. So Apple, same thing. Apple, okay, it started to dip yesterday. We had a buy order block this morning. That's helped out a lot. Buy order blocks in the morning, which is what I love to see. A buy order block, lots of volume. Stock starts trending. It's coming out of a base on the daily. Everybody hates it. Apple's probably going to get motoring higher very quickly. Tesla going too. Tesla. Google turning. Okay, let's go see what junk bonds are doing. Junk bonds. Junk bonds. Okay. So we want to keep an eye on junk bonds. This could be an early warning, okay? What are you talking about, Vinny? Early warning. Okay, so I've talked about this ad nauseum, at least recently anyway. So if you look at the S&P 500, right, what do you see? If you look at the weekly time frame. Okay, if you go back to April 7th, the most we see is 2 weeks up and then a pause. Then 1 week and a pause. 2 weeks up, 2 weeks pause. So we're on our second week. We're above 6,200. Options are getting very expensive. So you don't want to be buying calls straight out. Maybe you buy verticals, but some calls are starting to get very expensive. So rather than chasing on a second week, I'm starting to look at potential trades for selling premium, call premium overhead, because we're expecting that we're going to see a little bit of retracement. Haven't done anything yet, though. Haven't done anything yet. So S&P, let's look at the Qs. Same thing, Qs. Looking at the weekly time frame. Now we did base. If we erase the February to June period, we would just have a straight trend. All right, the trend would be straight up. So if you erase the problem that we had, we were trending, right? We were trending. If we erase all of this, we were just trending. We were basically in a channel. So we're getting back into the channel, and we could continue to trend like we did over here. Okay, so in 23, we started trending. We trended here too, and had multiple weeks of upside, right? All of these moves. So we're watching for these trends. When's the next base? I don't know, but we just came out of a base, so this is looking really good. And we know tech is leading us, so we want to pay attention to the New York FANG components. Okay, so we have an inside day. Yesterday, it looked like this was going to be a gravestone doji, and at the end of the day, we managed to produce a very bullish-looking candle. So we have an inside day right now. What's Palantir doing? Palantir, PLTR, Palantir. Okay, remember what we said yesterday. The direction looks like it's going to be down. So I'm going to have to take the loss on Palantir if this doesn't recoup. So when you get a doji inside day, you take the direction of the next day, Tuesday. So that's today. This starts to move lower to the 50-day. We're probably going to see a test of the 50-day. Maybe we bounce there. I would think we bounce there, but I'm not going to hold on to it hoping that it will. I'll just take the position off because other stocks are making up for it right now. Amazon, Apple, all pushing higher. Okay, NVIDIA and Netflix are taking a break. NVIDIA and Netflix. NVIDIA's lower. Okay, so looks like we topped out a little bit short term on NVIDIA. Okay. Okay, we can see this area up here is starting to build. If you were paying attention, this didn't really. If you can see, the 60 minutes ago we had 46 million positive gamma. 60 minutes ago, positive gamma was 61 million. It's now 87 million. Okay, as of 10 minutes ago. So dealers are long. Positive gamma. You got some negative gamma up there at 62.40. That's building too. Looks like there's some selling, some calls overhead. Selling some premium overhead. Nice trend. Okay, watch the hedging flows. Hedging flows. We want to see another higher high. That purple line. Okay, right now we're dipping a little bit, a little profit taking. Apple.
Essentially, that's supposed to try to iron out some of the details and the language differences between the two chambers in a bid to try to smooth passage so that this doesn't get stalled. Since the White House has made clear they still want to see this on President Trump's desk.
We know that before it can get to the House, we know that Nick Lota, for example, is against the changes in SALT, although he is willing to accept some kind of cap, which I guess is pretty interesting in itself.
All right.
EV mandate, then we accept.
Joining us now, DVX Ventures co-founder and former Tesla executive, Kareem Bousta. Kareem, good to have you. I guess first question is, in terms of an impact on
God,
Tesla
all of that
from the
they want to talk
ongoing
about
and
is.
now once again
Can we
sort of
talk about
heated up
stock? A feud between Trump. All right, jobs data. ISM manufacturing new orders 46.4. Previous was 47. Actual 52.9. Okay, so a smidgen higher manufacturing. All right, let's go take a look at manufacturing real quick. All right, let's look at manufacturing. Why does all of this matter? Because the more positive things that we have working, the better. Okay, let's see.
Specifically, we're beginning to pick up.
Okay, S&P is still climbing a bit.
Trade sensitive areas of the
Okay, industrial production.
Inside the ISM this morning, you saw prices.
Okay, here's industrial production.
continue to rise. So
Okay,
right
it's
now, what
flattening
my
out, but
sense is there's not a lot
looks
of
good.
hirings going on,
ISM,
but hiring slow. You know, we're at 4.2%.
industrial production,
I think it's going to move up to 4.3.
making higher highs and higher lows. Okay, momentum is turning. Industrial production is looking good.
We know a lot less about what people
So the whole idea behind the POTUS strategy is growth, 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 growth. So if we see growth or expect growth, we would expect this indicator to become more bullish. All right, so we want to see this make a higher low and a higher high and start trending like it did over here on the left back in 2010 through 2017. Okay, again 2017 into 2019. We want to see that growth continue. So we want to see a higher high, and the momentum is suggesting it's shifting and it will. So how can we check that? Well, we can check with copper. Copper should be rising, right? Copper is a leading economic indicator. It is turning up, copper. So we're watching copper to take out these highs. Okay, China stimulating their economy. China, let's look at HSI. I'm just looking for money flow right now. Money flow. Okay, higher highs, higher lows. What's Alibaba doing, by the way? Alibaba. Okay, still sitting there on the 50-day. This kind of reminds me of Apple. Stuck to the 50-day, can't break out. Squeeze, looking for the breakout. There's Apple. Apple's finally breaking out, though. Apple's finally breaking out. Okay, coming back in a little bit right now. Apple. Okay, NVIDIA, Netflix, Meta, and Snowflake, and Broadcom. There's 5 of those that are already lower, looking pretty expensive. Calls looking expensive. Meta looks like an off day for Meta. I don't know that I buy dips per se at the moment. We'll see how it turns out later in the day. ARBK, you're looking at? Okay, that's reversed. Penny stock.
this year right now, unless the economy cracks. Then we'll get 3. Our colleagues over at Goldman yesterday said they expect September, October, December. It was an interesting call. I always pay close attention to what John and his group forecast. They think this economy is going to slow a little bit more than I do at this point.
Right.
So I understand the rationale. I need to see that labor market crack before I'm confident that we're going to see the Fed move more aggressively this year.
I had a guest on yesterday who was here at target of 66.
Berkshire Hathaway, BRKB. That won't stay down there for long. BRKB is sitting on the 200-day. Looks good.
We're not really seeing that sort of advantage in the big beautiful bill, and so for that reason, he brought it down to 6,600. He didn't say slowing economy or facing costs or things like that. He said it's just a less favorable tax environment for corporations.
Yeah, basing of the 200 days, so we need to see this turn back up. Berkshire Hathaway. Okay, let's go look at the S&P. Are doing a lot of money flow analysis at the moment. Haven't taken a lot of trades except for Apple. Okay, so this looks really good. Look at the S&P equal weight.
But nevertheless, it's July 1st. It's our silly season here on Wall Street. Volumes thin. People are going on vacation.
And July is a good month. We haven't had a negative July since 2014.
And we're not going to this July either, right? It doesn't look that way. Right.
Thank you. Joe Briswell, Safaris. Thank you so much. Good to see you. All right, folks, coming up, Chartmaster. We'll take a look at some of the big names you know. News, Hasbro, Sweet Green, and Zscaler. We'll be right back.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
To investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way is the best way. Is it?
This suggests that we could see more upside.
Exactly. I can invest and trade on my own. Yes, and I let them manage.
Defensive, CLX.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Okay, so number of stocks above the 20-day continue to surge. Number of stocks above the 50-day. Price action breaking out. Bollinger Band starting to expand.
We're looking at Hasbro with an upgrade today. Some of the news here.
Yeah, some positive news for Hasbro, which of course does command a large portion of the nation's toys. So always a positive stock to talk about for that reason. Goldman today with an upgrade as well to buy from neutral. Price target also raised to $85 a share, up from 66. Highlighting that in their opinion, the company is well positioned to exceed consensus expectations in 2026 and beyond across its revenue, adjusted EBITDA, free cash flow, driven by this robust demand for Magic the Gathering's new Universes Beyond set. So plus they highlight execution against the company's new self-published digital gaming strategy, as well as better than feared performance from the toy business as tariff relief, market share growth, and pricing levers insulate their overall segment's profitability. Also does benefit from a strong portfolio of overall IP and one of the most flexible, in their opinion, as well as strongest supply chains throughout the entire toy industry. Additionally, Hasbro did announce earlier today that they've signed now a multi-year casino licensing partnership with Galaxy Gaming, that as well as Aristocrat Technologies, Evolution, and Bally's. This will help them develop and distribute various games based on.
Okay, we're above 320.
Under the deal, Galaxy Gaming will develop casino games that feature Monopoly as well as Yahtzee and Battleship, while Aristocrat will handle these land-based slot machines. Financial terms of the deal were not disclosed, but I did enjoy the fact that of all of the world of game, that I at least am familiar with Monopoly and Yahtzee. The rest of these various titles I am not as familiar with, but those are tried and true. I mean, those games have been around for, at this point, like 100 years. So at least sticking to some of the classics here, but Hasbro, yeah, with some favorability, I mean, from the street, but also 37% now on the year.
Okay, we got UNH with a breakout. All right, UNH above 320.
Umbrella, but let's continue to take a look here. This stock has done incredibly well. It's up from those April lows, what, about 50%? Pretty impressive, because a lot of folks.
All right, getting above 320.
May be forgotten this year, especially with a lot of tariffs, but the stock doesn't say that. Let's look at the chart. Rick Ducat, your thoughts.
All right, starting to add shares. UNH, we talked about.
Which were the 52-week lows at 49 right here. From there, we have soared upward. We are up about 56%, almost 57%.
Yeah, that could be too. Yeah, that's a good point, Corey. Yeah.
Handily clearing this resistance area near 73. If we were to backtrack over here,
Portfolio managers.
Price topped out several times during a period of range-bound activity. After we had our earnings announcement that turned things around, gap up, sideways consolidation, another gap.
They have
up,
5 months. Portfolio managers have 5 months.
Then we had the a bull pennant type of shape there, and then we have taken out those old highs once more. So now 76.83, those are the intraday highs to watch out for. RSI invalidating a longer term downtrend there with our red line, pushing back into the overbought area once more, typically regarded as a sign of strength in a trending market. Notice as well, heavy volume recently here. A volume spike, meaning volume at least 50% above the 50-day moving average of volume, which suggests strong conviction on the part of traders as we digest this move to the upside. If we were to look at our other studies, standard deviation channels and volume profile, standard deviation channels can be helpful when a stock is making a runaway upside move like this. We take our blue linear regression line, our line of best fit, which is an idea of fair value. From there, 1, 2, and 3 standard deviations to the upside can give us some potential guidelines to follow. The +3 channel for resistance, 78.
Okay, looked good. Apple flagging. Okay, think about all of these stocks that are down here near the lows that have underperformed, like UNH. Questions in the room about UNH. It's been been ready to come out of a base for a while now. This could still get rejected. The 50 days right overhead, but it's starting to change trend. Volume is picking up. MACD stochastics rising along with RSI. So it looks like institutions have accumulated enough shares that they're ready to let it go. Okay. Makes a lot of sense to me.
Cybersecurity platform that protects internet usage, data centers, and cloud environments, as well as apps. Its newest platform, named Zscaler Zero Trust Exchange, does securely connect these individual users, devices, and applications with operations now in more than 160 global data centers in 185 countries. So has been one that has seen, consistent overall improvement in its price, but the stock is back near a level that hadn't been seen at least since January of 2022. Obviously, some pressure today here, but recent levels have been pretty strong, all things considered. Now today with Citizens JMP, like you mentioned, of course, with a price target to 355 from 310 and an outperform rating. They said they came away really from this.
Okay, Broadcom selling off, so looks like these expensive stocks are getting sold.
Demonstrated path of execution while operating
Apple pulling back, coming out of the base. Apple.
To build on its scale, profitability, and just overall customer relations. So we know that the cybersecurity industry has been one of definite note and somewhat resiliency in the overall tech landscape as AI has been choppy.
Let's see what
cybersecurity has been more of our steady
C+ accumulation.
Of the tech space, but so many of these names also have seen some volatility.
Earnings at the end of the month, right? July 29th. Earnings.
Right now, commanding increased cybersecurity, but all that to be said, there's a lot of names competing for these massive contracts as well as
UNH
accounts, which
ripping now.
In that space. So I do believe Palo Alto Networks is slightly the industry leader, but Zscaler at least continuing to grow that market share.
Okay. Look, as you noted, the market share gains, the price target looking good, the stock chart. Rick, you tell me, it looks pretty good.
Well, a very stark difference from much of the previous portion of the year here, where price was very range-bound, a very pronounced sideways drift that turned around like our last chart here with those April lows. We can see that once price did break through this repeated ceiling that we established above 200, like 210 or so, from there, we have traveled upward pretty quickly. We are up about almost a doubling from the those old lows there. So now we can see, though, that perhaps maybe there's some signs that this rally is slowing down here. For one, price has yet to take out those old highs near about 317, 318 or so. We also had a rising wedge type shape here in the shorter term. Typically,
All right. Yep.
Over the previous year.
Macau talking. Okay, we're talking
$6 billion
China
in
now.
gambling
Okay,
revenue.
that's cool.
And look, it's showing in its share price today. You've got Wynn surging up, it looks like 8%. You've got Las Vegas Sands up 8%.
Okay, the casinos.
11%. And MGM Resorts, which has the least exposure in terms of its overall revenue for the company, up 6% now. Okay, over the last 3 months, even bigger gains. We're now seeing 52%. Stifel analysts point out if the gaming revenue jump is a result of promotional spending, though, investors just really won't care. If the companies, though, reported their earnings,
Okay, let's look at Wynn Resorts. They're talking Wynn. We looked at Wynn a couple of weeks ago. Okay, finally breaking out Wynn. Look at the weekly trend. Las Vegas Sands, Elvis. Okay, how he's looking. Elvis. Okay, Elvis just coming out of the squeeze.
There really can be a divergence. For instance, in Macau, it is fueled by serious.
Okay, above the 200-day.
People who are going for the gambling. However, they're really working to diversify that economy. So the shows matter. The NBA is going to do some exhibition games there later this year. They're trying to draw people in for different reasons. The question is, are those people going to spend? Is it Taylor Swift style spending without the gambling? And that's to be seen. Without the Taylor. Right.
It's got less of that full service of entertainment, doesn't it? I have to say, one of the things about living in New York that I love, Vegas was closer. It was doable.
Vegas is so much more fun than Macau.
Vegas is fantastic.
More alcohol too.
Speak for yourself.
Thank you, Contessa. Sure. Does everywhere. Healthcare just one of 3 sectors in the red since January, despite all the hype.
Okay, let's look at MGM. Okay, breaking out MGM. Caesars. Okay, these all look good. Caesars.
Joining the chorus of Wall Street analysts.
Okay, what about Boyd Gaming, BYD? Boyd Gaming, BYD. Ooh, yeah, looking good. United Health. Okay. UNH looking good. UNH. UNH looking good. 22.
A number of
retailers have had solid bounces off the tariff tantrum lows back in April, but a well-known consumer play is still trying to find its footing. We're going to talk to an options strategist who sees upside for investors in this beaten-up name. Tune into our Market Navigator segment later on today on Power Lunch for how to score a possible bullseye on that trend.
Okay, Nvidia down, and Netflix down, Tesla pulling back, Apple trying to hold on to its gains. Apple. Okay, UNH continues to please. UNH, very nice. Ooh. All of the casinos look good. Casinos looking really good. Okay. Casinos looking good.
Welcome back. Take a look at AstraZeneca jumping this hour after a report said the company CEO may want to move the company's listing and potentially its domicile to the United States from the UK, Wilfred.
Oh, it's fighting words. Well, this is a problem for the government over there. It's been a steady flow.
AstraZeneca wants to move to the States.
The multiple's just so much better. The UK market's on something like 13 times PE overall, whereas the S&P's on high teens at the moment overall.
Why? Do we blame Brexit on this kind of thing?
Historically, there's always been some discount. It's been more pronounced over the last decade. Part of it's the mix of companies, oil, materials instead of tech, and growth companies and things like that. But yeah, there's been a steady problem with that. Lack of pro-business sentiment, higher tax take.
They moved their listing, but they wouldn't move their incorporation. I mean, they'd still have to pay.
I'm going to take a 2-minute break. I'll be right back.
Perhaps a lot more than, or be able to, or you change the domicile of your corporation.
It's
anywhere near what they do.
It's a prime example for all of this, because do they really need to be in the UK? That historically an amalgamation of different drug companies all around the world, and why continue to be headquartered there? If as well, by the way, the government isn't being supported enough in the UK, and obviously you start to get threatened by the US administration on drug sales. By the way, go back to the free trade deal. The free trade deal in inverted commas that the UK and the US had. It was a sort of agreement to keep talking about a number of areas, and one of the big areas was drugs, which they wanted to get done by July the 9th, and that hadn't been quite done yet. So that's a political area to watch, and this is not helpful for the UK government in the short term if they're going to lose the listing either way.
Yeah, but potentially good news for the U.S. and the administration. And other healthcare news, some big changes are underway in the weight loss space. Starting today, CVS Health will prioritize Novo Nordisk
Boy Gaming.
for GLP-1 drug and dropping Zepbound.
Looking good. Las Vegas Sands. Maybe do something on Las Vegas Sands. It's up on the day. So I'd be looking for a BNC pivot if you like it. Maybe put in a limit order down below. Okay.
Giving so much of it to Eli Lilly. I think 2/3 or more of all patient starts on these obesity drugs are going to Lilly. It's going to Zepbound. So I think it's just a market share game at this point.
How does Novo do that? How do they convince a CVS to switch?
I think a lot of it's lower pricing, coming up with alternative financing options and making the drugs cheaper.
What is Penn Gaming looking like? Penn?
That's his network.
Penn.
Correctly, with this particular
Penn Gaming.
We're talking about 100,000, maybe 200,000 patients that are on some sort of CVS Caremark plan. I know some employers have already started to change it or gave their employees some indication that these changes were coming. Others have not. So I don't really think it's as widespread of a situation as we think, but still it's going to have some impact. And some of the script data, some of the prescription data has already been coming in a little bit stronger for Novo recently.
How easy is it, Jared, for patients to switch between the various different weight loss drugs? There's obviously quite a few of them now. Are we going to get to a stage where there's a lot of price competition between them, or are customers likely to be sticky to the one they started on?
It's really interesting, Wolf. I think part of it is tolerability, whether patients feel like they are, once they're taking these drugs, whether they're good with them and want to proceed. Most of the switching, from what I've been told or, have heard over the past year, is that once a patient decides to take one of the drugs and is pleased with it, as far as the progress with weight loss, and doesn't really have any tolerability issues, they're likely not going to switch. And that's one of the reasons why Lilly has gained so much market share, is because the drug is more powerful from an obesity standpoint, from a weight loss standpoint, and then from a tolerability standpoint for the most part. So it's been less to do with pricing so far, more to just do with the quality of the drugs. But again, back to Sarah's original questions, part of what Novo is doing is trying to get market share back vis-a-vis pricing and other strategies here.
So does it work? Do you like the stock?
I think it's working a little bit. We'll have to see. I mean, it's still a pretty small piece of the population. Novo is behind the 8 ball when it comes to newer modalities. They're behind Lilly with respect to an oral. That's really the space to watch, I think, as we go into the second half here and into early 2026, which is to say, what is this oral market going to start looking like when Eli Lilly is approved about a year from now? They're going to be the first one with an oral pill. Now, the efficacy, the weight loss is not going to be as meaningful, but it would be hard to find a patient out there that didn't feel like at least trying this, that they were going to get all of the other health benefits with it.
Okay, Jared, thank you for talking us through this interesting move from CVS switching preferred.
Sure thing.
Obesity. Jared Holtz.
Thank you.
Financials are hovering at record highs, driven by a lot of significant gains for the big banks. We're going to talk about that next, and the catalyst that's coming after today's close.
Okay, all of these looking good. Looking good. All right. Just scanning through stocks right now. We got the Nvidia and Netflix continue to fade. I'm looking for dip buyers. Nothing yet. Apple pulling back in. Nice little rip if you took profits there. Stop. Jesus, you're being aggravating. You keep aggravating me? Cat. All right. All right. Hope everyone's having a good day. Looking good. When resorts. When resorts. Looking good. I'm considering some Las Vegas Sands. Penn, all of these are doing well. Okay. So AstraZeneca thinking about moving to the U.S.
ADP report tomorrow. It's not going to give us the exact number of what we're going to see on Thursday when it comes to non-farm payrolls, but we want to be able to look at the trend, and is the trend going in the right direction, or are we seeing stabilization? And then obviously on Thursday, we'll have the jobs report, which is obviously going to be the major focus for the market. What we have done for the jobs report, I just have to remind people, a lot of analysts and street expectations, Nicole, have been actually a lot lower than what we have seen reported for the labor market number that we will see on Thursday. Are we setting up for the same type of
Okay, Apple's starting to bounce. S&P starting to bounce.
I think that's the big question mark. And we obviously have the comments coming from not only Chairman Powell, but also from other central bank leaders around the world talking about the different dynamics of U.S. policy as well as global trade. So this is actually a very interesting environment. Volatility inched up just a little bit, but you are seeing value plays really outperform some of the higher beta trades that we've seen perform pretty well over the last couple of weeks.
Yeah, and I liked your stuff earlier. I mean, here it says palladium prices extend the rally on the China demand and supply worries. And that was a great chart you had earlier showing palladium, copper, and all the other metals higher than the S&P 500 this year. Thank you both so much as we kick off the second half of 2025. Kevin Brett,
Nicole.
Green, good to see you. The Dow is up 266 points. The S&P is down 14 points. I'm Nicole Petalidi. Thanks for being with me here live from the New York Stock Exchange on Schwab Network every single day. This is Morning Trade Live. Thanks for being with me. Trading 360 next.
All right, looking for a bounce, S&P. Always looking for dips. You got a dip here in Apple. Okay, we'll see if this can motor a bit higher. It's just coming out of a squeeze, so it's going to be a multi-day thing most likely. Make sure you have enough time if you're trading options. United Health at the highs. United Health. Let me see. I do want to add shares, but I need to see a bounce. I need to see a bounce in United Health.
Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Okay, United Health. Yeah, that looks good. Okay, looking for dips to get bought. Nvidia, Netflix, etc. They're still pretty expensive, but looking for bounces. United Health pulling back in now. United Health.
Branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Mm-hmm.
Whether you're an experienced investor or just getting started, Charles Schwab.
Okay, looking for a bounce. We're not getting a bounce yet. Let's go see what Trace is saying. Okay, so we had a pretty sharp drop in hedging flows. We need to see this turn back up in order to go long the S&P. Okay, you need to see that hedging flow turn up, that purple line.
It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Okay, the volatility we were looking for yesterday is actually showing up today. Pretty interesting. The JP Morgan collar, the short strike is up there at 6,500.
From the floor of the New York Stock Exchange. We got mixed markets at this hour. Let's start out with our roadmap. Coming up on today's show, the big three looks at bullish plays on Oracle, Nvidia, and Amazon. Our disruptor today is Joe Aviation.
6505 is the upper strike on that JP Morgan collar. So they sell the calls overhead to finance buying the downside protection. They take a put vertical 5870 is below 5870, and then they buy the 4985 to make that vertical. They do it all in one trade usually. Sell the calls, then turn around and buy the vertical. It's great downside protection. Okay, Netflix and Nvidia still pulling back. They'll likely bounce like Apple is bouncing right now. Apple's bouncing. Apple's coming out of a squeeze. Apple's probably going to outperform in the short term, I would think, for the next few days, maybe next couple of weeks. People will start to report on the fact that Apple's not continuing lower. There goes Apple.
Crude oil is West Texas Intermediate, a little bit higher by just shy of 0.5%. Still in its range of just around $65 a barrel. Bitcoin taking a step back to start off the month, off by a little bit more, just shy of a 3% there. We're looking at one of the top moving stocks in today's market. I'm joined by Alex Coffey, co-host of Next Gen. All right, Alex, taking a look at Tesla. Tesla's bumpy right now, under some pressure. You've got, it seems like the first friends are fighting.
All right, let's look at some of these stocks that were in the okay, we're starting to see a turn. Okay, hedging flow is starting to turn.
Through social media and media commentary between the president and Elon Musk. Elon Musk, vocal critic of the legislation working its way
Hedging flows are starting to turn up. Watch for the break higher. S&P.
As a result, you're seeing Tesla shares under pressure. There's also a story from Reuters talking about sales falling in Sweden, Denmark, but gaining in Norway. So all in all, some challenges in Scandinavia. When you're looking at
okay, watching the hedging flows here. So the high was 62.10, I guess. That's 0 day. Let's see what the okay, same for that. Gamma. Let's look at delta pressure. Okay, we got a lot of negative gamma underneath us. All right, we're starting to see a turn in S&P.
And elsewhere have been painting a weakening picture. It's just whether or not robo-taxi is successful, whether or not some of the, the rhetoric between the president and Elon maybe goes off into the background again. Usually seems that when that happens that the stock does a little bit better.
Yeah, look, I know you make a great point about how much you attribute the pressure on Tesla to that, or potential headwinds due to the sales numbers we see from Europe. But of course, we have those China delivery numbers, which shows, I mean, that's significant when you think about Tesla's market share there, because of course, their market.
Okay, I bought some 6200s. Dollar stop.
Piece of the pie for Tesla. China seems to matter more. Any other takeaways you want to leave us with what you're watching with regard to Tesla?
Yeah, what I would say is, I mean, it matters, but it depends on what you're investing in Tesla for. It's tough to make the, fundamental.
Okay, you can see the deltas here. You can see the hedging flows have turned up. Do we continue here? I don't know. Give me a second. I got to take care of these cats. They drive me crazy. All right, Apple breaking out.
Investment into the future, and if you believe in that future story that Elon and team is working on, then I think it's easier to make that investment, to make that trade for Tesla. We know it's a very popularly traded name because it moves around, because it's in some of those more exciting industries. So yeah, I would say the numbers matter, but to the extent that it's just part of the souring sentiment around the company,
it needs that core business to at least be cash flow positive so it can continue to finance its other ventures.
Great point. Tesla shares right now off 5%. Thank you so much. That's our Alex Coffey, co-host of Next Gen. All right, let's wind down and get some insights on the news that's shaping markets. For that, we want to welcome in Kevin Vaughn, President and Chief Investment Officer, and Walsh Asset Management. Kevin, it is good to see you in person.
And you as well, Diane. We're matching today.
I know we are. Love it. Sympathetic residents to start off a new month and a new quarter. Speaking of the quarter, right, in the previous quarter, you have markets finishing at record highs. I want to get your reflection on that, especially in particular. I've asked this question to different people today. What surprised you?
Yeah, I think we need to remember that the year didn't start off that great. Through the first 73 trading days of 2025, the S&P 500 was down 10.2%, the fifth worst start on record. However, the four previous worst start involved a move higher from day 74 to the end of the year by nearly 24%. Where are we this year? With respect to day 74 to today, we're up nearly 17%.
Okay.
So for me, Diane, I question how much longer can this rally last, and will those short-term bouts of volatility start to reappear? I think we'll see some of those in July, and that could be a very attractive entry point for investors.
I am fascinated by the way you frame that, because if you put that in that perspective, it makes me feel like we could see some performance like we saw the past 2 years. But then at the beginning of this year and the end of last year, you had prognosticators who said we would not see the same type of performance in the S&P 500 because they were strong, more than 20% gains for the S&P 500. Is it realistic to think that we could have that kind of performance by, through the second half of this year? Because that means, look, we're up more than 5% on the S&P 500 year to date. I know you gave the numbers on day 70 plus.
74, yes.
Yes. So another 20% by the end
I don't think we get another 20% from here because of three factors. First, we have to learn what's going to happen with the One Big Beautiful Bill Act. Hopefully, we at least, Diane, get an extension of those tax cuts, because if we don't, it will amount to the single largest tax increase in our country's history. Then, next week, we have the expiration of that 90-day pause with respect to the reciprocal tariffs. Where does that end up? We need to know what's going to happen with trade and ultimately the actual tariffs negotiated. Then finally, the Federal Reserve. They meet in July. I believe that they should cut rates by 25 basis points. They believe they shouldn't. So if they don't cut in July, they don't meet in August, then we have to wait till September for a cut. All of that can create some more short-term bouts of volatility.
So I was watching some commentary from Powell today over in Europe from the Fed chair. And one of the things that came up, there was a question about would the Fed have cut sooner if it were not for, the trade policy effects. And it essentially, my takeaway was that they decided to wait to essentially buy time. And we would have seen a cut. I feel like the Fed now is between a rock and a hard place. There are increasing calls to cut in July, but it doesn't look like that will happen. So what do you think then for the balance of the year? 2 rate cuts?
I'm still in the camp of 2 rate cuts because the Federal Reserve is in the camp of 2 rate cuts, according to the most recent dot plot chart. I think their wait-and-see approach, though, runs the risk of them being late to the party once again. Remember last week, they updated their forecast for unemployment to end the year at 4.5%. They decreased their outlook for economic growth to 1.4%. Yes, they increased their outlook for inflation, but I think that's misguided. Because I think these tariffs, if they do go through, present more of a growth scare than they do an inflation scare. So if they arrive too late, well, then we run the risk of the economy slowing even further. So I think they cut 2 times. Hopefully the first one's in July.
You answered the question that was on my mind, because I was going to say, okay, if they really are too late, then what is the risk? So you answered that question. Okay, but Powell says the economy is in a solid position. That's a quote. If they are not too late, do you think the caution is warranted if we're playing, for lack of a better way of expressing it, devil's advocate?
Yes. So if the Fed funds target rate is currently in a range of 4.25% to 4.5%, where are we right now with core PCE? Well, we're around 2.5%, the lowest it's been since 2021. Yes, they believe it could go up to 3.1%, but right now, if they're data dependent, that would suggest they should be becoming more accommodative. And that would certainly help the housing market and the affordability crisis that we have for younger adults all across America. So I believe they should be cutting now. They're not listening to me. I don't have a vote on the FOMC, But I think when they do cut, once we get more resolution around those trade agreements, get through this summer of potential volatility, we could have a strong finish to the year.
I love the way that you put that too, because I always say,
Okay, no follow through yet.
magic wand, or if you could, be king or queen for a day, what's the message you would give to say the Fed chair? Let's talk a little bit about you talked about your expectations for
Okay,
the
so
year. The S&P 500
New York FANG components that were up during the week. Right now we're seeing some pullbacks. NVIDIA, Microsoft, Netflix, the big cap tech. They had run up the premiums. This call skew started to pick up, so not surprising to see them pull back a little bit. Apple trying to push a bit higher. Apple.
Up to 5% of their GDP over the next decade on defense spending. President Trump outlined an increase to $1 trillion of defense spending here in the U.S., and Europe has already committed to $840 billion in defense spending over the next 4 years. Who's going to benefit from that? Well, those large defense contractors in the aerospace and defense industry, which rolls up into the industrial sectors. Names such as Northrop Grumman, Boeing, General Dynamics, Raytheon, or RTX are all attractive plays, I believe.
Okay, what's Elvis doing? Wouldn't mind buying some Elvis on a dip. Elvis dipping a little bit. Okay, maybe it comes back a little bit more. We can get an entry on Elvis in the 46 area, back down to 46. Maybe we'll consider Elvis. I wouldn't mind buying.
So excited about Boeing. One, they're the developer and the maker of those bunker busting bombs that were used in the recent U.S. exercise in Iran. They were also awarded the next generation aircraft F-47 contract from the U.S. government as well. So more money is coming their way in addition to passenger aircraft. So that makes me a lot more optimistic.
All right, S&P not following through. Came down. Actually, it followed through to the downside. All right, so S&P. All right, back down. There's support right here. Let's see if this. Let's see if we get any kind of bounce out of this.
Where do you rank it? So you like RTX better than Boeing, but where do you rank Northrop Grumman in there?
Sure, another one that's got a forward P of around 18. It's got a dividend just below 2%. They're the makers of that F-2 stealth Spirit bomber that dropped the bunker buster bomb. I think a lot of countries around the world took notice of that. They could be getting some new orders as a result if they could afford that stealth technology. So I rank that slightly behind RTX, but certainly it's another area that should do well.
And I want to get a quick thought from you too, also about the state of the job market. We'll be talking about that all week, from today through Thursday.
Jobs Thursday.
This week, Jobs Thursday. Jobs Friday. I just want to get a thought from you on your expectation there.
Yeah, my concern is that the Fed increased their outlook for unemployment this year.
Let's see.
4.2 to 4.5. That's
All right, S&P continues to drip a bit lower.
Fearful about the future state of their employment. They're not going to spend money. 70% of our economic growth comes from consumer spending. So all of that has an impact.
All right, get out there and spend this week. Any final prognostications you want to leave us with, Kevin, for the balance of this year?
The only thing I would remind all investors that the AI revolution is alive and well, but don't just look to semiconductors and chips.
Okay, Elvis, Las Vegas Sands.
Data centers, the cooling solutions, and even the utilities.
Okay, all right.
Okay, S&P pulling back to the yesterday's low, right around 2 o'clock, 2:30. We bounced right here. Still pulling back a bit.
Three charts, three trades. Rick Duquette goes through the technicals, and Joe Teague takes us through the trades.
Okay, all the New York FANGs, with the exception of Apple, continue to pull back. Apple is taking a little bit off the high as well. UNH is trying to push back up. UNH. All right, we're above 320. We're starting to show a B pivot on UNH. I'm probably going to add to this one. UNH. Home Depot. You're looking at Home Depot. Okay, Home Depot. HD. Makes sense. Hurricane season. Home Depot. Okay. UNH looking good. Home Depot. Home Depot. All right, Palantir looks like it's destined for the 50-day. Palantir. Okay, if you're, I know a lot of people are thinking short on Palantir. So Palantir, probably going to see some sort of base, I would imagine. Palantir. I'm thinking a base like this gets to the 50-day, maybe it bounces at the 50-day. Might be short-lived, and we see a little turn back up at the 50-day, something like that. But it is somewhat bearish at the moment. We got a lot of other stocks in the group also, tech stocks pulling back like NVIDIA. Okay, had a big move to end the week, and now we're coming back in a bit. Okay, it looks like a fear trade right now. A lot of people have chased it higher. A lot of people have chased stocks like NVIDIA higher, so now they're selling out of fear that they made a big mistake. If we get a bounce, we should see it soon. Tech usually outperforms. Tech usually outperforms in July. Okay, just keep that in mind.
Where do you see it going from here?
Yeah, thanks for having me, Dan. It's good to be here. NVIDIA has just had a tremendous run. A lot of tech stocks specifically have had a tremendous run since April. Coming into it today, it'd be difficult to.
So I'll be looking for these dips to get bought. Doesn't mean they will, but that's what I'm looking for.
For a lot of tech, I think we're still in the middle stages of this AI build-out boom. So I got three names here, which are going to be describing my bullishness. And for NVIDIA,
high tick alert plus 800.
There's your high tick alert. Okay, cool.
Chips, but it's not just about the silicon; it's about their whole chip ecosystem. They're building this out. Their design is their secret sauce. Their developers are top notch. They have a massive advantage here. Just way ahead of the rest of their competitors here. And while AMD and the rest of the world is trying to catch up, NVIDIA still has a big advantage. And I don't think that's going to slow down anytime soon. So just looking at this here, yes, we've had a great run here. I'm actually looking all three of these names. I'm doing what I call a poor man's covered call. Going to be able to be in these names via optionality. Buy at December 2025 call, sell at December 2026.
UNH continues higher. UNH. All right, finally getting that breakout we've been looking for on UNH. Okay, adding to UNH shares.
Some exposure versus optionality. Looking for the run up through 2026, maybe some consolidation after that.
I like the way you phrased it in your notes. The AI trade isn't just heating up and scorching these companies that you have on your list at the heart of it. Might see a summer cool down, but the long-term trend heating up. All right, so Rick.
Okay, UNH pushing higher.
Well, sure. I mean, as you said, Diane, we're up about
Okay, Bitcoin had a nice little pop and an equal drop. Pretty interesting. All right, Bitcoin's dropping off.
You see the trajectory has slowed a little bit here. We had our steeper blue trend line going across the lows. It's transitioned more to this white channel between our two dashed lines there, culminating with the highs here near 158.71. So now we are giving back a bit of the gains here. We are slipping back below these old highs, a double top here at our red line near about 153. That would
Okay, UNH pushing higher.
to recover above and hold on to today. We can also see, though, that for a while during this kind of grind to the upside here, RSI was slowing down and showing bearish divergence. We can see that the price action was
That's not bearish divergence.
RSI was trending downward here, and it didn't play out the way you would have thought it.
Intraday, yeah. Well, you're looking at it real time, so yeah. Okay. Genius in hindsight. Okay.
Use multiple indicators. Don't just make trading decisions based off of
one piece of information here because false signals can happen. And, things are, this isn't a crystal ball. It's not predicting the future. It's just showing you, hey, momentum was slowing down here. Now, if we were to assess our standard deviation.
I don't like you. I don't like you. I don't like your message. All right, let's see what's on Bloomberg. Man, my mother-in-law is like blowing me away here. She put the trash out. Even my wife doesn't do that. Put the trash can out on the street this morning. It's like, whoa, man. She gets up early too. She gets up at like 6:30. I get up around the same time, but that's pretty early. My wife gets up maybe 9 if I'm lucky. All right, there goes UNH breaking out. I have January, UNH, I have January 350s and also have January 400s, I believe. UNH, I believe I have January 400s. Yeah, I have 350s and 400 straight calls. The 350s were more expensive, obviously.
High tick alert plus 800.
High tick alert. All right, so we get the shakeout. Shake and bake. Okay, let's go look at what hedging flows say. Hedging flows. All right, turning. You're trying to hold up right here at support. There's support right there.
Protect your home. Costly leaks this storm season at Roof Restore. Natural bio is clean, safe, and proven to extend the life of your roof, saving you thousands on replacement. Schedule your free inspection today.
At Waccamaw Heating, Cooling, and Plumbing, we will farm your family for years, just like these two, growing up, learning, and serving you better every day.
Welcome back to Money Movers. Check out shares of Meta sitting near all-time highs as the company ramps up its AI ambitions. Mark Zuckerberg yesterday announcing a reorganization of its AI division. They're calling it Meta Superintelligence Labs, which is the company's latest effort to develop artificial general intelligence. Zuckerberg, in an internal memo, telling employees that this will mark, quote, the beginning of a new era for humanity. The new division will be co-led, no surprise, by former Scale AI CEO Alexander Wang and former GitHub CEO Nat Friedman. Both Wang and Friedman joining Meta earlier this year as part of Zuckerberg's aggressive AI hiring spree. But the recruitment of its top AI talent not without a steep price tag. Bank of America had a note this morning saying the new staff for Meta Superintelligence Labs could cost Meta $1 billion in new expenses. So far, market given Meta benefit of the doubt on this expenses.
What's fascinating, what was the low point?
Okay, hedging flows. UNH is breaking out, so UNH, keep an eye on UNH. UNH.
Going the opposite direction, well, it marked the high point.
Right, and I guess for the market, as long as that they can figure out what the return on investment is on all of this with AI, that's a good thing. Certainly rewarding spending on the metaverse when you
They
did
should
that.
have called it AI, not Meta. I mean, the name change. They stuck with the name change because it's too embarrassing to change it, but like, what even happened to Metaverse?
Yeah.
Now, a big question
Oh.
can Meta deliver on its AI? Go to the right camera in the end there. Watch it all four.
UNH. Beautiful.
Can they deliver on their AI ambitions as the competition heats up? Joining us now, New York University Professor Emeritus and AI expert Gary Marcus. Gary, great to have you with us. Maybe this is a tough question to answer, but can you buy in outside AI expertise and incorporate it quickly, easily, or is it as complicated as trying to do a massive corporate merger and the kind of teething problems you always have as you try and digest that?
I think the mistake in what Zuckerberg is saying is in the presumption that we actually know how to build superintelligence. We don't. He's brought in some interesting people. Those people are basically working on business as usual at places like OpenAI. The reality is that business as usual has not returned. the return on investment. People have spent $500 billion on these techniques and made maybe $20 billion in revenue or something like that. Nobody knows how to make the stuff work reliably. And maybe the new team will help with that, and maybe they won't. They seem to be doing kinds of techniques that are already popular. Zuckerberg thinks he's going to win this race. I ran a poll on Twitter last night. At least my followers didn't think it was that likely he's going to win the race.
My next question is how many winners will there be? There's obviously an awful lot of companies out there at the moment richly valued on the hopes of what AI will deliver. Is it plausible we'll have 5, 10, 20 big winners in this space, or only one or two?
So far, we have one. That's NVIDIA, right? They're selling shovels in the gold rush. Everybody is buying their shovels. But it's hard for anybody else to make a profit because everybody else has basically the same kind of technology. That's actually partly Zuckerberg's fault because he distributed his llama models to the whole world and that allowed China to catch up and so forth. I think we're going to see a kind of crowding, not at super intelligence.
All right. There goes the S&P. Shaky, 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 shake, 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 shake. There goes the S&P. All right. So the great thing about watching dealer hedge flows is you can see what the dealers are actually having to do. Super bullish.
State AI regulation from the big beautiful bill. What do you think are the implications of that?
I mean, I think it was a resounding victory for humanity over the big tech companies. I mean, Meta was one of the companies pushing hard to restrict states from being able to regulate AI. All of the big tech companies want states not to be able to regulate AI.
Hi, Tues Alert plus 800.
There we go. There we go. Thank you very much. High tech alert. There you go.
National AI strategy where we can compete with China instead of a patchwork of state regulations?
I think if we want a national AI strategy, we should be doing something different, which is innovating and spending money to innovate. Right now, what we're doing is copying. Everybody's building the same thing. It's like the opposite of a diversified portfolio. Except now we're talking about intellectually. Everybody's working on large language models. They're all getting the same results. Nobody got to GPT-5. There's been so many shots on goal to try to make something that would stop hallucinating. Everything continues to hallucinate. Everything continues to have reasoning problems, reliability problems. We should actually be trying to do other things, but that's a research question. Instead, what we're doing is letting everybody rest on the same exact kind of hardware and the same exact software platform. I don't think that that's actually a good research strategy and a good strategy for competing with China.
Okay, shorts covering, shorts starting to cover on Microsoft, NVIDIA. Microsoft, NVIDIA.
Gary, do you think they're likely to do so
Broadcom,
in the next year or 2 years?
Google.
Has the policy of attempting to contain them backfired or just only half?
Containment hasn't worked. Banning of chips. There's a little bit of room to argue about it, but I would say that what happened is that just with China to make developments that are less dependent on the high-end chips, and it pushed China to build their own chips, which they are doing. It put Huawei in a better position. I don't think that particular policy has led to a lot of fruit. And in fact, China has closed the gap over the last 2 years. So you can't, point to any real success on that dimension either. So I don't think that policy has been that great.
Gary, really interesting conversation as always.
Okay, there goes the S&P.
Thanks for having me back. Always a pleasure.
Cool.
Gary Marcus there. We're going to touch to Richard Lululemon suing Costco, saying the company copied its designs. Let's get to Courtney Reagan for the details on that. Hey, Court.
Hi, Will. It's great to see you again. Well, dupe culture, it's all the rage for consumers seeking the look for less, and Lululemon is not happy about it. The Canadian athleisure company is suing Washington state-based Costco for selling what it calls, quote, unauthorized and unlicensed apparel employing knockoff infringing versions of some of its well-known products, and as a result has, quote, unlawfully traded on Lululemon's innovation, research, and goodwill with this infringement. Now, in the suit filed in the U.S. District Court in Central California, Lululemon calls out the social media hashtag Lululemon dupes that influencers use to promote what it alleges are copycat products, saying some consumers incorrectly believe these are authentic Lululemon apparel. Now, Lululemon further alleges that Costco is known to use the same manufacturers as branded products for its own private label Kirkland brand, leading some consumers to believe that Kirkland brand dupes are made by the same authentic supplier, and Costco doesn't clarify the ambiguity, again, according to the lawsuit. Costco, for its part, declined to comment. Now, others in fashion have filed similar lawsuits in the past. Is it legal to sell a dupe? It depends. The Copyright Act of 1976 does protect original works of authorship.
UNH has just gone ballistic. UNH.
Though elements of the design
Okay, it's off the screen. UNH literally going off of my screen.
There's also this likelihood of confusion standard that may apply here. So that's why there's a lawsuit. Because it's a
S&P.
question. Is it legal or not? Sarah, back to you.
S&P.
Whack-a-mole with these brands right now.
Exactly.
Thank you. Thank you, Courtney.
Okay, S&P. Want to keep an eye on Trace.
2000 is still negative on the year despite the big run-up in the S&P and Nasdaq. Is it a good buying opportunity for the small caps? We'll discuss after a quick break.
Crypto Watch is sponsored by Crypto.com. Crypto.com is America's premier crypto platform.
Okay, looking for more follow through on the S&P. Let's see what we can get out of this today. All right, S&P continues to ramp up a bit more. Okay, futures looking for a pop follow through on the futures. Okay. UNH looking good. UNH having a good day. All right, there goes Tesla, showing a little bit more action in Tesla. All right, so dealer hedging flows, watching that. Let's keep an eye on Tesla. Off that low, Tesla. Okay, watching that. What's it? NVIDIA short covering, Apple. Coinbase should be pulling back too. All right, Bitcoin starting to bounce. Bitcoin. Okay, so here's Apple. You can see the hedging flows this morning on Apple were pretty intense. Okay, back to UNH. UNH looking really strong. UNH looking really strong coming out of this base above 322. Big move above 322. UNH doing well. Okay, looking for that to continue over the next several weeks. S&P looking for more upside. S&P. Okay. Okay, got a little bit of resistance right there. Let's go to 0 day and see where they're building. Okay, a little bit. 0 day. Okay. Negative gamma of 29 million building. 60 minutes ago, there was 1.7 million. Now we got nearly 30 million in negative gamma right overhead at 6,200. Looking to get above that level and have dealers continue to buy. All right, watching Tesla. Doesn't look like Tesla's moving at all. It's at 601, so it's back above 300. Shorts covering, pretty obvious on Microsoft, NVIDIA, Netflix, Google. Buy the dip, sell the rip. Okay, we're positive gamma. We're at all-time highs, just off all-time highs. Don't let the market shake you out.
jury in Sean Diddy Combs' sex trafficking trial sent a fifth note to the judge this morning as they began a second day of deliberations today. And it comes after the panel expressed concerns about the ability of a fellow juror to follow the judge's instructions yesterday. Combs has pleaded not guilty to the 5 criminal counts he is facing. A court approved a $305 million bid from the co-founder of 23andMe to buy the bankrupt company. With the green light, Ann Wojcicki's nonprofit TTAM Research Institute will purchase the genetic testing
Okay.
company's assets.
UNH is hanging out at the high, consolidating. Big day today for UNH.
Concerns about the transfer of genetic data of 23andMe's existing customers. And NBA MVP and champion Shai Gilgeous-Alexander, also known as SGA, has reportedly agreed to a 4-year, $285 million maximum extension with the Oklahoma City Thunder. That's according to ESPN.
Wow.
The contract gives him the richest annual salary for a player in
Imagine
NBA.
taking some of that $285 million and just putting it into an index fund. You know,
Sarah, take a look at shares of General Motors reporting Q2 sales that increased 7.3%. Now, GM does
just taking 10%,
its sales
28 million, and putting it into a couple of different
combustion engine vehicles, but it
long-term investments.
of the growth in electric vehicles as GM continues to expand their
Okay.
portfolio.
Amazon continues to look strong. Amazon trying to get back up to the top of today's pattern. Tesla trying to bounce more. Okay. Trying to climb back above the 50-day maybe.
Ford was down 33% when it comes to EV sales in the second quarter. 31%, I should say.
Phil, great stuff as always. Thank you very much. Great to see you, Phil, at Bow there. Now, the Russell 2000 is the only index negative on the year. And could small caps see a turnaround in the second half of the year? Well, joining us to discuss this, Bank of America Global Research Head of Small and Mid Cap Strategy, Jill Carrington. Jill, great to see you. And by the way, it's starting off all right today, as Sarah was pointing out just before the break, split up 1/3%, whilst the S&P is down 0.2 or so.
Come on, S&P. Let's get up there. Let's giddy up, S&P.
And we see some fiscal expansion in there. Is that good for small caps?
Okay, S&P, no follow through.
Incremental positives for small caps recently. And,
Well, let's get another bounce. Let's get another bounce.
Certainly some growth positive provisions in the bill. But today's this week's ISM a little bit more positive, but we've still been in a manufacturing recession. So I think the challenge for small caps is that we've still been in this earnings recession. They've been struggling fundamentally. The consensus is expecting a really big pickup in growth in the back half of this year, but we've been there before. With the numbers have kind of been kicked out a year.
Okay, Netflix, another bear flag. So there's possibilities that the shorts cover. Microsoft and NVIDIA could roll over, so be careful. You need to see a higher low, so negate that bear flag. Same thing with Broadcom.
But I think, near term, there's risk that small caps could continue to struggle. Our economists are not expecting the Fed to be able to cut this year, and the market is pricing in several Fed cuts. The Russell has obviously been trading, very closely with Fed expectations over the last year or so. So that's another incremental near-term risk to the size segment.
Yeah, it's interesting that you guys aren't expecting any cuts but throughout the rest of this year, which I guess we could talk about at length. But disproportionately, small caps respond to that?
Okay, Netflix, bear flag. Apple pulling back, Apple.
Disproportionately, what the Fed does matters more to small caps, does it?
Yeah, I mean, the index has become very increasingly sensitive to rate risk, both with respect to the Fed and with respect to longer term.
Okay, you're boring me.
You on the share it. Have you had anything from the board, or do you have any sense if the board has any plans to act on this?
Okay, you're boring me too.
No, they're not going to do anything. We all know that
the industry that's a raw material input to several industries.
Okay, that's better. June PMI manufacturing. We're talking about on Schwab. Tesla looks like another bounce.
What would you want to say to policymakers, in particular the Fed
UNH looking for higher highs.
That's not the organization I'd give a message to. It would be to the folks making decisions about tariffs and to settle that. I don't see what the Fed could do about shoring up certainty in the business world because they're not reacting, or the comments I'm not seeing have any, have anything to do with, we need, a rate cut, right? We need certainty around tariffs. We need to stop changing our minds every, few days, every couple of weeks. And we need to be able to make decisions without wondering if the next day our decision is going to be a bad one for business.
Clarity needed, especially as it relates to trade policy. Thank you so much, Susan. This was a great conversation, even despite some of the weakness that we're seeing in these numbers. We certainly appreciate your time. This is Susan Spence, Chair of ISM Manufacturing at PMI's Institute for Supply Management. Our thanks to Susan. Coming up next, the disruptors, shares of Joby Aviation taking flight. George Silas joins us, take us through why the stock sitting at a 3-year high.
All right, UNH had a pretty good day so far. UNH. Okay, UNH. ATR is turning up. Okay, here's UNH. Over the last few weeks, we continue to see ATR and price action consolidate into a narrower and more narrow range, creating a squeeze. Now we have ATR turning and price action breaking into the Kirby over there on the left. Okay, the Kirby over here on the left. Looks good. Momentum, you can see momentum, bullish momentum in MACD continue to climb as price action based. Now it's starting to succumb to the pressure to break to the upside. Stochastic's turning back up.
Or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Time now for the disruptors. Joining us for Perspective, we've got George Silas, Senior Markets Correspondent here with today's company, Joby Aviation. Under a little bit of pressure today, but hit a 3-year high yesterday. George, take us through what you're paying attention to when it comes to Joby Aviation.
Well, I think, Diane, if you look at this group, there's actually something meaningful going on. I mean, we talk about electric vehicles, Tesla and the like, and of course Lucid and Rivian, but behind the scenes, we are seeing the development now and commercialization of electric vehicle and takeoff and landing, Ubers of the sky, so to speak. In other words, EV-based helicopters. And this is a technology that hasn't necessarily received FAA approval in the United States. It's still in the commercialization and regulatory approval phase, but this is an industry, and this includes companies like Archer Aviation and Joby. They've actually expanded their operations and partnerships with major players in the automotive space. For instance, Joby has a private placement agreement and a capitalization agreement with Toyota Motor Corp. The other thing is this company has actually established a lot of partners in the Middle East, including United Arab Emirates, the Dubai, government as well. And recently they launched their first deployment of their technologies, their takeoff and landing vehicle in the UAE. The other thing is in Dubai, they completed the successful flights as well. And this essentially sort of certifies the commercialization success and progress that these companies are making. So it's not necessarily a specific company story per se. I think this is an interesting area of the EV space where we're starting to see a lot of movement when it comes down to government authorities, particularly in the Middle East, but also in the United States. If you think about the nature of transportation, we think about helicopters per se, but these are electric vehicle like helicopters, if you will, or taxis of the sky or Ubers of the sky that will carry passengers.
All right, we're getting a higher low in the S&P.
You know, you think about the open spaces in the Middle East, where these technologies
Starting to see higher lows in the hedging flows.
in terms of their progress and availability to passengers.
Okay, yeah, look, it just shows that, you know, what in terms of where investors are looking for opportunity, it's all about, you know, where is, for lack of a better way of expressing it, blue sky here. When you think about there's an Olympics contract, I don't think Joby has, I think that's Archer Aviation. So how do the two compare to each other?
Well, I think both of these names, I brought them both up because they have respective partnerships that are very unique. Archer has the partnership with the Olympics. They also have partnerships with companies like Volkswagen, for instance. So these are you know, industry.
Qualcomm on the move again. That's when we started on Friday, right? Friday. Qualcomm.
This technology and participating, and so they're very well capital. They have a large capital base, which
Qualcomm looking for the follow through. UNH is flagging at the moment. UNH.
Particularly in the Middle East right now, which is supportive of their technologies. The other thing is you have to consider what's going on price-wise. Now, if you look at Joby, it's near 3-year highs. It hit them yesterday. It is pulling back today. It's basically a sell-and-use event that we're seeing. Last year, the company has a licensing agreement where it only earned $100,000. Market capitalization right now is $9 billion. So you have to be mindful of that, and you have to be mindful of, you know, pullbacks, which can be considerable, and I think that's what's happening here today. But more importantly, if you look at the revenue estimates for Joby this year, they're expected to launch their first commercialized vehicle in the United States. $2 million estimated revenue, but if you look at next year, 2026, $60 million. So you can see forward progress in top line sales, but again, it's contingent upon getting regulatory approval, particularly here in the United States.
All right, thank you, George. Here's a Joby today, as you mentioned, pulling back today, down a little more than 8% after that run up yesterday. Coming up next, thank you, George. Coming up next, time for our 360 round. We're talking about today's JOLTS report, state of the job market, the June employment report that's due out on Thursday. That's on the other side of this break.
Okay, Qualcomm's on the move. Qualcomm. Qualcomm is on the move. Let's see what hedging flows. Hedging flows look good. They look bullish. Qualcomm looking good. The volume looks really good on Qualcomm institution.
When it comes to investing, you'll love Carl's Way. Take a left here, please. But there's Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
Look it up there.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Welcome back to Trade 360. Time for our 360 round. We're diving into the state of the labor market. For that, I want to bring in our panel. We've got Eric Winograd, and Chief Economist of Alliance Bernstein, and Allison Srivastava, Economist of Indeed, joining us now. Thank you both for joining us today. Let's talk about the latest job market data out today. We have the JOLTS report out showing that job openings now sitting at the highest level in 6 months, coming in at nearly 7.8 million. That was better than expected. I'm curious to your take on today's data first.
Thanks for having me. Look, I'll be honest. I think the JOLTS report is hard to interpret on a month-to-month basis. It's a volatile series. It bounces around a lot. So I think that what we need to do when we get the JOLTS data is to look at it over a longer-term time horizon. And when we do that, okay, this month was stronger, but over the last year, the average number of job openings has been relatively consistent on an average basis. And today's data don't really change that. It paints a picture of a labor market that is in something of an equilibrium.
Okay, Allison, I'm curious to know your take on today's data. Is it, it's better than expected, so it's a nice sign. But Eric makes a good point about, just looking at it over a long-term basis. What's your take?
He's absolutely right. The JOLTS report in particular, you really want to take that as pieces of the puzzle rather than necessarily the entire picture over the long run. But, with these openings above expectation for a second month in a row, I don't think it's safe to say that the market is thawing by any means, but it's clear that businesses that have been holding off on making hiring decisions in the face of uncertainty are now maybe deciding that they just can't hold off any longer.
Okay, and then Eric, I'm curious to know your thoughts on this. I mean, one of the things I noticed is the vacancies in the hospitality sector that made up a significant portion of the hiring. Is it just about the kind of seasonal trend here?
Well, remember that vacancies are also different than hiring, right? Almost by definition, a vacancy.
Sorry about that. Chart drifted up. United, Qualcomm, obviously looking pretty good. Qualcomm taking off to the upside. Qualcomm going.
Hospitality and leisure in particular are challenging. I would also observe that those are also sectors that are significantly.
Okay, S&P looking forward to push higher. UNH. Okay, we're starting to see more consolidation. UNH.
And so if there has been a change in the availability of those workers, then that is something that could also be impactful there. But again, given the volatility of the JOLTS data, I think we don't want to micromanage it too much, especially when we have a payrolls report coming out in less than 48 hours that will give us more current, more comprehensive, and frankly, more reliable insight than what we get from JOLTS.
Okay, there goes Qualcomm. Qualcomm on the move. Okay, Qualcomm, we need to see this pull back a little bit. What the hell's going on with my freaking mouse?
I don't think that's an unreasonable expectation by any means, but I think another key thing that you need to look at in upcoming report is really that labor market churn, which we haven't been seeing at all. Even if headline numbers are pretty strong, there needs to be movement for the labor market to be healthy as well.
Okay. We got the quits rate just ended slightly in this JOLTS report. Eric, what's your expectation for the jobs report that we get on Thursday?
Yeah, I think something in the low hundreds is reasonable. As Allison says, we have moved sort of sideways with the rate of hiring. It's been very stable too. And as with the JOLTS data over the long term, it looks like a labor market that's roughly in equilibrium. And as she says, the defining feature of it right now is that it's low churn. Despite what you see on month-to-month fluctuations, generally when people lose a job, it is taking them longer to find one, and as a result, people are more reluctant to leave. And I think that is a measure of the job market being softer than it was last year for sure, even if it isn't yet what we would think of as truly soft.
Okay, so I want to get a quick thought from you on just how you would characterize the overall state of the labor market.
I think overall we're still frozen, but we're trying to see how deep the ice runs. Again, that churn is so important for labor market health. And even though, I think businesses are maybe making decisions, especially around hiring in the short run now where they hadn't necessarily been before, it's important to zoom out and look at that long run.
Okay, we're coming into the lunch hour.
Still,
Hope you're having a good day.
we might be a little bit
I'm your
more
host, Cousin Vinny,
fine-tuned
coming to you
about
from
the labor market in terms of
closingprint.com.
dramatic
We did get a little shakeout earlier, it
increases over the last
appears.
few years. It's much more usual that you have
Scared
a little
the-
bit of erosion. I think that's probably more
Scared the
where we're
crowd
at now.
Okay, Eric, a quick final thought
briefly
from you
there.
as well on how you would characterize the state of the labor market now.
Yeah, look, I think frozen is a little bit strong because you are
Okay, we
still
got
saying
supply
running
just
over
overhead
100,000
on
but
Qualcomm.
the idea of equilibrium is the one that sticks with
Oops.
me, where the rate of
Okay,
hiring is
UNH,
consistent, the
Qualcomm.
rate of turnover is
Okay,
consistent,
over here on the
both of
right,
them are slower
over here on
than
the
what
right,
we've
you've
seen over
got
the past couple
the
of years.
200-day.
As long as we're in that equilibrium,
You've got
I think the labor market is
supply
just
right there.
the economy moving.
Got supply overhead. So if we can break through 160.50, 160.50 above that, notice the buy order block. Where's supply? So this is something I'm always looking at. I want to see a buy order block that's telling me there's volume coming in. Put a stop underneath that. You can take a quick analysis up to that high with a stop underneath. That's 4 to 1. Okay, almost 5 to 1. 5 to 1 on that. Okay, nearly 5 to 1. So if I pull this stop down a little bit more, make it closer to 4 to 1. So my stop would be down there below 157. Technically, on the watch list, I have a stop at 155. Okay, so that'll adjust upward as the stock, if it breaks out, as the stock breaks out. I'll be looking for that to follow through.
Client satisfaction by JD Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more.
Hi, took alert plus
Schwab
800.
Bank Investor Checking, the checking
Okay.
account built for investors.
More than likely, Powell is still talking, so there's some issues there. They're having the markets move back and forth.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me. And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Okay, Apple.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Okay, here we're coming into the 12 o'clock hour. Let's shift gears. Let's go listen to CNBC, Mr. Arrogant himself, Wapner. See a lot of people complaining about him on Twitter, X.
Not everybody wants an electric car.
So some of the specifics on what the president was referring to in the bill, energy production tax credit would go away in 2027. Also eliminates tax credits for electric vehicles, which of course is a big draw for Tesla buyers here in the United States. And
Hi, took alert plus 800.
Another high tick. Another high tick.
And if things escalate,
Love those high ticks.
start taking a harder look at Tesla's robotaxi emissions. By the way, it's already looking into reports of robo-taxis malfunctioning following the service's early tests in Austin last week. Now, maybe Musk sees the risk here, especially after President Trump said this morning that he might look into deporting Musk. Musk tweeted that he is not going to escalate the fight, at least for now, guys.
Okay, Steve Kovac, thank you very much. I just keep thinking back to that.
Okay, Qualcomm.
Paper a while ago.
Qualcomm looking good. S&P trying to push a bit higher. S&P.
I'm going to say what I think.
S&P.
Yeah, a long time ago. Because, he does these things that are sometimes not ultimately great business decisions for the companies that he runs.
This one feels a bit more temporary one-day spat than a couple of weeks ago. We'll see.
I don't know. He's revived it from a couple of weeks ago as well. Stocks under a little pressure. Some of the losers from the first half getting.
Wow, Wilfred is like 3 feet taller than this lady on CNBC. Dude's tall. There goes S&P. S&P on the move. Okay, I got to take a little break. I got a really bad headache. Just give me a few minutes. I'm just going to massage my temples and maybe do a little exercise, get some blood flow in here. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's 12 o'clock, Tuesday the 1st. Looking for some more follow-through, a bounce in the S&P perhaps. I'll keep an eye on Trace and see what hedge flows look like. Okay, hedging flows are kind of flattening out, but we did bounce at support.
Selling in those high-flying names. Sorry, let me try and explain why that occurs. At the end of the second quarter, there was a very strong push in the direction of the leaders. Classic end-of-quarter portfolio window dressing. First day of July, first day of the third quarter. Now it's all about the laggards. I mean, Steph and I were just like, you have names. You have Best Buy. You have Target up 6%. Those stocks are both down double digits on the year. In healthcare, you have Merck, which is up about 3%, down double digits on the year. Lululemon making a comeback today. The Trade Desk making a comeback today. Financials, the one bank that hasn't worked all year, USB, that's higher today. And Jimmy's really excited about this. You have the Russell up over 1% today, while the S&P and the NASDAQ is down.
Jonathan Krinsky has a pretty good note out today talking about the unwind, Steph, in momentum and how things like discretionary, which, is the worst sector year to date thus far, is going to have a catch-up trade. One day makes nothing, obviously. But you have had a run-up in so-called lower quality.
High took alert plus 800.
If you do have an unwind in that trade and you do have a reversion into some of the laggards, it could get a little interesting in this market.
Oh, it'll get very interesting in this market because of broadening out is very, very healthy, right? And so to me, look, at the end of the day, we might have these fits and starts between growth and value, momentum and lack of momentum, but it all boils down to earnings. And if you believe we're growing at 2.5% in GDP, 2.5%. Gotta go.
Hang on 2 seconds. I want to go down to D.C. I have breaking news. Emily Wilkins is on Capitol Hill with the latest on the bill. Emily?
Hey guys, so we are getting very, very close to that final vote taking place. But at this point, it does seem like the Senate has the votes to pass the Trump mega bill. And of course, that $4 trillion tax package along with it. This comes after there was some adjustments to the tax. And in that one, we saw all but 3 Republican senators vote for it. And then J.D. Vance coming in with the assist, getting that bill over the finish line. So we are still waiting for the final bill to pass. But at this point, it's looking very likely that could come definitely within the next hour, much likely way sooner than that. Right?
All right. We'll come back to you as needed, and you'll keep us up to date. Of course, then it goes back to the House, and the president would like it all done by the 4th of July, admits that it's going to be hard to do that, and we will track it. We're showing you the 10-year, obviously, because there are concerns we're continuing about the deficit, but that's your picture now. S&P is a fractional loser. I'm sorry for interrupting you, Steph, but want to get that news out. Back to you. Broadening obviously would be good, and what a lot of people are waiting for and tired of a top-heavy market.
Right. So I think overall earnings are going to be good at about 8 to 10%. I think that's going to positively surprise for the year. Expectations are for about 5%. Top line growth, mid-single digits, margins expanding. In the first quarter, we saw margins expand 61 basis points, but it was mainly the Mag 7 that drove the margin expansion. So can you imagine if we start to see it broadening out, better results. And I think of the groups that I like, I mean, I still like tech and industrials, but financials to me it's my favorite sector right now because they're the cheapest. I think
Even at a record high.
People are not giving credit for deregulation, and we are seeing it in spades.
Yeah, that
And
was Mike Mayo presentation yesterday.
Yep, we had the stress tests on Friday. We're going to get the SLR relaxation. IPO rules are going to get relaxed, and then you get M&A, and then you get capital markets, and the valuations is cheap. You asked about discretionary, and by the way, financials and discretionary is about 23% of the S&P 500. So if they get going, that could certainly help the overall broader averages. But discretionary is interesting because I was starting to worry about the labor market. I was starting to worry about the weekly jobless claims. And today we got a JOLTS number that was better than expected, quit rates that were better than expected. Initial claims last week were a little bit better than expected. So jobs, wages, little lower inflation, you can make an easy case to own discretionary. That is absolutely lagged.
Josh, I'm going to go to you. July is the best month over the last 20 years. The S&P has been positive for the last 10. The setup looks pretty good as BCA upgrades stocks today. Now they're only at neutral, in fairness. They downgrade cash to underweight. And you do, according to Bank of America, have the biggest net selling of equities in some 10 weeks. What do you make of all that?
Look, I think there were three things that kept people cautious this March and April, myself included. Just people saying, all right, this doesn't feel like it's going to be as good a year as 2024. Those things were softening of the economic data, which has partly reversed, partly not, but certainly the wheels have not fallen off. That was one. Two, the Rose Garden moment, which was absurd and was reversed as well. And then three, this concern about what earnings would look like with any kind of tariffs interfering with the cost of doing business. And we have largely been able to put those items behind us. We don't have an economy that's grinding lower or slowing down by any means. It's not as fast as it was, let's say, in 23. But it's not as slow as we thought it might be.
Hey, Josh, forgive me. I'm going to take it from you again. I'm going to take the ball from you. I'll give it back in a moment. I just want to get back to Emily on the Hill. I guess it's now official. Yeah.
Scott, yes, it is now official. The senators, they've been here for more than 24 hours, so they voted very quickly. But yes, as we said, 51-50 with J.D. Vance breaking that tie. Now the Trump mega bill has passed in the Senate. It now, of course, heads to the House. We have heard from a number of lawmakers there, fiscal hawks, even some more moderate members who have had concerns about the bill. But Mike Johnson is determined to try and get this done, getting a vote on this as soon as tomorrow, and that would get it to the president's desk by July 4th. Now, will that happen? That remains to be seen. It remains to be seen if lawmakers dig in their heels or not on some of their concerns, but certainly a lot of momentum with this Senate passage today.
Hi, took alert plus 800.
The other thing, of course, is that they've made a lot of last-minute changes to the bill. It sounds like might be out. Additional changes to get a better sense of what the Senate just passed. Guys?
All right, Emily, thank you. Emily Wilkins down in the halls of Congress for us following all of that. It's interesting to see the move in the bond market. And I'm just wondering, Josh, I'm just going to make you pivot for a moment to react to all of this as it's developing. Can we put that back up, please, of the 10-year or whatever you had up there, please? There it is. Whether you think the bond vigilantes are going to have the last word here, or at least want to have a little bit of yell before things calm down in the Treasury market.
That could be, and perhaps that's a headwind that we need to think about. And perhaps there will be a day or two where a spike in the 10-year gets the attention of the stock
Boyd
market.
Gaming. I just bought some Boyd Gaming breaking out.
But I really don't think that that's the main
I bought the 80 strike. That's 58 Delta for $1.80, $1.75. $1.75. The reason being is it's got a pretty decent ATR. It's in the group that are breaking higher. It's in a cheap quadrant.
I looked at my own 401k yesterday and I had to refresh the page because I thought there was an error. I'm doing double the performance of the S&P in my retirement account, and the reason why is 40% allocation to international stocks. You're talking about a gigantic asset class that's been a drag year after year after year. We're coming off one of the most incredible spates of performance for international stocks, almost every region. And this is really important for investor psychology. They no longer are just looking at the SPX and saying, all right, a lot of my portfolio is doing well. They're making money all over the place. Through Friday, international stocks were outperforming U.S. stocks by 12.6 percentage points. That's the widest gap in 24 years. 2001 was the last time we saw anything like that.
S&P 500 starting to lift now. S&P.
Again, more important than the bond market at this current moment. If you strip that out, international stocks are still up 11% year to date. So yes, it's in part a weak U.S. dollar phenomenon.
All right, looking for the S&P to rip higher.
All over the place.
High took alert plus 800.
European countries have earnings growth again. It's a miracle. So it's great for investor psychology when they're making money, not just caps, but they're making money throughout their portfolio, and that's the case right now. And I think it's a big positive.
Jimmy, it's going to be worthwhile watching that dollar. The move lower to start the year, which is the worst open to a year in decades. There's some talk today questioning whether the dollar move is bottom. Now you have to pay attention to that.
Extreme high took alert.
Want to weigh in on what you think now that this bill has at least passed the Senate. Of course, it's going to go back to the House. Don't expect much of a roadblock there, but you never know until it ends up on the president's desk with his signature on it and Sharpie.
Yeah, I mean, there's still a lot of sausage making to be done, as the expression goes. To answer your question directly, the 10-year at 420.
Yeah, CRISPR looks good there, Tony. 55 first target.
The markets are soft a little bit, but there's a little bit of divergence, a little bit of broadening out. It gives a chance to sit back and say, what really matters here? I'll tell you, the 10-year Treasury, 427, Scott, makes me feel good. Makes me feel I can look right past it. I do want the dollar to start coming back.
Okay, there goes S&P. S&P on the move. Almost took a stop on S&P. Let's see what the hedging flows look like. Okay, we're starting to move up. Hedging flows. Want to see it start to match the move. We got resistance right here at 6,200 on 0 day.
Extreme high took alert.
Extreme high tick alert.
Maybe what the market is sussing out is that when we get the rules of the road done in terms of where people are supposed to set up factories, that a company like General Motors can adjust to that and shouldn't be trading at 5 times earnings, that maybe those earnings themselves are depressed and going to be higher than expected and should get a higher multiple. I need to take another look at General Motors, but my point being is that a lot of good things can come together. I don't like where the dollar is, just to answer your question directly. I do like where the 10-year Treasury is. I like that the House and the Senate now have to come together.
Why are you in love with where the 10-year Treasury yield is?
Because it's the sweet spot. It shows that the Treasury market is saying 2 things. We've got growth ahead, but it doesn't look like it's going to be hyperinflationary. It doesn't look like the deficit's going to get more out of control. Nobody likes where the deficit is. But the combination of the deficit impact from this budget bill, granted its final form still needs to take shape, that combination with tariffs looks like it's going to be neutral. That's what the CBO said a couple of weeks ago.
It's also suggestive that the Fed is in no rush to do anything, as Chair Powell reiterated today in Portugal. What's interesting, too, Goldman raises their 2025 Fed rate cut forecast to 3 from 1, September, October, and December. And it's because the tariff effects have been smaller than we expected. That's what they say. Those are their exact words. Whether it remains so, we'll see. But Jay Powell's already said, if not for the tariffs, he'd already be cutting rates. So, he's got his finger.
High took alert plus 800.
And that was the bright spot from his speech last week, and he reiterated it today, too. So we now just have to wait and see, just like he's waiting and see. I think they're behind, Scott. I think they should be doing it.
Extreme high took alert.
That's their call. So
Okay.
the point being is, after his comments last week, I thought July was absolutely off the table, but September also likely off the table. And I actually think September is a real possibility now. I don't know if we're going to get 3. But by the way, I don't think we need 3. I think they should be doing it. But I think this economy has been resilient to be 2.5% in GDP, and inflation, it's coming down.
Well, you do get the so-called, the deadline, if you believe that it's a real line,
Yeah.
on the tariffs before the next Fed meeting. as well. Let's see how it plays out and whether, even as far-fetched as it might seem to some, if July ends up being live in any way.
I think September 18th is when we'll get the first cut. I like that he gave us some form of guidance last week as it relates to his thought process with inflation. He said, okay, the inflation is going to show up in June and July. I don't think it's going to show up in June
Extreme
and July,
high tick alert.
and I think that's going to be the reason why they are going to be cutting rates in September on September 18th. I thought auto sales were interesting.
Okay, there we go.
Auto sales representing the clear premise.
All right, nice move there.
In demand, and that obviously has
I'm going to sell half of these S&P 500 calls into strength.
Despite a little bit of give back in the NASDAQ, as we said, it's underperforming, which you haven't been able to say all that often lately. UBS says tech stocks have more to go. Dan Ives says you get another 10+% in the second half with the tailwinds of AI. NVIDIA on the doorstep, or certainly walking up the sidewalk to the doorstep of $4 trillion in market cap. Meta hit a record high this week. Microsoft's 14 all-time intraday highs in the month of June. That's the most ever in a single calendar month.
Yeah, look, there's no question that technology has dominated the leaderboard this year. You look at the top 20 year-to-date performers through the first half, 6 of them are tech. But then when you look at like another 5 of them, you can kind of say are tech, right? Like there are consumer discretionary names that are basically tech companies, or you got companies like Uber that's considered an industrial, but it's an app-based business. So tech is all over the place. 84% of S&P 500 technology names are above their 50-day. 68% are above their 200-day. So more than 2/3 of the index in a long-term bull market. Almost all of these names are in a short-term bull market. And then when you look at RSI,
Okay, hedge flows, watching for that.
52% of tech names are at an RSI 60 or greater, which is confirming these uptrends, which means the accumulation is coming along with these higher prices. People are buying them up. The lowest RSI in S&P Tech is PAYC. I never even heard of it. Is that Paylocity? That's at a 42. Most of these names are buyable. And when you think about the drivers as to why, these companies are growing their earnings at a faster rate in general than the companies in most of the other S&P 500 sectors. It's not happening in a vacuum. It's not like
Qualcomm is gone.
Somebody just bid for the same group of stocks for no reason. They're buying companies that are coming in with better than expected numbers and raising the bar. And until that stops, like until we get to an earnings quarter where all of a sudden you've got a lot of companies disappointing, it can and will continue.
The wild card in all of this is Apple, which had a bad first half by anybody's scoring. Down 18% year to date, only eclipsed by Tesla, which was down 21% in terms of large cap Mag 7 stocks. Now there is a report that Apple is weighing using an or OpenAI to power Siri, which would be a major strategy shift. Steve Kovac is our tech. Oh, he's not ready. We'll get to him in a minute because we're going to go to him on that story, which feels a little bit like I've read, this is Apple throwing in the towel on trying to do it organically. If you can't beat him, now he is ready. Kovac's with us now. Steve, you there?
I'm here.
So you read it that way, throwing in the towel. If you can't beat him, join him. I mean, what's the deal here? Because it is a strategy shift, no doubt.
Yeah, you can say it's throwing in the towel, Scott, but I choose to be the optimist here and look at it. This is the way for them to not fail to deliver on their promise and deliver it on time. So if they can't get their own personal system up to snuff in time for the 2026 delayed launch, well, here they go. They have this nice little backup with Anthropic or OpenAI technology that has been proven to work to run on that layer. And by the way, Scott, this is a cheaper way to do it. Think about Copilot over at Microsoft or Perplexity. What they do, they build their own services on top of these AI models from Anthropic and OpenAI. In fact, Mustafa Suleiman, the CEO of AI over at Microsoft, he told me a couple months ago
That's why they're taking this approach of using other people's technology and incorporating it into their own apps and services because it saves them money. Don't have to spend ginormous amounts of money on
Qualcomm.
chips. You don't have to go out there like Mark
Qualcomm on the move. Okay, so we already made it through. Okay, from earlier, you can see where we started.
by partnering or licensing the technology, and at the same time, they're buying themselves just a little bit more runway to do it themselves over time.
I mean, the fact that you started out by saying, I want to be the optimist, let's be honest, okay? And that's why you're laughing, because you know exactly what I'm going to say. You've been anything but. Does this turn around in some respects the way that you will now view what might lie ahead for this company as it relates to their AI ambitions?
Yeah, and I think that's why we're seeing the optimism in the stock. I mean, it's up another percent today, on top of 2% yesterday, because they'll be able to ship this at least closer to on time than they were before, because they're going to use their own technology. Yes, it's an admission they couldn't build it themselves, but we kind of knew that already, Scott. They told us they were going to be able to build it, didn't deliver, did not execute on it, and now they're going to turn to technology that actually works and incorporate that. That is good news for Apple getting its Apple Intelligence System out there and delivering on that promise of what they call the more personal Siri, this idea that it can incorporate into all the stuff stored on your phone, including your third-party apps. If they're using an Anthropic model, for example, running on Apple's private cloud, by the way, Scott, this wouldn't be running on Google or Amazon's cloud like Anthropic currently does. They're going to be running it in that private cloud as well. So you get that privacy layer on top of it. You get technology that's proven to work, unlike Apple's. That seems like a winning formula to me.
All right, hang with me for a minute, because I'm going to pivot you to something else in a second, but I want to talk to the crew. Better late than never. Right? Is that how you cloudy? Clarity. Oh, clarity. Vision, clarity. That's what they needed to deliver. They needed to deliver a plan. Well, I mean, this isn't in stone. This is just a report. Okay. But it's also at least an understanding of what they're going to do if they cannot curate on their own some form of an AI strategy. There's an understanding that potentially they could step out and do something beyond that. That's what we've wanted. I think that's what we've wanted all along. I think that stabilizes the stock clearly. I own the stock through the ETF, but if I didn't own the stock, I would buy it. Does this, Josh, jumpstart this thing now for the second half? Because it needs a comeback.
I don't think so. I read the Apple bloggers; they're disgusted. This is not a positive development. Maybe it's making lemonade out of lemons, but the idea that the largest, most well-capitalized, most innovative technology company on planet Earth is missing this moment and doesn't have a way to put their imprimatur on a GPT, general purpose technology, mega wave. Like what else? What are you doing? Like smaller AirPods? So I'm a shareholder. I'm a long-term fan and believer in Apple. I don't think this is a positive. Maybe it's a relief rally. I don't know.
You just called it the most innovative tech company on planet Earth. I mean, there are some who would just take issue with that statement in and of itself. Were they?
Well, they can't. Well, no, they can't, because the App Store is the most valuable.
Like literally, the App Store. You thought Weiss was choking yesterday on live TV. I don't know what he would do today at that statement. And Kovac can even weigh in on that too. If like the only knock, frankly, on this company from the
It's amazing how smart this guy is.
They're never first with some innovative thing, but they end up being the best.
Yeah, and also
innovation doesn't always mean first.
Hold on a second. Sorry, I'll get back to you. My bad. Kovac?
Yeah. I mean, look, I take it a different way than Josh does. I mean, they're going to be actually able to ship this. And I go back to, again, my example of Perplexity and Copilot, especially Perplexity. No one's criticizing Perplexity for not building their own AI systems in-house. They license it from Anthropic and from OpenAI. Like Apple is supposedly going to do it. No one's knocking down Perplexity for that. In fact, everyone's saying Apple should go out there and buy Perplexity. So I see it a different way. They're looking at technology that works. Yes, it's an admission they couldn't do it in-house. Maybe one day they actually get there, but they can do it and do it in a less capital-intensive way and do it in a way that can actually ship this thing on time. Because the last thing that they need to do is have another embarrassing delay like they had this year and have another WWDC that's kind of a lackluster.
Let's see what the S&P is going to do. All right, so we got a nice little pop short covering, but dealer hedge flows are remaining flat for now. Dealer hedging flows are staying flat. We're above resistance. That's pretty interesting. Right at resistance on 0 day. So we get it through 6,200. We'll get a lot of shorts to cover.
Steve's right. Like, this is way better than another false start with their own thing that ends up being a bust. Like, this is, that's why I said it's like making lemonades out of lemons, but it's still lemons. And no, I don't think this is the thing that takes Apple to a new high. So better luck next time. Maybe they'll get the robot thing right because they missed this. They are not a significant, meaningful player in the LLM ecosystem. They may someday become one through partnerships, but that has not historically been what Apple's done. What they've done is they've looked around and they said, okay, this guy started this company started that. Here's literally the best version. Do they have the best version of AI-enabled chat? Do they have the best chatbot? No, I don't think they have the fifth best. So that's the answer to your question. No.
All right. I'm going to leave that there. Steve, I'm going to let you go. Thank you very much. That's Steve Kovac with good insight there. You want to weigh in? You don't even own it.
No, I do own it. But
you own it. That's right. You do own it.
I added to it during the April deluge. I'm up 10%, but that's nothing compared to the markets. We know it's underperformed. And what I would say to this,
Okay, looking for hedge flows to turn up.
We'll call it innovation. They're good at copying. The problem that I have with the stock, and I'm thinking about trimming it at the very least, is it's just too darn expensive.
You're thinking of trimming it?
Yeah.
It's just at a bat. Why are you trimming it now?
If you'll give me a second. Because it's too darn
Wapner is so smart.
What are you doing? It's too darn expensive. It is. It's just too darn expensive for the growth rate in front of it. Now,
Okay, we got buy order blocks. Look where your supply is. Okay, this is a strategy 271. Okay, we're at 263. I'm going to buy some Broadcom here. Going to buy some Broadcom. Okay, you can see the buy order blocks, Broadcom. Okay, let me just buy this and I'll set this up for you. Broadcom, I'm going to go out to July. And I'm going to do a 50 delta. That's a 270. I'm going to buy a 270, sell, buy a vertical, 270. 270. What's that go for? No, I want to go 270, 275.
So I'm not going to eliminate the position, but in terms of waking up in the morning and being excited about it, I'm not.
Okay. We'll take a break. We have a move from Steph to get to. We have an update to Josh's best stocks.
Okay, Broadcom bought some 270s. Broadcom bought some 270s. Okay, coming off the low. I'm going to put a stop underneath today's low. Okay, stop underneath today's low. Getting long right here. Stop underneath today's low. And we're looking at supply up here. Okay, that's 2 to 1. That's 2 to 1. Okay, looking for a few points. Looking for a few points on Broadcom. Okay. Broadcom. Bought the 270 call for July 18th. Stop under today's low. Broadcom looking for a follow through. It's just a setup. It's not a guarantee. Okay. Looking good. UNH is hanging out at the high, doing well. S&P looking for a pop. Just sitting here now. Broadcom, you can see the flow. You can see the flow on Broadcom. Okay, Broadcom looking for that follow through. Okay, Tesla looking like it could go.
See that move from Stephanie Link? You bought more DR Horton. That's an interesting move. I mean, the construction ETF, the ITB, is having its best day since May as well. But housing, Piper Sandler says the recovery is at least 2 years away.
I mean, it's been horrible to own this stock or anything housing
Why are
related.
you buying more?
Because it's cheap at 11 times forward estimates. I think the guidance that they gave with regards to
Okay,
margins
right
and
in
deliveries
here.
has
Okay.
been not kitchen sinks, but it has come down to reasonable levels. I am intrigued with the interest rate move. We talked
Okay, looking for
about the
S&P to
earlier
turn
today.
back up.
They're at 6-week lows. The 30-year fixed is still high at 6.8% for mortgage. That has to come down, but I do think you will see that actually start to come down. And maybe, just maybe, we do get a rate cut in the fall. These stocks are going to fly.
With one rate cut?
Yep, because it'll be directional. Absolutely, especially with them down as much as they are.
Stephanie's so smart. She's so smart. Broadcom. Wapner. Got to get on my nerves.
The market's not stupid. It knows that what you think, that rate cuts are probably coming in the fall. Yet maybe rates have a different story to tell.
I think you just have to be patient on this one, but I really do like them. Execution has been really very, very good. The best in the industry. The only better one is Toll Brothers. They're both really great, but I don't need to own two.
All right. Best stocks in the market, Josh. A new addition. It is HLT. It is Hilton. Why?
Yeah, so this is a potential breakout. It's not quite in progress, but it's getting very close, and I thought I'd spotlight this. Basically, we saw a golden cross happen as the stock climbed out of its Liberation Day lows. Hilton was in a 24% drawdown. Now it's back to within 4% of 52-week highs. Got that 50-day crossing back over the 200-day.
Okay, Tesla looks like it wants to go too. You might want to check out Tesla for potential trade. Give yourself enough time to recuperate the 50-day if we can get back above the 200-day. 50 days crossing up through the 200-day.
Just absolutely on fire. We talked about the cruise lines the other day. And Hilton should follow through here.
NVIDIA turning.
Report was very strong. 6% adjusted EBITDA growth.
NVIDIA's turning.
$1 million in net income. A 7% pipeline.
Buy the dip, sell the rip, folks.
27 million returned to shareholders during the course of the quarter. Full year guidance looked great, and that's why the stock's working. So I think the 270s is where traders want to watch for that trigger. If it can get through the 270s on convincing volume, I think it's a pretty good setup. And I would effectively use the 200-day moving average as my risk management. It's like low 240s, let's say 242, 243. And each week, I would basically move that stop loss up so long as the uptrend continues.
Do you have a thought here, Joe?
Looks good. I agree with Josh on Hilton.
NVIDIA.
Has very similar
I don't have any calls on NVIDIA.
In the past, the ETF has owned Marriott. I don't believe it would ever own Hilton. But if the momentum continues, certainly they qualify as candidates to be included.
All right, we'll follow that stock. Thank you. Let's get the headlines now with Kate Rogers. Hi, Kate.
Hey there, Scott. President Trump said he'll discuss Gaza when he meets with Israeli Prime Minister Benjamin Netanyahu at the White House next week. He added that he would be, quote, very firm with Netanyahu on the need for a speedy ceasefire during a visit to
Okay,
Florida
watching
today.
NVIDIA.
Trump also appeared hopeful that an agreement could be reached for a hostage exchange.
Okay, looking pretty good. Got a buy order block. Okay, here's your setup on NVIDIA. Stop underneath the low of the day. Looks like we're going to go here.
forward to working at the foundation to quote.
Actually, let me just change this because that's not where I'd be entering. Not where I'd be entering. I'd be entering right here.
Jimmy Swaggart, one of the first preachers to bring his ministry to a massive
Jimmy Swaggart's dead?
audience
Oh,
at the
wow.
time. The Pentecostal preacher began his television ministry in 1973. He was later involved in prostitution scandals
He was
in the
down in
1980s.
Baton
that led
Rouge.
to his suspension and frocking. He was 90 years old, Scott.
All right, NVIDIA. Can we get back above the highs, NVIDIA?
Tessa Brewer follows that money for us. She joins us next.
NVIDIA. Buy order blocks. Let's see how far we go with this, NVIDIA. 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 Looking for a follow through, NVIDIA. 155, 160 maybe. NVIDIA. 155, 160. Looking for a follow through, NVIDIA. All right, maybe I'll adjust this target. Put this stop underneath that buy order block. That makes it 2-1. NVIDIA. NVIDIA. Notice the buy order blocks. Buy order blocks right here. Supply overhead. All right, looking for a follow through in NVIDIA. Okay, NVIDIA looking good. Okay, let's see what the hedge flows look like on NVIDIA. NVIDIA looking for the hedge flows. Okay, Broadcom looking for that follow through. Broadcom looking for the follow through. Nothing yet. It's grinding a bit higher. Broadcom. Oh. Okay, looking for more upside on NVIDIA. There we go. NVIDIA. Okay, Netflix is turning. Netflix turning.
When he saw shares of Wynn, which were up, and Tessa Brewer had to make an appearance here with that news to tell us exactly why Jim had to jump in his step today.
Why wouldn't you? I mean, we've been waiting for this kind of results out of Macau.
Because you haven't recently. But anyway, please continue.
Well, look, here's the deal.
He's such an asshole. Jesus Christ. Sorry.
Gross gaming revenues coming in
Wapner is such a jerk.
The street was expecting maybe a 2 to 5% improvement over last year. It got 19% improvement, $2.6 billion for the destination for the month of June. Now, what's remarkable about this is that, yes, we're seeing visitation increase, but we're seeing per visitor spend decrease by 13% over last year. So those numbers are what give investors and analysts pause, because if you're seeing a big jump in gross gaming revenue that is really fueled by promotional spending, it maybe has less impact than visitors who are coming and spending a lot of money. We'll have to wait till earnings to find out how this breaks down. Is it breaking down with gaming or in food and beverage, in entertainment?
Concerts.
And that's a big one. Right now, they're not even breaking out entertainment as a spend when they analyze the numbers. They're looking at shopping, for instance. Are they coming and shopping? And the other thing that we're seeing is overnight visitors are not growing as fast as day trippers. So that bridge from Hong Kong to Macau made a huge difference for people coming just in a day. One more thing to point out here. You're looking at shares of Melco up 12%. Its 3-month performance has been remarkable, up 50%.
Melco Crown they're looking at? Okay, look at Melco. Melco.
MGM Resorts up almost 8%. But I want to point out, even
Melco Crown. Wow, look at that. Melco Crown.
to be a lot of enthusiasm, ebullience potentially around.
Because all we wanted to see was a little bit of activity, because all of these stocks have been just dead for the last year and a half. We all expected that when they opened their country, that from COVID, that they would see better trends, and they just haven't. So this is the first real meaningful number.
Even when they showed in earnings that they can show enormous growth year over year. Singapore is on fire, back to being by far the most lucrative hotel, casino, resort in the world, and yet Las Vegas Sands is just, its shares are not demonstrating any of that.
So obviously today's move is on Macau. We know that. And that has been the driver for these stocks. Steph, your Las Vegas Sand and my win. But what I submit and had been saying for quite some time, that it's far more than just Macau. There's very little respect given for the growth that's been going on in Las Vegas, in Boston. Now, granted, there's been some decrease, you know this, in the average room rates and such like that, but it's still very
Okay, looking for NVIDIA to follow through.
Conception that they won a few years ago and that they're building right now, which should be online.
Apple turning back up. Apple turning.
That's granted 18 months away, but that is not in the stock. And Dubai is a major growth area. We know that because Disney's going there as well. If you
Okay, Broadcom looking for that pop.
people can travel to in a very short notice.
Broadcom. Looking for the pop in Broadcom.
Is actually tied to Macau, 40% to Singapore. So they got nothing else. And so I was just hoping that you would see a recovery in Macau, while Singapore actually could drive some of the earnings growth for the company. But really cheap. This whole sector is very, very cheap.
And for the both of you, potentially the next catalyst could be that the analyst community comes around. Yeah. They raise the sentiment and accordingly raise price targets. Because if you look at when the 12-month price target's only 104, the stock is at 101 right now, and Las Vegas Sands is 49. The stock is close to 48.
Quarter after quarter, they put up good results. Quarter after quarter. And it's just not believed by the analyst community. Yeah, I can hear it on the conference call questions. It's just not believed it's going to continue. You're absolutely right.
Might you have to add one of these names on the momentum? That's a little bit way off because we also look at quality as well. Why do these fall short then?
They fall short on the quality metric because of return on equity and debt to equity.
I don't know. That sounds like
Las Vegas Sands.
Apple turning up. Apple trying to get back above the high. Bullish day, follow through after yesterday's break above the 50-day. All right. Watching Tesla climbing off the low. Apple, Amazon. Okay, most of the New York FANGs have seen short covering. Depends on how far that goes. S&P is hanging in there. S&P is hanging in there. Okay, we're still looking for this hedging flow to start to turn up more. Hedging flow, looking to see some more up here.
Of a 1% to 1.5% gain in the S&P 500. Now, we saw between 125,000 to 145,000 jobs, there's a 25% chance of up to 1.25% gain for the S&P 500. Now, the data showing a gain for the S&P 500, so long as jobs come up above 105,000, Below that, we
Qualcomm
are looking
coming
at
back in,
second
maybe
price.
take a
So
little profits.
maybe we're taking a
Qualcomm.
look at some of the probabilities of this playing out, and then the expected move. And here's what's also on investors' minds, especially as they're weighing through a myriad of different data prints on the jobs and employment situation front over the course of this week, as we'd already gotten jolts out earlier today. And we're still going to get ADP private payrolls. The larger question going forward for the employment situation is, are there enough areas to signal to the Fed that there is severe weakness that forces them to act prior to September? The market's still looking for about 50 basis points of cuts going into the end of the year. And with that set to kick off in September, based on some of the analysis and probability on the CME Fed Watch, well, that would mean that they would need to lock in a trend over these next few reports, and going into their July meeting, they would have to change that tenor a little bit more aggressively, perhaps. But we're also got fresh commentary from Fed Chair Jay Powell, who's speaking overseas in Portugal today.
Okay, looking for NVIDIA to
It's
continue
not just
watching
the one
Broadcom. I'd like to
situation
see
folks
these
can lock in on,
chips
it's
move
also
higher.
what could impact the economy more broadly on a more longer term scenario, and giving some slight commentary on the tax bill that's also making its way through Congress right now. So, all that said, we're going to be locked in Thursday this week for some breaking data on the jobs front with the employment situation. Well, job openings increasing unexpectedly in May, rising to a 6-month high at nearly 7.8 million openings, suggesting more confidence in the labor
Low
market.
tick alert minus 800.
U.S. manufacturing remains somewhat sluggish in June, suggesting tariffs are having.
Our senior markets commentator, Mike Santoli, is at the desk today. Pretty obvious what's happening within the market today, but what do you make of it?
Yeah, I mean, obviously, it's just mechanical kind of torque in this repositioning of, we did have a big run in the stuff that worked at the end of the quarter. And so you get some reversal of that. And I think it somewhat reflects that if there's something this market has to answer for, it's not been the broadest, most inclusive run to the highs. Now, it's not that it's just a few stocks, but it's been selective, and it's like only 50% of all stocks are in an uptrend and all the rest of it. So there's an opportunity for the rest to do a little work and catch up. I don't know if it's, the start, we never know if it's something. Heavily shorted stuff, laggards, all of it getting picked up. We'll see if it matters. What's interesting, too, is the pop in yields really was after jolts. So 10 a.m. is when you got that boost. Who knows if that's really a number that we should hang our hat on in terms of the job openings going up? It's not unwelcome, but it sort of complicates how people were leaning.
United Health pulling back a bit. United Health
Racing for a weak jobs number on Thursday. I don't know if it was because you're reading clues or just, hey, you never know. One of these monthly reports might actually lay an egg.
I think the market participants are going to err on the side of almost always that what you're just looking at and what you just said, the jolts being better than expected, the yields being up is a sign of a stronger economic growth coming rather than the bond vigilantes going crazy over a tax bill.
I agree. It's almost always going to be the case, especially when you're starting at 4.25 and people have been playing the lower yield trade for a little while. So it's really, again, just forcing traders to move their feet a little bit relative to what they were expecting. So maybe not a big deal, but something to keep in mind as we get toward Thursday.
Okay, good stuff. I'll see you on Closing Bell. That's Mike Santoli. We're back right after this. More trades.
Down investment, they slow down spending, they slow down capital allocation, they slow down M&A. So we've still got this overhang.
All right, hedging flows starting to turn up again. Hedging flows.
July 9th, we should put some noise up on Japan this morning, but as long as that overhang is there, we still think we've got a sort of dampen sentiment everywhere.
I want to stick with you for a second, Paul, because I was taking a look at one of the notes from Apollo Chief Economist Thorsten Slock this week. It said when FOMC members produce their forecasts ahead of Fed meetings, they are also asked how they view the risks to inflation and unemployment. And one of the net takeaways that this is a Fed that is worried about stagflation right now. Why is stagflation now one of the core worries for the Fed, and to what extent are we placing probability around the reality of stagflation playing out?
Yeah, we're not really in the stagflation camp. We are going to get a rise in inflation rates because the tariffs going to lift the price level, but that's not really a driving force on inflation higher. So I think we're still in this kind of traditional world. The signals are very noisy, right? Because you are going to get a rise in inflation and a rise in unemployment, and that's kind of stagflation. But we think we're going to look through, and the Fed's probably going to look through the jumps from the tariff versus any underlying inflation trends. We still think the next rate's down.
How can investors position their portfolio if we did see stagflation play out? What are perhaps the stagflation positioning in the portfolio?
Stagflation is kind of like the worst of all scenarios. Now, I'm with Paul. I think technically, if you're looking at higher prices and a slowing and a stagnant economy, that's stagflation. But I think when the term gets thrown around, we're nowhere close to what true like 70s style stagflation. Correct.
And can I jump in on the back of that? And the other thing we're seeing now, the positive thing that we didn't see in the 70s is productivity growth. Remember, the last couple of years, the U.S. has been hitting the ball out of the park relative to the rest of its peer group. Strong productivity growth, strong new business formation. So that's not a recipe for sort of supply side weakness. That's really a stagflation issue. So I don't think that's really on the table.
You talk about that productivity growth, and one of the questions that we've had for several jobs reading about, perhaps for a couple dozen, is where we might see AI start to show up within that productivity growth as well.
Yeah, that's kind of a big, even economists, even really smart economists, have got this huge range of outcomes, right? The current Nobel laureate is close to zero for the effect of AI on growth. Some of the more, bullish guys on the street are 1.5% increase in growth over 5 years. Some of the, the IMF or OECD are in the middle. We just don't know. We know it's positive. We don't know when it's going to show up in the data and for how long it's going to last. But it's got some potential. I wouldn't be watching kind of the month-to-month, labor market data to see if one of that's data. I think it's just a longer-term kind of trend. But it's definitely positive.
Even if positive for productivity, it's still positive for overall headline jobs growth.
Yeah, well, that's the thing. You can productivity go up on people or it's spending the time on it more. So that's the big thing with AI. Productivity is going to go up. I mean,
All right, let's talk about more second half forecast. BTIG has one today. The top stocks or their top picks for the second half: Starbucks, Fiserv, Capital One, Snowflake, AppLovin, Expedia. On that list, Chubb T has Capital One, AppLovin, and Expedia. Of those three names, I like Capital One the best. I like Steph's point as it relates to the financial sector. I think the financial sector remains strong for the remainder of the year. Obviously, with Discover, that conglomerate now is one of the largest competitors to Visa and MasterCard as well. So I think Capital One is the one name I would look at. AppLovin, a little suspect in terms of the way that it has traded recently. Never really, despite the market rallying so significantly, ever able to take out its February highs at Expedia. That's really been underperforming for us, certainly relative to booking holdings. And you think it still will? Yes. Because, I mean, look, though, this is emblematic of today's trade. Laggards to leaders, yes. Yes, and you just think it's a one-day phenomenon. I think booking positioning, I think booking holdings clearly is in a much better position. All right, Snowflake, Steph, mentioned on the list.
Yeah, it looks like a great year. You're up 40% year to date. New CEO is executing. They have launched 125 new products, and product revenue growth last quarter was 28%. They guided for 25% with margin expansion and free cash flow accelerating. So the story is happening. This new CEO is delivering, more than delivering. It's a nice run, though, and it's not cheap. So I certainly would not be chasing it.
Josh, you sold Starbucks a few months back, but it is on this list. You still have any thoughts? You still follow the name? What would get you back into it? I like it. I mean, I was in it on a trade, on a technical trade, but fundamentally, I like it. I think the stock's been consolidating the entirety of the post-pandemic period. It had two major overhangs. One was inflation and getting the pricing right, and then the other was China. The inflation thing, I think they can get to a little bit easier. The overhang of China, whether that's still going to be a growth engine or not, is still an open question. But they have the right CEO. I think he's going to figure it out. I like the name fundamentally. I'm just not in it right now. Okay, we'll take a break. We'll come back for one final sentence.
2025 has been a wild ride for bank stocks so far. An index tracking the banking industry has recovered nearly all of the ground lost back in April, and it's now near its February highs. And joining us now with a closer look at the factors driving the industry, we've got banking reporter David Holliman. David, what do we know?
So, Brad, U.S. bank stocks have kind of performed like the broader market indexes, after seeing February highs. Sort of peak fears happened in mid-April, tariffs and recession fears. And since then, things have gotten a lot less stressful. There's also been this kind of like ongoing or growing, I guess, narrative about deregulation.
Okay, NVIDIA continues to climb.
So I think investors are feeling pretty good going into earnings. That being said, some bigger banks are already sort of at their peak prices, and the investment banking market is still not quite what was hoped at the beginning of the year. So that's going to be something we'll be paying a lot of attention to in July.
And also,
Okay, I hope you guys can, for those of you that are new traders, I hope you can see the strategy I'm using here. Okay, utilizing Lux Algo's buy order blocks. We see a buy order block here at the low of the day. You know that I love to buy dips. We've got a higher low, so that's a BC pivot. You get a buy order block. You set your profit loss. Okay, thinking of it more of 2-to-1 versus how much money can I make? How much capital? Take the emotional dollar amount out of the trade setup, and just look at the setup from the perspective of, okay, I see a buy order block. Let me put my stop underneath that. Where's my entry? Right in this area. And what's the possibility? How far can this go? Okay, I'm looking at the supply overhead. That's my target, and I just place my entry and my target there, and it gives me 2-to-1. Okay, I got a 2-to-1 set up there. On Qualcomm earlier, Qualcomm, that's coming back, by the way. You might want to take some profits in Qualcomm. Okay, Qualcomm was a 4-to-1. Qualcomm was 4-to-1. It wound up giving you 7-to-1, very close to 7-to-1 before retracing. Qualcomm is a trade that we'll continue to go with. The same setup. We went sideways. Instead, we went sideways, and then we got a buy order block. Buy order block, place your stop underneath the buy order block where your entry is. Extend that up to the target. Earlier, this was supply. We made it above supply, so we had a short squeeze. Dealers having to buy shares, so it ran up, and that produced the risk reward over here on the right, 7-to-1. Same idea. Buy order blocks. We're bullish. We're looking for a follow through, and all the New York Fangs are turning up. So it's going to be hard for the S&P to just completely die here. Hedging flows still making higher highs and higher lows. Hedging flows on the S&P. Okay, Qualcomm pulling back. Okay, watching NVIDIA. Okay. So do we make it all the way up to this high? I don't know. It all depends on the S&P. S&P is bucking the trend for now. Broadcom, same idea. Buy order block, looking for this to go through and continue higher. Okay, still waiting for this to take off to the upside. Okay, the stop can be here underneath this buy order block. Okay, Amazon, same idea. Amazon, it's more of a consolidation, but you got your buy order block, you got sell order blocks overhead. So it's probably, Amazon's probably going to ping pong between these two levels. Okay, Amazon, Google with the dip this morning. Okay, Google with the dip. Looking for buy order blocks. There's no buy order blocks, so I'll stay away from Google for now. Netflix turning. Okay, pretty obvious turn. Okay, people throwing away shares, it looks like, got scared. Now we're turning back up. Still no buy order blocks. Potential upside. All depends on the indices now. What is Supermicro doing? Supermicro. Okay, Supermicro earlier. Buy order blocks ran right up to supply. Okay, so I missed this one, but I have shares anyway. So ran right back up, trying to get back above 50. The highs of the week over there. Yesterday was 50, 50, I believe. Looking for a follow through here and watching NVIDIA. Watching NVIDIA. Okay, watching NVIDIA. See if that can follow through. Buy order block. There's your target. 2-to-1. Risk reward. Probably one of the top stocks for people to buy dips. Okay, I'll be right back.
Gene Munster too. Apple, Tesla, markets, tech. We'll do it all. And I hope you join me then. Josh Brown, what's your final? Amazon. Mark Mahaney just took his target to 280. I think he's gonna be right. Is that you too?
Second day in a row. Amazon, yeah. I'll give you another one. American Express. I agree with Josh on Amazon and American Express.
It was not the second day in a row. Yesterday was bad.
Yeah, yesterday was bad. I don't believe it was the other day that I have the same one.
Sorry to bring it up. Yeah. Farmer Jim,
Citigroup 13% more until it gets to tangible book value.
Okay. And Steph, must be Chipotle.
Chipotle, new products are coming.
All right, good stuff. Thanks, everybody. I'll see you on the bell. The exchange is now.
Thank you very much, Scott. Doge could be coming for Musk. Tariffs killed rate cuts. And a serious reversal from Apple. Welcome to the exchange. I'm Kelly Evans, and stocks are mixed as we kick off the second half today. With the S&P and NASDAQ coming off 2 straight record closes, big tech lagging today as the semis are lower and the Mag 7 mostly is too. Speaking of the Mag 7, Tesla getting hit is back below the $1 trillion market cap as his feud with the president escalates. We'll have more on that ahead. The shares down 4.5% at the moment. But let's begin in Washington, where the Senate has just passed the president's big, beautiful bill, with J.D. Vance casting the tie-breaking vote. What does that mean for its passage in the House? Emily Wilkins is live on Capitol Hill. Emily?
Hey, Kelly. Well, yes, the Senate did pass.
Multi alert -800.
Of course, that $1 trillion tax portion, a very narrow vote. You had 3 Republican senators voting against, but as you mentioned, J.D. Vance was able to come in, break that tie. It now heads to the House. The House is already starting the process. They're getting it through a committee today with the hopes that this can pass on the floor tomorrow. But of course, there's a lot of questions as lawmakers try to digest what is in the bill. There were some changes that were actually made just before that final vote. And this includes a couple different things on solar and wind. They actually took out that tax that would be put on the projects if they had supply chain components that were tied to China. And it also does expand that timeline just a little. Projects about a year to start construction to qualify for that tax credit. Senators who I spoke with said, hey, it's not everything we wanted, but they felt it was a good agreement between those who are pushing for the tax credits and the fiscal hawks. Now, of course, we're chatting with lawmakers there again, looking at the tax. We've already heard some concerns from the fiscal hawks in the House who are worried about the cost of this $3.3 trillion bill. That's the amount it would add to the debt over a decade. But you had senators say, look, we think it's probably going to pass in the House, but they will likely need some time to digest and deliberate this. Listen to what Senator Cynthia Lummis, who just a few years ago was a House member herself, told us just a few minutes ago.
Yeah, I encourage him to take a deep breath, look at the bill carefully. Hopefully we didn't change it so much that they can't support it, but it's going to require their careful attention.
We'll be keeping, of course, a very close eye on the House in the next 24 hours. Maybe it's the next 48 hours, but it does seem at this point as they will be able to get this bill to Trump's desk by July 4th, so long as all of the potential holdouts eventually decide to go along with the bill. Kelly?
Yeah, we were speaking with a guest yesterday who thought that late July was a more realistic timeline. So I can't tell, especially with how close this was, if that timeline is now slipping or if it's actually maybe really going to happen by July 4th.
Well, Kelly, as always with these types of things, there's going to be some negotiation. And if you're Speaker Mike Johnson right now, your number one goal is that whenever you negotiate, you do not change that language in the Senate bill. If the House has to make certain changes, then it's got to go back to the Senate and then it goes back and forth. That is the thing that GOP leaders have wanted to avoid this entire time. So as they negotiate, as they talk with members, that's going to be a very big goal for leadership, because if they do find that they have to change the bill, there's no way they're making that July 4th deadline.
Right, totally. All right, Emily, thank you for now. We appreciate it. Emily Wilkins. Now that the bill has passed the Senate and heads back to the House, how many hurdles will it face? What does our next guest think the timeline is? James Lucier, Managing Director at Capital Alpha Partners. I'll let you just pick it up right there. James, good to see you again.
Well, it's always great to see you, Kelly. I'd like to let you know that I put in a special word for you, and I told the senators they needed to get that bill done before 1 o'clock so that we can talk about it at the top of the hour.
I was thinking that when I saw it.
On Capitol Hill.
The news just fell right into our laps. So what does this tell you with how narrowly it passed? You've got some of the groups out there saying it's not even going to pass the House's reconciliation rules because now it's been $600 billion too much. What's going to happen?
I think it probably will pass the House. I can't guarantee you that. But the fact is that people are tired of this. They want to get it over with. Senators were in session from 9 a.m. Yesterday until just about now, until 1 o'clock. And it's a marathon session for them. The House guys have also been tracking this. I don't think anyone in Capitol Hill has gotten much sleep. Early this morning, the Ways and Means Committee Chairman Jason Smith was on the Senate floor talking to senators and reviewing what they were doing in the tax title. So I think that the odds are pretty good that this will get through the House. I would want to pick up on something that extension for renewable energy tax projects. It's not a little extension. It's a gigantic loophole. Essentially, any project that qualifies as starting construction in the next year will now have 4 years to complete, even longer. So that hard deadline of 2027 is not in the bill anymore effectively. And that will be something that does give the House guys heartburn.
Sure. What else? I mean, there are some of the Medicaid, I think about the SALT issues, the Medicaid issues, all these areas where the vote was very, very tight and contentious. What happens there?
Well, you could look at the issues where there's contention, and it's funny that this is a Senate bill which is actually tougher on Medicaid than the House bill was. And at least in the draft we saw over the weekend, it was actually tougher on renewable energy than the House bill was. I think the major problem of concern on the House side is going to be the size of this bill. It's about $700 billion more expensive. It adds about $700 billion more in debt. And that's really the key issue for the House Freedom Caucus guys, even though most of that debt comes from positive things, such as making key business tax provisions permanent, bonus depreciation, expensing R&D, and of course the interest expense deduction.
Are you excited for our new third party that will evidently be launching if this passes?
Oh, always very excited. Of course, they've only got 2 cloakrooms in the House and Senate, so they'll need to build a third one. It's the same way as President Trump is building a ballroom in the White House.
That's right. We literally don't have the well, when Musk comes out and criticizes the bill the way that he's doing, and he says, focusing on the debt and deficit issue, fine. Even though I'm not sure what his issues would be, he also is against some of the cuts to the clean energy. So if those were restored, this would be even worse for debt and deficits. The bond market is totally shrugging it off. And if you were to go to the heart of why it's so expensive, well, then that means letting the tax cuts expire, which could raise taxes on lower income Americans. Isn't just a high income thing. So
that's true. About 2.2 trillion in the total load would have come from expending or extending the individual tax provisions, which is something the Democrats were probably likely to do anyway. They may have changed corporate provisions. They may have raised taxes on higher earners. But, the core provisions, the child tax credit, the working class, middle class, even people making up to 400K, those people probably would have gotten an extension anyway. So to that extent, it is not something that the bond markets weren't anticipating or should not have been anticipating. But the reality is that there's a lot of what they call member priorities in this bill. We would call it pork. So the bill is doing something necessary. It's doing something the market expected. I think the corporate provisions are actually really, really good. But the fact is there's so much additional stuff in there that there's a legitimate case that this is something we can't afford right now.
I guess my question to Elon Musk would just be, well, then what do you want to come out of this, right? And which of those, even if it's all the port, is that even meaningful enough? We've changed the trajectory.
Credits. They saved $280 billion by taking out the EV tax credits, although they left in Section 48X, which supports companies making batteries for EVs. That's a big deal. There's still a lot of policy support in there for the EV industry. I think Elon is trying to have it both ways. He said that I'm an innovator, I can figure out how to live without the tax credit, but now that he's back in industry, he's saying, well, I didn't need the tax credit after all. This is bad policy.
Right. No, I agree. And so we'll see just how meaningful his criticism is as this tries its narrow passage. Real quickly, you think July 4th is feasible or no?
I think it is feasible. I think that it's not guaranteed. There is the reconciliation issue that you mentioned. But I think there's a really, really strong will to get this thing done, simply because the longer they fight over it, the less possible it is for anyone to be happy about it.
All right, James, thank you very much for making the time today and for telling them to get it done by 1 p.m. James Lucier with Capital Alpha Partners. The president did address Elon Musk's criticism of the spending bill outside the White House before departing to Florida this morning.
We might have to put those, Elon. You know those? Those is the monster that might have to go back to Elon. There's a lot of subsidies there. But Elon says that the EV is going to be tremendous. And you know what? When you look at it, not everybody wants an electric car. I don't want an electric car. I want to have maybe gasoline, maybe electric, maybe a hybrid.
And those comments are weighing on shares of Tesla, which are down 4.5% today, continuing their slide. They're on track for a 6-day losing streak, which is the worst since February. We're down about 13% at this time. Tesla has now overtaken Apple as the worst performing Max 7 stock this year. It's down 25% to Apple's 17, and Tesla is back below $1 trillion in market cap for the first time since early last month. Let's bring in Steve Kovac for more in today's Tech Check. Steve, is this back and forth between the two heats up, and Musk is doing it regardless, it seems, of the market impact and maybe of the impact on the company as well?
Yeah, here we go again, Kelly. And Musk, by the way, mostly criticizing the deficit and debt spending aspects of that spending bill that just passed. But look, he's also threatening to fund primary campaigns against the Republicans who vote for it. We'll see if that actually happens. But beyond that, there's a lot in this legislation.
Hedging flows continue to rise. Note the hedging flows continuing to rise.
Escalate between Musk and the president. The government has even more tools to make business difficult for Musk. We heard the president teasing that just a second ago. Now, since 2003, Musk companies have received about $23 billion in funding from the federal government. Most of that, of course, from NASA paying SpaceX for rocket launches. This is according to the Washington Post. And Wired reporting and estimating in June that Musk's empire stands to miss out on $48 billion in federal funds over the next decade if Trump decides to cancel all Musk-related contracts, also as he's threatened to do. And this morning, Trump implied Doge, like you just played, could turn against Musk and cut those company contracts. And on top of that, the president also said today the real reason Musk is upset is because aspects of this tax bill cuts to green energy and EV tax credits. In that bill, it eliminates the tax credits for EVs, which of course is a big draw for those Tesla buyers and other EV buyers. And then finally, you have robo-taxis, and things escalate from here. NHTSA can actually take a harder look at Tesla's robo-taxi emissions. It's already looking into reports of robo-taxis malfunctioning in the tests in Austin over last week. And maybe Musk sees this risk. He tweeted out, Kelly, that he is not going to escalate the fight, at least for now.
Well, I mean, he's escalating it nevertheless. And it seems we have these reports as well. European sales are falling. Now he's replacing. I think he said the people who left, he's going to take over some of the sales and issues there. But it's kind of the work. You have people who are so upset with him and upset with the brand because of his work with the administration. And now the administration's also unhappy.
Yeah, it's That's exactly right. And that's why you see Trump threatening to turn Doge, his own baby, against Musk and potentially cutting some of these federal contracts that Musk has. And that's where so much of SpaceX's value is tied up, because with NASA, abandoning the shuttle program and still working on its own stuff, SpaceX is really it for as far as space launches go here in the United States. And then also all the regulatory things. And you were talking about this a little bit earlier, this idea that Musk kind of knew what he was getting into, this idea that, okay, the Republican Party is kind of anti-EV, anti-green energy. And I don't know what he was thinking getting into this, but a lot of that stuff made it into the bill, and it's already going to make it more difficult for Musk to move forward. And we'll see if he follows through with these threats to start a new party or fund primary campaigns and so forth.
All right, Steve, thanks. Steve Kovac for Tech Check today. For more on how to trade Tesla in the second half, let's bring in Dan Levy. He's Senior Equity Research Analyst at Barclays. And Dan, how realistic do you think some of these threats are? And what's some of the real impact of the business in the form that it's just going to have on Tesla's company?
Yeah, thank you so much, Kelly, for having me. I think the biggest thing is the removal of the EV tax credit. Now, this is something that was anticipated even around the time of the election outcome, that the EV tax credit would go away. The current iteration of the bill has it going out a little earlier than what we thought, September 30th versus the end of the year. It's just a reminder that you are going to have a pre-buy of vehicles likely into that September 30th deadline, assuming all of this holds. And then after that, there could be a fall off. And that's on top of what was already sort of sluggish demand for Tesla to start the year.
So the last time people can get the $7,500 EV tax credit will be when?
September 30th is the understanding.
Do you think that's going to cause at least a near-term demand boost?
Yeah, so there probably will be a pre-buy as people are aware that this deal is going away. We've always said that one of the best deals out there on vehicles is that anything that's getting that EV tax credit, especially if you're seeing lease penetration on EVs is, north of 50 or 60% for a reason, because you don't have any of the restrictions that you get with the core EV tax credit. And that's why some of these EV leasing deals are exceedingly attractive. Think of Teslas that at any given point in time, you can get a Model 3 for $299 or $349 a month.
I would say exactly. I've seen those deals. I've seen people talking about this turning into like the used car parking lot. But I'm glad to hear the numbers, because you do wonder if it would be a time to pounce. Although again, this is all kind of maybe a last chance here. So then, what happens with the business? If there's no real threat that regulators are going to look further into robotaxi or anything like that now, but you have to imagine at least that overhang does remain with the stock.
Well, something we've pointed out with the fundamentals, and first of all, I know that people will say fundamentals don't matter, and that doesn't seem to matter with the stock where you see where the multiple is. That tells you that it doesn't matter, what they're. But we do think that we've seen in the past with Tesla, fundamentals don't matter until they matter, right? So we're going to see deliveries. It is going to be a reminder of how sales have lagged. It's a reminder that this year, more likely than not, there will be a
Hi, Took Alert plus 800.
This new model, which was supposed to be a 1H launch, and past 1H, we haven't heard anything about this new low-cost model. The other thing that we said is just remember that the fundamentals are responsible.
Time for a Dr. Pepper.
Next-gen efforts in AV, in Optimus robots, right? And so with a weaker near-term business, that takes away maybe from some of the funding opportunity or the stream of cash that can go toward these other things.
All right, you still, I believe, have a negative view on the stock. Is that right? We'll wait. 75 price target?
Correct.
Okay, and so we'll see then if there's anything that can kind of change that one way or the other. And in the meantime, do you think he significantly can change the course of, for instance, the European sales with all of those problems?
Europe has been quite challenging, and that's probably where you're seeing the bulk of the brand issues, right? Europe is tracking down some 35% year to date. US and China are also tracking down, more modestly. But Europe is where you're seeing more issues. We did hear some good headlines on Europe for June, but the reality is Europe is a tough market for them. The benefit that they will have is you do have EV regulations that are intact in Europe, so at least they can continue to sell their and generate credits, which they can then sell to other automakers, and that is a helpful source of income.
All right, Dan, appreciate it today. Thanks for joining us. Dan Levy with Barclays. And as he mentioned, we'll get those second quarter delivery numbers from Tesla tomorrow. Analysts aren't feeling too optimistic for all the latest forecasts and what each firm is watching. Just scan that QR code or head to cnbc.com/ProPick. Coming up, Fed Chair Powell today said the FOMC would have cut rates by now were it not for tariffs. What does that really mean for the Fed's next move? We'll talk about that next. Plus, Apple rallying in the final hour of trade yesterday on reports of a major
Hi, took alert plus 800.
In fact, to stop a 3-month losing streak. So is it the start of a comeback or not? More after this.
This is The Exchange on CNBC.
Okay, time for a Dr. Pepper. Okay. Dr. Pepper time. Okay. Looking for the breakout. All right, the hedging flows around here are still pretty sticky. Hedging flows are pretty sticky in this area. Okay. Let's see if we can't get something going here. S&P 500. Trying to get something going. 60 minutes still on a buy. We got tick cumulative green. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Tuesday, the 1st of July. Hedging flows still rising, higher highs, higher lows. All right, looking for the markets to break out. It's almost a cheat. It's almost a cheat to see what hedging flows are telling you, right? Watching that purple line. Okay, that continues to climb. It's putting pressure on this over here. Okay, this red, this 6,200 level. 53 million in negative gamma. So if we get above that, I would imagine we'd see some short covering. I imagine we'd see some short covering. We're pushing up against the highs of the day right now.
Hi, took alert plus 800.
So I think that's right. In fact, we saw the size of the tariffs and where essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs. So we didn't overreact. In fact, we didn't react at all. We're
Okay, so is he still talking over there? He's been talking all morning.
We think the prudent thing to do is to wait and learn more and see what those effects might be.
That was Fed Chair Jay Powell speaking at a panel with central bankers over in Portugal earlier today. Comes as Goldman has upped its rate cut forecast, going from 1 to 3 cuts this year as they see a muted impact from tariffs, the very issue he was just addressing. So should the Fed be cutting already? My next guest says not so fast and thinks they'll stay on hold all year long. Katerina Simonetti is executive director and private wealth advisor at Morgan Stanley.
All right, we're starting to rise now. Okay, S&P is about to break out.
Has been extremely confusing for investors. Opinions have been all over the place, but we're largely in line with
Okay, we're starting to move a bit higher now. Okay, see if we can't break out here and get some shorts to cover.
This wait and see attitude as they communicated very effectively. They have to see the tariff policy play out, and they have to see actual effect it's going to have on inflation. So we're not expecting rate cuts for the remainder of the year, but we are expecting rate cuts in 26 if we see inflation, get to the Fed target of about 2%. But of course, there are other components that can affect the situation. For example, if we see high unemployment numbers, if we see the economy data slowing down, they might be.
There's some sort of weird
Okay.
crosscurrents going on in financial markets right now. I mean, look at rates. We have
Come on, let's go. LATSGO, let's go. Beautiful.
Budget bill, and even as that's happening, the dollar keeps weakening. So you think, well, if people are continuing to sell the dollar, then shouldn't they be continuing to sell treasuries, which would drive those yields up, not down? How do you kind of explain all of this?
Well, it seems that the market almost wants to will this rate cuts into existence. The fact is that, that we are given the hand that we're dealt, and we look at the earnings, and for the most part, earnings revisions are positive, and we see High took alert plus 800. Despite April, are finding ourselves in this new market that is going to continue.
Okay, we're pushing higher. High tech alert. Okay, looking much better. Much better. Thank you very much. Snowflake. All right, Broadcom, no follow through on Broadcom. So that's lagging a bit, but everything else is turned up a bit. Apple looks good. We've got Microsoft turning back up. NVIDIA looking for higher highs. Broadcom not participating yet. Snowflake turned up. Meta looks good. Google, Broadcom. Okay, Qualcomm still consolidating at the highs. Qualcomm. S&P watching for a pop. Maybe take out some highs here.
Earlier this year, we're going, wait a minute, this is 20% more expensive now. The euro's quite high, and now you have European bankers, I believe, this morning talking about the need to cut rates if that persists because it's a headwind for their exporters. So, so what are
okay, I sold some more S&P. 6220s. Keep scalping the markets as we make a higher low. Each time we make a higher low, it's easy to scalp these for the most part. They could last for 2 minutes, 5 minutes. I'm not posting a whole lot. I'm just telling you what I'm seeing right here is it's as long as this dealer hedging flow keeps making higher highs and higher lows, I would expect the markets to continue. And I'm looking over at the New York FANG components, 10 of them, sorry, all moving higher, except for, I take that back, 9 of them moving higher, except for one. Broadcom looks like it's gonna dip out of a bear flag. So
plus 800.
Okay, so more high ticks. Okay, looking for that hedging flow to turn back up. Okay, UNH. It looks like a B pivot on UNH. Okay, UNH has been doing good. We've had UNH bullish today. UNH. Okay, so we know what we potentially have here on UNH. Okay, so this time of day, you're not always going to get prices to hold at the high of the day. You're probably going to get some B and C pivots. Okay, so there's your B pivot right there. It's sitting on top of VWAP. Do we make a higher low and then take off? If today's the breakout day and we start trending on UNH, I'm above 320, so I'll start adding to this. Well, I'm not going to do it right this minute, but I'll be looking for more upside in UNH. Watching the S&P, watching this hedging flow. Okay, watching the hedging flow on S&P. Like to see that turn up again. Can keep scalping these S&Ps.
we're up against this resistance area over here. Okay, that negative delta. So do we keep going? Let me turn. Okay, so that's even bigger on the removing 0 day. It's even bigger. Okay, so that includes 0 day. Let's see. No, it doesn't. Okay, let's see what this looks like. Okay, so at the low of the day, we came close to testing the Captain Condor put side. Now we're trying to test the call side. So both sides getting tested today would be kind of cool, right? Captain Condor, that means Captain Condor will probably come back in tomorrow with about 50,000 contracts if both of these or one of these gets tested and we move above the 6,200 level, wherever his strike is, 6,210 or whatever it was. Okay, check the gamma channel. That's what I'm talking about. Looking for a B pivot on the S&P, not happening yet. S&P is not giving it to us yet. Watching that delta flow, hedging flow. Oh boy. Everybody having a good day? Looking good. Looking good. Okay, so we're just kind of sitting here at the moment. There's a lot of gamma right in this area. Not surprising that we're holding on right in this area. You can see this gamma over here on the left. Kind of sticky right in this area. I don't think we're going to get above 6210. But if we do, if we start to charge higher, I mean, there's a probability that we continue to move higher. Everything I'm looking at is more bullish than bearish, except for maybe a couple of negative things like junk bonds have shown some profit taking up there. Junk bonds showing some profit taking. Okay, and we continue to see profit taking. So we could see junk bonds come back to the 20-day. It wouldn't be a sell as much as it is a profit taking signal, right? So watching for a follow through. Okay, looking for a surge higher. Hopefully the S&P can push a bit more. UNH. UNH. Okay.
Check out some of the biggest casino gaming companies out there. Shares of Las Vegas Sands, Wynn Resorts, and MGM Resorts among the best performers on the day in the market.
Elvis.
New data out of Asian gaming.
Whoa, look at Elvis go. Elvis. Elvis, you got your B pivot on Elvis. If you try to take Elvis, we were looking for 46. Didn't get that far back. Elvis, Wynn Resorts, all of these at the highs. Okay, Wynn just gave you a little pullback. Wynn Resorts just gave you a pullback. Okay. Still up quite a bit on the day. Up 8.5%. Wynn, I bought some Boyd Gaming, Boyd. Looking for that to follow through. Boyd Gaming. Breaking out. Boyd Gaming breaking out. It's up 2.5%, almost 3%. Volume looks good. Cheap implied volatility for the calls. If you're thinking about buying calls, they're cheap. Certainly cheaper than some of these big tech names. Microsoft starting to show bear flag breaking.
Watch those. And we'll finish off with shares of drone and robotics maker AeroVironment cooling off to the tune of 8%, now 9% in today's trade after a roughly 50% surge in just the last 4 sessions alone around its optimism on its quarterly report. Today, the company has filed paperwork
with regulators.
Okay, you can move your stop up underneath this area here, 183, 153, sorry, on NVIDIA. We'll see if we get another buy order block. If we get another buy order block, that's going to be good to see.
The Trump administration has been blocked from moving forward with plans to overhaul the Department of Health and Human Services. A federal judge today issued an injunction at the request of a group of Democratic-led states that challenged the department's plan to consolidate agencies and fire 10,000 staffers, arguing that the overhaul was to dismantle key HHS programs. NBC News projects New York Progressive State Assemblyman Zohan Mamdani won New York City's Democratic mayoral primary, beating out the former governor Andrew Cuomo. The projections come as the New York City Board of Elections released the initial round of voting results that put Mamdani ahead of Cuomo by a 12-point margin. And Columbia University will pay $9 million to settle a proposed class action lawsuit over its U.S. News and World Report.
Oh, boy.
In the lawsuit, students said
So my friends, I have some friends that work at UBS. They're talking about moving down to Miami, getting out of the city. You know, they make like $300,000 a year doing what they do. They're talking about moving while they still can, while they can still sell their real estate. Okay, looking for higher lows, Okay, keep an eye on the hedging flow here. Okay, hedging flow is turning down a little bit, but that doesn't mean it can't make a higher low like it did over here at 12 o'clock. Looking for a higher low and a push higher high, and then have this pop through this area. That would be nice. So if you're thinking about scalping S&P, it's been a pretty good scalp session today off of this low right here at 11 o'clock, taking profits. The next dip was 11:45, taking profits. Next dip was right here, taking profits into the last pop there. Okay, so S&P, I'm done with S&P for now. Pretty decent day on S&P. UNH having a good day. All right, I'd like to see UNH close up here and then follow through tomorrow into Thursday. Thursday, last trading day of the week, July 4th, Friday. All right. Let's see what gamma looks like. Gamma. Okay. Some negative gamma down here below. A little bit of negative gamma right where we are right now. Some positive gamma up there at 6210. Looking for this to push a little bit higher, S&P. Watching that purple line there. Is that more like fuchsia color? Sort of a bluish purple. Okay, looking for that to turn up. If it turns up, it'll be another scalp potential on S&P. I'd like to see the indices I'd like to see all of these New York FANGs turn up. There's Google. Google's trying to do something here. Okay, Google's trying to do something right this minute. Google's trying to turn up. All right. So let's see if Google can go. Watching Google. Looks good. Google. S&P looking for that next pop. 60 minutes on a buy signal. 60-minute tick cumulative is green and looking bullish. Tick cumulative, that's a measure of what institutions are actually doing. Tick cumulative would be red if institutions were selling more than they're buying. But because they're buying more than they're selling, tick cumulative is green and making higher lows. On the 60-minute time frame is my favorite time frame to follow is the 60-minute. If you're scalping, maybe you want to look at tick cumulative on the 5 or the 10-minute chart. Okay, looks like S&P wants to push a bit more. Google looking strong here. Google looking like it wants to go. Google's trying to break out. Google trying to go. running up against supply now, Google.
They need to sort of supercharge their generative AI efforts, and they can't do that internally. What we're seeing at Meta is
UNH, okay. SOXL, semiconductors, SOXL. SOXL. SOXL looking for a pop through the 200-day. It's stuck to the 200-day right now.
iPhone sales, if we're really lucky, it's an iPhone, mega cycle.
Tesla making a little dip here, looking for higher lows to print. Hard to say what they're doing right now. Looks like a higher low. Looking for hedging flows to turn up. Yeah. Google's a good choice. Amazon's a good choice. Meta for AI. With NVIDIA, of course. Supermicro, TSSI, and Dell. All of those are going to benefit going forward. All right, here goes the S&P. Is about to go again.
The other phones may be more innovative, but we're just sticking with the Apple ecosystem for
S&P is about to go again.
Maybe because you feel like the Google one is, maybe because Apple does feel a little bit more like it's protecting privacy. I don't even know why it still has. Maybe I just want to be blue in the iMessage.
It's so true, so true. But I think that's true. And I think it holds on to us in the iPhone ecosystem longer, but not forever. To the extent Android keeps racing ahead and Apple does nothing, there will be a time where you break and you move to the Android ecosystem. That's what we need Apple to do here. We need them to do enough with third parties to keep up, to keep the gap within 20 or 30% of the capabilities of Android. Otherwise, people will stop buying iPhones for the next iPhone.
Yeah, I think that's fair. We're definitely curious about the
All right, let me look, Tony. I think I had a couple on this on the watch list a couple of weeks ago. Let me see. I want to say 2 weeks ago. Let's go 2 weeks ago. Let's see.
There's that Sesame AI sort of language.
What is this?
What would you like them to see Siri do?
QNCX.
Apple right now is spending sort of, $10-15 billion a year in capex. The next shoe to drop is that every one of their major competitors is spending $80 billion a year in this large language stuff. So the next shoe to drop is either they're going to pay billions of dollars to Anthropic or another large language model to sort of accelerate their capabilities in generative AI on the Apple ecosystem, or they're going to spend billions of dollars hiring the right people to bring them in-house. All of this says Apple is going to have to spend a lot more money than is in all of our estimates to pursue generative AI in order over the next 5 years not to lose its ecosystem advantage. So what I would like to see them do, frankly, I like the idea of them doing a deal with Anthropic, which I think is sort of best in class right now, but it's for billions of dollars. That's what Anthropic's asking. So again,
they pay Google. I mean, if you go back to them realizing, okay, the search engine has to be excellent. And I guess in that case, it's different. Didn't Google pay them? So maybe that's not a good analogy.
$20 billion Google paid them a year.
Yeah. So that's not a good analogy. So then I don't know if anyone other than could Perplexity, which is only worth
Okay, Google trying to push a bit more. Okay, S&P about to take out the high of the day. Okay, what do I want to do here with SPY? Do I want to take SPY for a ride? I don't want to do it up here, but SPY. Maybe Thursday calls. What's today? Tuesday? 2 days. I probably would do next week. SPY. Let me take a look at SPY. SPY. Yeah, SPY I was looking for a slow-mo trade for a little pullback. We got a little pullback intraday, but not enough to like come back towards a 5 EMA or 10 EMA, 9 EMA. Looks like we're going to go here. SPY looks like it wants to go. SPY. SPY. Okay. Third SPY. Here we go. SPY's starting to go. SPY's on the move. There it goes. SPY. 40 Delta. 40 Delta. Looks like it's going to go. SPY. Okay, there goes SPY pushing a bit higher. Looking for more. All right, SPY looking for more upside. SPY looking for more. Okay, SPY's trying to push a bit higher. SPY looking for more upside. SPY coming out of a squeeze. We've got buy order blocks. Note the buy order blocks on SPY. Okay. SPY, note the buy order blocks and the lack of overhead supply. We haven't traded up here, so you'd expect there wouldn't be much. Okay. All right, so we're at the high of the day. I wouldn't be surprised to see a little pullback maybe. That said, we got to keep an eye on hedging flows. Okay, looking for that to turn up. Right now, they're just kind of flattening out, not pulling back heavily. Okay, Google's at the high of the day. Google looks like it wants to keep going here. Google looking pretty good, Google. Okay, can we get a follow through? No. Maybe we can get back to even on the day. Okay, Qualcomm's turning back up. Qualcomm.
Details. I'm hearing some mixed things, Phil. It was a better report, but then there's fewer incentives, and then there's rising prices, and a lot of different things happening.
Oh, things are changing definitely, Kelly. You are seeing incentives in the right now. Loan payments, they're close to a record high. Let's go first over the Q2 sales. Now, keep in mind, Q2 includes April and May, which were blockbuster. June, it moderated a bit, but still you saw GM and Toyota. And when you look at the pace of sales for the second quarter, it was about 16.8 million for the first quarter. Most believe it's going to come in at about a pace of 16.4 million for the second quarter. And then it's continuing to moderate, where the expectation is that it continues to moderate in the third quarter and in the fourth quarter.
S&P looks like it wants to pop. Can we pop? Can we pop some more S&P 500? Watching those hedging flows. Okay, I'm going to take a 2-minute break. I'll be right back.
In the second quarter, included a monthly payment of greater than $1,000. That is a snapshot of where the consumer is right now in the United States. I want to quickly also mention Hyundai, their sales increasing 10% in the second quarter. Hybrids are hot right now. Hyundai has been trying to catch up to Toyota, which leads the industry when it comes to gas electric hybrid sales. And finally, Take a look at shares of Tesla. Remember, we get the Q2 deliveries, where the expectation is we get the delivery announcement tomorrow morning before the bell. The latest estimate is 387,000 vehicles being.
Okay, flow turning back down on SPY, watching for that to turn back up, perhaps.
We should also point out there are more than a few analysts who think this number is going to be closer to 355, 360, not 387,000. But that's what we're going to be watching. The expectation is we get those numbers before the bell tomorrow.
You want the whisper. They should start throwing out their 300, 200. You know, might as well get the stock down 20% into it, get it out of the way, and then maybe a rally.
Those numbers have been out there for a while, Kelly. And so, look, the bottom line is this. For the year, the expectation is that deliveries will be 1.65 million. I mean, that's the estimate at this point. For a point of reference, it was 1.89 million last year. So you're looking at a sizable decline. And as we've had people on today talking about, China is under pressure. Europe is really under pressure. We were just over there for the Paris Air Show to talk with other people, their consumers, and we did on the street. And they will tell you, not crazy about Tesla. They're not completely against Tesla. But then you mentioned the Chinese automakers, and you mentioned BYD. We were in front of a BYD store. The consumers are like, I like the price on BYD. Yeah. I mean, that's the pressure and the competition that they're facing.
I know. The Tesla people always make fun of me for bringing up the China EVs, but it's in the data.
NVIDIA higher low looks like.
Whether it's Chinese subsidies or, but it's happening. Sure. There is a shift, a clear shift.
Absolutely.
All right. Phil, more. Thank you for now. We appreciate it. Our Phil LaBelle. Still to come, the dental supply stocks are up nicely as the MAHA movement makes stripping fluoride from public water a priority. Driven by an expectation that a lack of fluoride could actually lead to more dentist visits. That's why the dentist stocks are up. But that's not the only way you can sink your teeth into the water trade. We'll talk about a tax.
Okay, Meta higher low. I don't have a Meta position, I don't think. Let me see. Meta. No, I have no Meta. I have no Meta. There goes S&P. S&P, hedge flows turning up. Okay, there goes SPY, new high today, SPY. Okay, NVIDIA, higher low on NVIDIA. Just printed a higher low, NVIDIA. Looking for a buy order block right there. See if we can't follow through. The target is the high of the day. If the S&P continues to push higher. Looking good.
Government spending. Travel finance columnist Rick Newman argues Musk may have some salient points about the tax code. We were just taking a live look at some of the voting in progress on that tax bill here. What are the points here that are salient and do hold some weight?
Well, just so people understand, once the Senate passes this, it's not over. That's a different version than the House passed. So the Senate version would have to go back to the House. So it's still going to be a while before we get a final bill. Musk has pointed to the overall cost of the bill, $4 trillion added to the national debt. But he also is into the details of some of the things that are in the bill. He has specifically looked at the energy provisions. So what this bill would do is it would repeal some of the green energy tax subsidies or tax breaks that Congress passed in 2022 when Democrats controlled Congress and Joe Biden was president. And it would give some aid and smaller subsidies to fossil fuels, oil, natural gas, and coal. And Elon Musk says that basically amounts to subsidizing the industries of the past. That's his phrase for fossil fuel, basically, while giving up strategic advantages on the industries of the future, which is green energy. And he's right about that. You can have arguments about what's the right level of subsidy for a new technology such as green energy. But green energy is a super important industry in the future. And here's one way you can tell. China has said that green energy, including electric vehicles and batteries, photovoltaics for solar, wind power equipment, they have declared this as a strategic industry where they want global dominance. And they're on their way to global dominance. So the Biden era subsidies were supposed to help the United States catch up. I mean, you want to be in this industry. This is a massively growing industry. You want to be there. There are a lot of jobs there. And I think that's quite literally flowing into the bond market, according to our next guest.
who says there's an outstanding $300 billion in revenue in water and sewer bonds across the country. And as more infrastructure becomes necessary, those bonds are quickly becoming perhaps one of the best community plays out there. Who else brings you this kind of content? Dan Close is head of Munis at Nuveen. So just kind of walk it back for us. Again, knowing Munis had kind of a choppy start to the year, people might be going, okay, what's going on with this asset class and why this part in particular is it jumping out?
Yeah, and thanks again for having me on the show, Kelly. Of course, always great to talk about muni bonds. But I think choppy start is charitable. It was the worst performing fixed income asset class for the first half of the year, underperforming everything else. And it's really created a great opportunity. And for water and sewer bonds in particular, it's a center of the fairway, very low default, inelastic demand curve. But all munis is very local. And right here in New York, you can take a look at New York City Water, for instance. It's on sale, serving 9.5 million people, AA credit. If you are in the highest tax bracket and you're a user of New York City Water, it's got a 10.5% equivalent yield, which is just an equity-like type return.
Do they literally ask if you're a user of New York City Water?
You just have to
10.5%.
Right.
Why would it be? And so whatever that is, 7%, whatever the coupon is, but tax equivalent. Why is it so high right now? Because people don't
Amazon, high today, Amazon.
There's been a lot of issuance. The meaningful underperformance of the asset class has created this opportunity set. So something that has a very, very low default rate that historically has been this inelastic demand curve type asset class. New York City Water longer end is yielding 4 3/4. Taxable equivalent is 10.5. And even if you're in a lower
4 3/4 becomes 10.5.
Right, because you consider the 37% federal, 3.8% Medicare, 10.9 for the state, and 3.8% for the city.
That's even higher than I thought.
Yes.
So is it possible that some of these deals, quote unquote, are happening in the water and sewer space, or water especially, because of the MAHA movement, because of some of the investments that these municipalities might have to make into cleaning that? We have a big PFAS problem in my town, for instance.
Right. We haven't seen much movement in New York City paper, the GEO, or anything because of the recent elections. I mean, there's so many safeguards in place, so we just haven't seen too much movement, even in GEO spreads. But what we have seen is a lot more issuance for water safety. Lead pipe remediation, that's 30 to 40 billion that we're going to see as far as issuance, water main breaks in the Midwest and the Northeast. But PFAS remediation, we anticipate that fully 15% of utilities are going to have to remediate this. And that's going to be anywhere from $50 to $100 billion. The EPA estimates in the next 20 years, 1.2 trillion of issuance in order to go in and to address aging infrastructure.
I believe it. So
PFAS is a large and growing part of why that needs to have so much issuance.
Hugely complex and expensive to deal with, as we've all been learning. So across the country, you mentioned New York, but I'm sure there's a lot of places where they can look at these bonds and yields and see some opportunity. Anything you'd add about one region or one kind of municipality versus another, or what are these bonds backed by as well in terms of the safety of that revenue stream?
Sure. On the safety issue, we see it primarily in the Midwest and the Northeast, just replacing aging infrastructure. In the West, it's more about securing water. So San Diego came out and issued about $1 billion in debt for water desalination. So we're starting to see that. We're starting to see issues just the last couple of weeks. The Southern Nevada Water District issued money for residents to take out turf and to go in and to get more efficient water meters. So between both the safety and also with respect to the scarcity, we're going to see a lot of issuance here over the next 20
They want people to take out turf and sand?
Turf, that's exactly. Take out your grass in order so you're not watering your lawn,
landscape,
and to make sure that you're going in.
I think we're going to need that in New Jersey. So thinking about a rock option as well. Dan, always appreciate you coming in and breaking this down for us. Dan Close of Nuveen. That's it for the exchange. I'll join John.
Amazon higher. Amazon pushing higher. Buy order blocks. Amazon buy order blocks continue. We're pushing higher. Amazon looking good. Amazon.
Some sort of moratorium or some sort of deal. The question is, how bad will it be if those don't come to pass? If it's, it's relatively minor countries, if they, can pick up the tax on the penguins again, big deal. If the tariffs on China go up again, or we can't reach a deal with the EU, that's problematic.
Steve, Great to have you here in the studio with us. Appreciate the time, the conversation, both on camera and during the breaks as well. It's been fun. That's it for Market Catalyst, everyone. I'm Brad Smith. Thank you for watching. We've got much more Yahoo Finance in it.
Amazon looking good, pushing higher.
That's business.
Good afternoon and welcome to Power Lunch. She's Kelly Evans. I'm Dominic Chu. The president's big budget bill clearing a new hurdle today. The Senate narrowly passes its version of the spending bill after days and days of tense
Closing records, we will see. But in the meantime, we are at 6,209, right? 6,200. You don't see that handle. That's a new one for you, pretty much. So the Nasdaq is down more than 0.5%. Check the Nasdaq. The Dow is up 1%, and the Russell is up 1.5%. Looking at oil and gold, gold's up $44 today. It's off the highs, and oil 65.50 the barrel. And things continues to come down. That's at 16.66 for the 10-year bond yield at 4.25 there. And Bitcoin stayed at 106,000 and change. So looking pretty good there in those levels, but down 1.3% today. Kevin Green is with me, Senior Markets Correspondent. And the big news here is that the Senate has passed the tax and spending bill today. We talked about this in the first show, that today was the day. And so it will continue on its way for the next round of approval, but that's a big deal.
It's a big deal. We actually saw J.D. Vance, the vice president, actually break the tie. It did advance by 51 to 50. And you did have three dissenting GOP members in the Senate for this bill, but it has been able to pass. Now it's going to go back to the House. Now, what's going to be very interesting over the next 24, 48 hours is how the House actually deals and manages the Senate bill just in general. We already know that it was a slim majority that it passed the House initially, and now we actually have seen some pretty significant revisions in some portions of this bill. But so far, we did get over another hurdle. The market was expecting, and the president was expecting that this bill will be on his desk by July 4th, which has been a self-imposed deadline. And we have seen, obviously, some fireworks and back and forth in terms of politics around this bill. One thing that was actually very interesting, at the last minute, we did see a small little rollback in some of the solar as well as wind energy regulations and taxes. There was an initial taxes in there. Which caused some of the sell-off in solar stocks and wind stocks over the last couple of days. seems like that has been backed out a bit. So that was a little bit of a win for the energy bulls for the most part. But yes, big milestone. We didn't see a major reaction when it came to the market just in general. We are seeing the markets obviously higher here, but we have seen breadth expanding for the majority of the day, and yields for the most part are kind of holding in at the same levels, around the same levels that we saw right before this bill passed. So overall, we're holding up pretty well, and hopefully we're able to get some final resolution for this bill over the next 24 to 48 hours.
Yeah, obviously big news here. JD Vance being that deciding vote, I thought that was very interesting as well. Take a look at some of the economic reports that we got in this morning, and what are some of the takeaways there when it comes to jobs and manufacturing?
Yeah, so we actually did see two pretty big reports today. We had the JOLTS report, which really just reflects the amount of job openings in the United States. And we actually saw that increasing by 374,000 job openings before the month. That actually exceeded the street's expectations here. But we did see some cracks when it came to hiring just in general. We are seeing a little bit of a slowing there. But to offset that, we are also seeing a slowing when it comes to layoffs. So overall, it was actually a pretty decent number when we're looking at the labor front. We will have the ADP report coming out tomorrow, and then the non-farm payroll report coming out on Thursday. We also have the ISM manufacturing data set coming out earlier today as well. I would say it's a little bit mixed. The headline number was actually better than the street's expectations. It's still coming in contraction territory, and unfortunately, prices did the street's expectations. We do see a contraction as well as actually a lower number than the street's expectations when it came to new orders. So I would say once again, kind of a mixed report here. But overall, the economic data really hasn't shaken up the market too much. Obviously, we are focusing on the headlines, the news that's hitting the tape, seeing the progress of the big, beautiful bill, as President Trump kind of calls it. It's definitely going to be an item that we're going to keep on our radar for the next couple of days. And then also the spat between Elon Musk and Donald Trump seems to capture a little bit more of the headlines rather than maybe some of the ISM data that actually about an hour, 2 hours.
Yeah, as you said, the Senate passes that today. Now it goes back to the House. That might pass tomorrow. And Treasury yields not really moving too much on the news. So we have a lot to continue to follow in the next 24 hours or more until July 4th. Kevin Breen, thank you so much. Obviously, for payrolls he was talking about as well. Let's take a look at the bigger picture. David Nelson, Chief Strategist at Bell Point Asset Management, is with me. Good afternoon to you. We've seen some records. Yesterday we closed at 6207, 6205 right now. Some of your thoughts on some of the records we've been seeing, catalysts that are there for the S&P and the NASDAQ to get to these records. Do they continue?
Nicole, nothing changes sentiment like price, and we've seen a dramatic change in sentiment in just the last few weeks as the glass was from half empty to half full. I think there were three catalysts that drove us to record highs. The first was that markets figured out pretty early in the quarter that the final tariff structure was going to be a lot closer to 10%. And that went a long way to shore up confidence, because that means that you don't have to reshore your supply chains. Probably means about $300 billion in terms of revenue for the U.S. And I think that's going to get split between consumers and companies. Companies will sacrifice some margins to maintain market share. The other big thing took place a little more than a week ago, and I think a lot of the geopolitical terror risk has been reduced. The B-2 strike on Iran. Even if Iran tries to restart the program, this was a precision strike from half a world away. We slipped in and out undetected without a shot being fired. So even if we have to go back in there, it's pretty clear that we can do that. The final catalyst is really the yield curve, and maybe the bigger one, because as yields come down, it speaks a lot to valuations, because valuations don't live in a vacuum. And if yields continue to come down, or at least stay down where they are right now, you can make a case that stocks can push a bit higher.
So people may go back to if they haven't been there already, equities, because they're searching for return. And if you have lower yields, I guess they're going to say, hey, it's a good environment. Maybe they'll get back in, especially if they're chasing the market. I mean, when's a good time to set the market, but chasing the market? It's such a fine line, right?
It is. You're seeing a little bit of that today. There's a pretty big rotation taking place in the market today, kind of a reversion to the main trade, as especially in the hedge fund community, sell last quarter's winners by the stocks that didn't work today. Pretty big value, growth to value shift today going on. And what portfolio managers have to do, and what I have to do, is look at that. Is that the start of a new trend, or is it just noise for the next couple of days?
Tell me about some of the names you like L3 Harris and Capital One. What are those things good for a portfolio right now?
Well, L3 Harris is a defense name, and you might think that I'm in this name because of what took place in the Middle East, but it's really more about Europe. It's very clear at this point that Europe is going to step up and start spending a lot more on their military. I think they're now projected to do about 5%. Let's see if they live up to that. L3 Harris is going to get a fair portion of that. They have about 20% of their top and bottom line are exposed to international right now. Europe's going to be a big part of that. And these are mission critical systems. We're talking about, battlefield communication networks, the global, the global dome? I guess I'm getting that wrong. But all of these things integrate together better with U.S. systems.
When we look at defense stocks overall, do you normally like aerospace and defense?
I think of them like an insurance policy. If there's a geopolitical or a military event somewhere on the planet that really knocks markets down hard, those are going to be the stocks on your screen, maybe the only stocks on your screen that are up pretty substantially on the day. I have several names in this category.
When you think about Capital One, we think about names that are named in the world of financials. Where does Capital One fit?
This probably would have been an avoid for me. Not been a fan of the company for a long time, but the closing of the acquisition of Discover really changes the game for me. Because now this is a vertically integrated network. And the one thing that they're going to get out of this is the ability to route the traffic to their own network instead of routing it to the interchange fees to companies like Visa and MasterCard. That's big money. And it's not priced in the stock right now. Maybe a little bit, but at 14 times earnings, this should be trading at 17 times right now. I mean, right now. This has got 18% upside in the near term.
At the same time, do you think we're higher than where we are today?
For the market as a whole, if you think about the market as a whole, it's less about the market for me. Look at the Mag 7. You can't paint them all with the same brush. And it's interesting that the market is making new highs, but not all the usual suspects of making the highs. Yeah, you got NVIDIA, you got Microsoft, you got Meta, but the rest of that pack is underwater this year. And so it tells me that you're going to have to dig down and find the names yourself.
Do you have a favorite or favorites?
I own them all, but it's the sizing that really matters. I'm looking for a reason to increase the weighting of Apple. It's probably my smallest position in Mag 7 right now, or close to it. They're trying to make some changes there. We saw what they said, that they're currently negotiating with Anthropic, OpenAI. Maybe that's a step in the right direction, but it also speaks to some of the problems. They're not developing.
Just scanning through stocks at the moment.
We're going to see by the end of the year.
Watch the hedging flow starting to turn up again.
Situation. And I think it's probably time to move on.
Do you care about the Elon Musk-Trump feud?
Yeah, I don't like to see it, but it's there, and it's something that happens with a lot of Trump's favorite people. They love him, and then something happens, and the ties break, and it gets pretty ugly. And right now we're in that state with Elon and President Trump. I hope they can repair the damage because there's a lot of work that still needs to be done.
David Nelson, Chief Strategist at Bell Point Asset Management. David, thank you. Coming up, Options Corner, Tom White standing by, and he'll join us and highlight unusual looking to trade the news of Chipotle, Apple, and Las Vegas Sands, which is up 9%.
It is companies that, some would refer to as growth engines or to a certain extent cash cows. Those tend to be areas that perform well in environments where we need some defense. So
that's NVIDIA, Netflix.
Interestingly, I'm so old. I got into this market and into this profession in 1995. So I lived through tech not being considered quality at all.
Yeah.
But the times have changed, and a lot of the high quality names are cash cows with low debt in the tech space.
The AI revolution, like Sid alluded to, but we're going to take a short break. We'll be right back with Christina and more stocks in translation.
We all love recipes with garlic. We're trying to use an awkward garlic recipe, snuffy mess. Introducing the great garlic. Garlic to perfection. Just place a cube of garlic under the break. Walk it back and cold. See what chili and chocolate. That's amazing. Great garlic introduces. It's all in every time. Scan the code on your screen to order your great garlic today. This is a limited time offer, so scan that.
Okay, watching hedge flows, kind of flattening out at the moment.
Introducing the Flash Charge 4-in-1 Jump Starter Power Bank Plus Tire Intake, the roadside lifesaver with wireless inflation, emergency ignition, LED lighting, and a mobile power supply. The Flash Charge is compact, powerful, and reliable, designed to handle the unexpected. Order it and get it.
Google at PMZ, looking like it wants to follow through.
Used my top goblet so much I bought 3 more. Ow, and make it count.
All right, welcome back to Power Lunch. Fighting over the big, beautiful bill is coming to close to an end, at least in Congress, but the war of words between President Trump and Elon Musk may just be getting started again. Musk heavily criticizing the bill on X, President Trump hitting back. He will direct Doge and its former chief in this way.
We're going to have to put Doge, you know what Doge is? Doge is the monster that might have to go back and eat Elon. Wouldn't that be fair? He gets a lot of subsidies, Peter. But Elon's very upset that the EV mandate is going to be terminated. You know what? When you look at it, not everybody wants an electric car.
All right, some dramatic words here from the president. Tesla shares are under pressure today, down nearly 12% since the feud began back in early June. Overtaking Apple, by the way, as the worst performing Mag 7 stock on a year-to-date basis. But our next guest expects the weakness to be temporary, transitory, if you want to use that word, and has Tesla among his top picks for the second half of the year. So joining us now is Dan Ives, Global Head of Technology Research at Wedbush Securities, a man who's been a noted Tesla bull for quite some time now. And for the most part, the dip buying has yielded results. But is it a point now where this feud could be boiling over?
Look, I mean, the feud, it's the last thing is a test of because it's essentially, it's almost like a junior high school situation, best friends, now potential enemies. You don't want Trump as an enemy. The autonomous, the regulatory framework is so important, for Tesla, especially what we're seeing with Austin. Look, in my view, it's going to settle out. And it was like, I don't expect that this thing's going to, cascade into something much worse, but it's going to be an overhang on the stock. You need Musk to stop getting into the political arena, and I think that's the frustration that you're seeing in shares.
What exactly then do you think is the outlook for not just Tesla, but Elon Musk's very high-profile and vocal role as its CEO vis-a-vis the relationship with Trump?
Is this a situation where he now needs to solely focus on Tesla and stay out of that political arena?
Look, we've talked about it. I mean, the last thing you want to see Musk do is just get into this political arena. Because ultimately for Tesla, that's been the overhang. Now, Doge took a huge step back in terms of the Trump administration. But I think the worry here is that when it comes to the most important thing is about the federal autonomous roadmap. And I think at the end of the day, Trump needs Musk, Musk needs Trump. They'll continue to be a little war of words here, but I do think things will settle down. And I think this is something that for Tesla, you need to navigate the volatility because it's our view, the autonomous value. It's $1 trillion alone to Tesla, despite obviously a lot of the worries that you're seeing today with Trump. But I do not believe Trump becomes an enemy number one for Tesla and Musk.
Do you think it's okay? So Tesla, Apple, Apple down 25%. I think Tesla 17 or vice versa. Maybe it's the opposite. What happens in the back half? I mean, do things start to turn in their
Qualcomm.
favor, or is it more of the same until the fundamentals change? What does it all mean for the Mag 7? Tech is actually underperforming today.
NVIDIA.
And healthcare is boosting the Dow.
Looking for a follow through in NVIDIA. Qualcomm. Okay. Qualcomm had a good day today. NVIDIA. Love to see these all close at the high of the day, but maybe it's not in the cards for now.
When you look at Tesla, I mean, my view is that it's going to start to revert because as you start to see the autonomous vision take hold, you're going to have delivery tomorrow that are not good numbers, but I think that starts to rebound in terms of China. And I think Tesla, I think this is a stock that could be up 30, 40% as we go into the next 6-9 months. When it comes to Apple, look, I mean, we were at WWDC. I mean, that was kind of a yawner. You need them to make a move. It just comes down to like the treadmill approach has
They
ended.
want a big splashing move, like a big partnership or a bunch of
Anthropic.
So you said it. So this was interesting because during our first ever CNBC Pro live event, you were one of the guest presenters. And during that conference, you told the participants that Apple needed to make a splash. And you named Perplexity by name during that conference. Does Apple need to do an acquisition? Apple turn it by themselves internally, which they've always had a track record of doing.
Yeah, and we talked about it at the event. Well, look, it's a matter of when, not if. In other words, Apple needs to make a move, and it's clear. I mean, look, Perplexity to me seems like the no-brainer relative to how it fit. But look, it's about the developers. It's not necessarily investors. Developers, if you look at OpenAI, you look at Google, you look at Microsoft, they need to get in the game. That's something that can't be done in Cupertino. And it's my view, the reason the stock, and Kelly, to your question, and the reason the stock has, I think, a strong move into the second half of the year is I think Apple's going to make a move. I know historically they haven't done an acquisition, Beats being the biggest one, but now is the time for Cook and Cupertino. The treadmill approach, I think, is ended.
We might have some news on this front. Actually, a news alert on Anthropic. Pippa Stevens is back in the newsroom with those details. Pippa, what's happening?
So Anthropic's revenue is accelerating as companies amid strong demand for its Claude AI model. So according to the information, it has reached a $4 billion annual revenue run rate. That's $333 million per month. That's almost almost four times from the start of the year. And that is according to people familiar with the matter. Now, of course, Anthropic was most recently valued in the spring at $61.5 billion. We have reached out to the company for comment, but the information is reporting they now reached $4 billion annually in revenue. Kelly?
All right, Pippa, thanks. Dan, you can pick up on that.
It speaks to, I mean, it's a fourth industrial revolution. Apple can't be on the outside looking in. And I think it just comes down to whether it's Perplexity, whether it's from outside changes in terms of leadership that they're going to have to bring in from an AI perspective. They're going to have to do something. That's what the market's starting. The market's really
pushing that. Here's the problem, though, and it's weird how, over time I come to sympathize more and more with the decision makers behind this who might say, okay, even if we agree we have to do some splashy, how do we know what is the right thing to do? How do we know if it's Anthropic or if it's Perplexity or if it's to do something even bigger and bolder? How do we know, especially as all this talent is now being drained and taken over to Meta, like, how do you know what exactly is the right thing?
Sure. But I think at this point, left lane Ferrari, you got Meta, you got Microsoft, you got in the black leather jacket, Jensen, NVIDIA. On the right, you can't have Apple 45 miles in the right lane, just doing nothing. And to me, Perplexity, it's the no-brainer. That is the one. I don't care if it's And I think it's a start that ultimately is going to achieve because it comes down to it's the golden install base Cupertino.
But it's also, I mean, with these reports that Apple is evaluating the use of Anthropic and OpenAI to power Siri, as opposed to just outright going after something else. So there are, to Kelly's point, this is a choose your own adventure that doesn't have just 2 or 3 outcomes. There's maybe 6 or 7 different ways that you can do this.
No doubt, but in that choose your own adventure, it's not status quo. So they're doing something that I think is out of the typical DNA of Cupertino because it just came down. That WWDC, that was a sharp shoulder. Every developer came out of there being like, what are they doing? And I think the clock struck them. They need to do something, and that's what the stock's doing.
I like that. Did you write that already? The clock struck.
No, it's right.
That is a bold statement. And I love it. Dan, thanks. Appreciate it. Always good to have you on. Dan Ives. A pharmacy flip, CVS dropping coverage for one weight loss drug in favor of another could lead to a major power shuffle in the space. We're back with that story next.
Crypto Watch is sponsored by Crypto.com. Crypto.com is America's premier crypto platform.
Well, just to remember that typically the stock market acts in advance for a recession, and that in a typical recession, you get stock market sell-off of between 20 and 25% in advance. So think about that in terms of your strategic allocations and what you look at for rebalancing mid-year.
Christina, some great advice. Thank you so much. Appreciate you joining us. We're winding things down here at Stocks and Translation, but make sure you check out other episodes of our show on the Yahoo Finance site and mobile app. We're also on all of your favorite podcast platforms, so be sure to like, leave a comment, and subscribe wherever you get your podcasts.
The analyst lowering the price target to $15 from $25, citing same-store sales concerns in the second quarter and says there is a risk of not returning to normalized same-store sales in 2026. D.D. Cowen believes
S&P hedging flows, watching that flattened out over the last hour and a half.
It's time to take a look at IPOs, short covering, some of the action on Wall Street. Danielle Shea is with me, VP of Options at Simpler Trading. Thank you so much for being with us. So Circle comes out. It was all the rage, and we think of crypto and stable coin. And it surged, and right now it's at $185, up over 2%. It's had an incredible rally. What say you about an IPO like this one?
Well, looking at this one, this definitely came up in our trading room because it had a lot of high volume, and specifically it was up on a high percentage basis day after day. So when you see this incoming volume and you see a stock going out on the highs of the day and it's up, 10, 20%, that tells me that this is most likely a short squeeze. And so, typically you don't want to buy something that's already up 10%, right? But when you're a trader and you're trading some of these aggressive names, if a stock is going out on the highs of the day and potentially has high short interest, that's actually when it can explode even.
Tesla bouncing.
That's what I think happened with this one, and that's why it was on my radar until the momentum ran out.
So as of Friday's close, the shares of Circle, which is a stablecoin issuer, have risen more than 450% to about $180. It's higher. Now, the IPO price, folks, in case you weren't sure about that, was $31. So an incredible run.
Play your car out.
Where do you see a stock
Okay.
like this going?
I think I can pretty much finish everything.
Short
All I have to do is a
squeeze
press run. So
You
hopefully I
tell me,
can
is this
testify.
more about people trying to cover, or
Sounds
are
good.
there people who believe in this to go higher?
So, for me as a trader looking at something like this as a short squeeze, I'm not looking at it on a long-term basis. I'm merely saying, okay, I want to trade this momentum until it dies. And I traded it, we were looking at 175 up into 200, 250, and it hit the incredible price point of almost $300. And that's when that momentum shifted. It gapped down. It was showing some big percentage down days. You can see that the trend shifted. And so for me, at that point in time, when it hits that key psychological value and it rolls over, it's dead to me. So now that it's fallen so much since that price, at this point, if you really want to get into it, you're going to have to wait until it consolidates again and there's some sort of catalyst for it to take off. But for me, I'm not going to get back into it unless and until that happens.
And it's hard to know the value of where it should be fairly priced today. We think of the global stable coin supply, and that has the potential to reach $4 trillion, according to Bernstein, by the year 2035. It's up from roughly $225 billion today. $225 billion to $4 trillion. So there, Bernstein, they're getting definitely very bullish on this. I mean, 10 years away, and that's a huge upside.
Well, it is extremely difficult to price something, especially after it's had such a wild move. And that's why, anytime with
Tesla with a nice bounce. Tesla.
Traders, if you want to invest money in it that you're willing to lose, don't let me stop you. But in the very beginning, when it's extremely volatile, it's going to be near impossible to price what that company should be worth. So with some of these disruptors, you just have to look at it as either a short-term trading opportunity where you can look at and identify that momentum and trade it either to the upside or the downside, or take your chances with a long-term bet. But in that case, obviously, it's much better to do that after a decent pullback, which it has had.
This is a must-own stock. We'll leave that for the moment. In the meantime, we think about the short interest and the short squeeze. And this is neither the first nor the last that sort of has gone through this. When you think of some of the short squeeze stocks over time, what are the few that really come to mind very easily?
Well, we've had all kinds of them over the years. GameStop's definitely an obvious one. Tilray. Typically, whatever is hot and up and coming. Like, for example, right now we have some quantum computing stocks that have a lot of high short interest. But generally, when you have the market at or near new all-time highs, this is a great time for traders to look for tickers that have a high short float, because that's typically when these short squeezes are the best. And so if you can capture some of these that have bullish technical patterns, they have a lot of interest surrounding them, whether it's the sector that they're in, or it's because, they're already taking off. Sometimes we find some of them because they'll explode after an earnings report. But right now, because the market's near those highs, That's why we're looking for these kind of names because, could be
Tesla trying to turn up.
It's interesting because you see the short interest talk about the float, and I was just looking at IonQ, but there's so many names in the quantum
NVIDIA,
computing,
right there.
some of the others. By the way, see
What else you looking at?
there's a few of these names here that have all run
Okay,
up.
Tesla. Good short earlier. That's Tesla right there. That's about a short up there. Yeah. This is a 5-minute chart. Just a daily.
It can. And it just depends, of course, on what the price of the stock is and how much
Yeah.
further it can go. I mean, the reason why I like some of these quantum computing stocks is because they are still at a low price. Yes,
Okay, S&P is on the move. Let's check.
so far. But we are in the early
All right. Hedging flows are turning up. You see this right here? See that purple line? That's what dealers are doing. So if they're hedging and that's turning up, that means we're going to look for a pop. See, S&P is turning up. S&P over there. So we want to buy calls or buy shares or whatever.
You want those candles trading higher in a nice and easy fashion.
Okay. Amazon at the high of the day. Amazon.
Some positive earnings.
Hedging flows are turning back up again.
Are still losing money, but perhaps they lose less than is expected. And so when you have that bullish technical pattern, when you have that high short float, and then you have the stock coming up close to that previous high, that's where those short sellers are going to get really nervous. And so if you can get a positive catalyst, that's when they really explode. And so that's why I like to have those on my radar when they're nearing those previous highs.
All right, watching these hedging flows into the last hour and a half, hour and 25 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Tuesday, the first trading day of July, 2:35 p.m.
These are more volatile, they're newer, they have surges, they have short covering issues. What percentage of a portfolio should be in some of these sort of wild names?
So as far as a long-term stock portfolio, typically 10%, maybe 15. That's where I would say I'm willing to put some money in this to see if it can go somewhere. But certainly long-term stock portfolio, the vast majority of the names that I have are going to be those stable names like John Deere, Microsoft. But you can't take a part of the action if you don't get any of it, right? So I like to have a little bit in the long-term stock portfolio, but I do keep my trading separate, and so my options trading and my short-term momentum trading in these names, it's going to be in a different account. It's going to be a little bit different, but at the same time, I will also have some of the more conservative. I call Amazon. I will have some more conservative names in my options portfolio and keep the more aggressive names on a shorter term basis with a little bit less risk.
Amazon is an established name, so I get what you said, it's more conservative than some of the other ones. We think of conservatives really as super old school, but that would go into conservative for what it's provided. 10 to 15% of portfolio to have some of these because you do want to have more risk or more action. I mean, that's for somebody who wants to drive pretty fast, right? I mean, 10 to 15% of the portfolio, that's a pretty good amount.
Apple. Okay, Broadcom, no follow through on Broadcom. Broadcom probably going to stop out. Broadcom getting close to stops.
A little bit more aggressive than maybe others would be. But for me, I'm primarily looking at this as a longer term time frame. For example,
Netflix turning up. Netflix. NVIDIA. NVIDIA higher.
Looking at these and I'm saying, hey, you know what? In 10, 15, 20 years, what is the world going to look like? Which companies are going to be the Microsoft and NVIDIAs of the world? And if I'm buying shares, not a lot of money, but enough that it will grow over time, that's absolutely something that I want to jump on and see what kind of growth we can get in the next 15, 20 years.
The stocks? You mentioned a few about this thing, but just if I had to take away, is there a favorite stock or favorite stocks?
Well, primarily right now in my portfolio, I have Microsoft and Tesla and NVIDIA, Meta. I love the Magnificent Sevens, but I am looking at adding some of these quantum computing names. I like IonQ. I am going to start trading that one because I feel like this one in particular has a great technical pattern right now. I feel like I like the short float percentage, and you asked about that before too. 15% or more is great. 20% or more is even better. But I like IonQ, I like QUBT, and I like to focus on the semiconductors a lot as well. So, I mean, I am a little bit more risky than maybe some others are, but that's the way that I like to do it. And that's how I like to trade. Not only momentum, but then also buy and hold these longer term names for growth for the future.
Danielle Shea, an admirable mom and trader, and you're looking for these strategies. Thank you so much, Danielle Shea, VP of Options at Simpler Trading. Today. It's Technical Tuesday. That means Kevin Warner is standing by. He's going to look at the technical levels on the S&P 500 as we're around the 6,200. On this week who has a year-end target of 6,600. Can we get there? But let's look at the charts. Strategy and D-Wave are also on his radar. We'll be right back.
All right, Tesla with a nice bounce. NVIDIA just kind of sitting here. Futures looking for S&P to continue higher.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim.
All right, looking for S&P starting to climb again. Watch hedging flows here. Hedging flows starting to turn up again.
Trade brilliantly with Schwab.
A fresh take on the hottest trends in the market, from every click to every tip.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Welcome back to the watch list. I'm Nicole Petalini. It's time for Technical Tuesdays, and for that, we welcome in Kevin Horner, Senior Manager, Trading Services Education at Charles Schwab. We've been hitting some records. We're up from the 4,800 or so in April, and that shape recovery up to 6,200 and change. So let's take a look at the charts on the S&P, Kevin. What are you watching now?
Well, just yesterday we got through that 6,200 level, and last week we talked about possibly getting there. 6,215 yesterday, the high, a little breather this morning, but this afternoon, rather, at this point,
Okay, hedging flows starting to turn up again. We're looking for the markets to break a bit higher.
Of the rotational aspect of today's price action, we've noted leadership out of materials, leadership out of healthcare, some lagging groups that are getting a little bit of dollars thrown in today as we see some of these others kind of take some short-term breathers. So I think that 6,200 was surely notable. Levels beneath us, maybe 6,100, another nice round figure, but we're just above or right below that, rather, excuse me, the 20-day moving average, 6,043. Looks like a really interesting spot as well. A reminder here, we've held the 20-day all the way back to April 23rd. So I'm sure a lot of short-term traders are going to continue to watch that 20-day moving average. And it just keeps climbing, Nicole, right into 6,100 is possibly the next zone.
Okay, Google taking a break.
It'd be hard to deny with the price action here.
Tesla popping.
Everything, again, that rotation.
Tesla's popping now. Watch Tesla.
Giving us the widening out, if you will.
Tesla's on the move. Looks like Lance is going to have to cover his short pretty soon. Hmm? What is that? That's a weird looking photo.
You just turned around.
You show Felicia. It looks like a fuzzball with one leg. Close that. All right.
Number of key details here. Number one, we've got the broken down.
Okay, nice little pop here on Tesla. SPY. SPY continues to grind back up, trying to take out yesterday's high, Monday's high, new high of the day.
Since breaking that downtrend line, since validating support, we've been in a range of about 20 points or so, 357 to 425. And I really thought yesterday's move, closing at a 5-week high, was going to be the one that pushed us back to 425, and then traders would be given the chance to potentially trade a breakout move for a possible 50-point move to the upside. But what they're getting instead is that test at the confluence of the 20 and 50-day moving averages. I think a lot of traders are wondering today, do we hold the 50-day on a closing basis? Do we get a little bit of buying pressure here in the afternoon to maintain that middle range of the range that we hold here? Otherwise, I think the concern does exist. We could surely visit 357 again. And if we did break 357, there's a certain bearish sentiment that'll come into market here on strategy. So you got to watch these levels. You can certainly lean into just trading the range, right? Down, to trading the downside if it breaks down, or trading the upside if we get the breakout.
All right, thank you for that. And D-Wave Quantum, we were just talking about those quantum computing stocks. Some of your thoughts there?
Yeah, I was listening to that. I thought it was a fantastic discussion. The reason this is on my screen, of course, is the pattern that we're witnessing here. Stock has done very, very well, up more than 60% on a year-to-date basis. We've moved to that $20 peak here in mid to late May. And what's been developing appears to be a bit of a falling wedge, or maybe even a longer-term flag formation. Generally, the flag is going to resolve in a tighter window of time, think 5 to 7 sessions. So this kind of looks like a falling wedge to me, where we've allowed that 50-day moving average in purple to catch up with the trend. So we see $13 as an area of potential downside support in here. And again, the trader might look for just a break of that downtrend line from the peak to be an initial entrance into a new trade here. That would probably be through the 20-day moving average at $16. So there's a possibility that we just kind of go sideways even still and allow this kind of channel to tighten up further. But we did get a close above the high trade of yesterday already today, and yesterday's close was above the low for the day prior, and that being Friday was really the experience of the low day and the low trade in this pullback. So some bullish traders who are optimistic and looking for their opportunities in something like this perhaps got into the position as early as yesterday, just based on the developing pattern. But as usual, when we're looking at a wedge like this, it's possibly just one direction or the other. Under 13 could be bearish maneuver. Over 16, things could be certainly bullish to the upside from here.
Just as you were on, I got a message on the Market Watch on my phone and talked about.
Okay, we continue to grind higher. Amazon high of the day.
Shows momentum. Do you want to just sort of give us a final thought here?
Of course, because I'm so glad you bring my notes back to throw at my face. I love that. Thank you so much. We needed that. Yeah, it's a reminder of the 50 and the 200s length. Commonly, we'll see that the market breathes when we start to get that cross actually occurring. We actually go.
Okay.
indicating that the trend that we came into this rally with is apt to continue, as opposed to get denied up at these levels.
Yeah, and it's way better than the downcast sibling of the death cross. You don't want that. So we love what you're on, and we love your notes, and we love your technical analysis and your trading education that helps us all every Tuesday, folks, right? That's how I say Technical Tuesdays with Kevin Horner. Thank you, Kevin Horner. We appreciate it. Josh Schwab. Still ahead, we bring in our panel to discuss gasoline prices as conflict in the Middle East. Well, we've seen that rise and cool, and now the summer driving season is upon us. What's next?
Okay, NVIDIA is starting to fade a bit.
The best full service wealth management skills in the biz. Actually, I've seen something from Schwab. Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning.
Okay, we got about 2 hours to 1 hour and 10 minutes to go. 1 hour and 10 minutes to go.
Schwab, a modern approach to wealth management.
S&P trying to push a bit higher. S&P 500 trying to push a bit higher. Hedge flows rising.
Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. EverinSchwab.com/coaching and start learning today.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Welcome back to the Marketplace. We want to bring in our panel talk all about gasoline prices. We have a lot to think about. We're upon July 4th holiday, but we've also had obviously a lot of turmoil in the Middle East. Robert Sinclair Jr., Senior Manager, Public Affairs, AAA Northeast, is with us here on set. And Patrick DeHaan, Head of Petroleum Analysis at Gas Buddy. Good to see you both. Thank you so much for being here. So let's get the big picture from AAA. How are we thinking this weekend is shaping up? Is there any trend we're seeing compared to other years? What are some of the water cooler talking points?
Record-setting territory. Total number of travelers, more than 72 million. Those who are driving, 61 million. And those who are flying, nearly 5 million. All records, even more than the halcyon days back in 2005, when gasoline was a lot cheaper. And we think that has a lot to do with the fact that July 4th is a quick holiday. It's not the long summer vacation. So people are going to go out and take a trip, go see friends and family. Beaches are very popular. Fireworks are popular. And cruising is way up, despite the fact that cruise is 40% more expensive than last year. So record-setting territory, a lot of people getting out there. But for a few, it's still tough times. We've done driver surveys in the past couple of years. We asked drivers what the pain point was for the price of gasoline, and 40% said $3 a gallon.
We're at 317 now, and those drivers said that they would have to cut back in some areas of the family budget to afford gasoline at $3 a gallon. So with us above that price, I feel that there's a core 40% of those who are still suffering and maybe not traveling as far as everybody else.
Yeah, good point. Good point. But we are seeing a record number of travelers driving and flying. Patrick John, I think about these folks, and also the third, the stock market closes early. It's Thursday, which helps the long weekend getaway, right? Sometimes you have the fourth in the middle of the week, and it's a little tricky. I mean, now it's like just to get out of here on Thursday afternoon. Patrick John, what do you think when you think about these gasoline prices right now?
Yeah, Nicole, I mean, it's a great time to hit the road. In fact, it's looking like the cheapest July 4 since July 4 during the pandemic. That was back in 2021. 49.
All right. Amazon continues. Amazon on the move. Amazon on the move.
Putting it in context because prices were a little bit lower this winter, but
Amazon going. Looking good.
I think a lot of the reason why Americans are so optimistic about this summer, I think $3 is the new $2 a gallon gasoline. That's because inflation and wage growth has really ramped up over the last few years. So $3 a gallon is not as painful as it was a decade ago or 15 years ago when we saw gas prices at $1 and $2 a gallon. So $3, most people have gotten used to that over the last couple of years. The good news, just in time for July 4, Middle East tensions have cooled off, and most states across the country are now starting to see more price declines just ahead of the time that motorists are heading out for July 4.
Still regular, what people get the most of, Patrick?
Well, certainly regular, but you have seen premium start to recapture some of that market share over the last 10 years, Nicole, as you see more auto manufacturers produce vehicles that may recommend or require premium for their increased fuel efficiency. You're starting to see premium prices drastically in excess of regular. That's kind of the one differential over the last 10 years here in Chicago. It's not uncommon now that premium gasoline, that 92 to 93 octane, could be $1.20 more per gallon. Whereas on the West Coast, you still could find premium for 30 cents more. So that's a huge variety in pricing, and a lot of the reason is consumers have been using more premium, but the market has been slow to adjust.
So I do want to talk more about just the price of oil right now. $65.50 the barrel. It spiked around $79 in West Texas during what we saw the war. And then quickly came down. Robert Sinclair, your thoughts here? You don't think it's staying high anymore, right?
Well, all things being equal, we're in a market where prices should come down. Lots of crude oil is being pumped. The United States is number one producer of crude oil, but we are still in a territory where something could imaginary happen, where someone might threaten to mine the Straits of Hormuz, or there could be some attack, even on non-oil infrastructure, that could cause the price of crude oil to go up. We used to call it the fear tax. Nothing actually has happened to affect infrastructure, but people get afraid and traders bid up the price of crude oil. That still could happen, and we're still deep in hurricane season. So a major storm, I remember 2005 and what Katrina and Rita did to the Gulf Coast, and prices went up by 50 cents per gallon overnight.
Right, and Patrick John, you always do a great job covering that for us too here, so we'll be talking to you a lot as we're upon that season now. I'm so thankful you're both here, and you talked about fuel economy. In your notes, Robert, you talked about the tires. Make sure they're properly inflated. Don't drive around with a heavy load, particularly on a hot weather day. So be careful, folks. AAA's there for you. Gas Buddy's there for you. Check them all out. Thank you, folks. Buddy, Robert Sinclair. That's going to do it for us here on the watch list. I'm Nicole Pedalides. Watch for records as we go to the closing bell. Thanks for being with us here on Swap.
BP, I see. You guys are looking at BP? Okay. Equity Hub. Let's see. BP. British Petroleum. I think they're being sold, right? Aren't they going to be bought by somebody? BP.
For 7 years in a row with Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting.
Okay, S&P pulling back a little bit.
Bonds, money market funds, and more. Get it with Schwab.
All right, we've got 1 hour to go. 1 hour to go. Amazon's at the high today. Nvidia pulling back a bit. Nvidia. Broadcom pulling back. All right, so these are resuming some of the selling we saw earlier, and this is institutions probably maybe reducing their exposure.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffee. I'm Jenny Ford. Join us for Next Gen Investing.
1 p.m. Eastern, only Schwab Network.
British Petroleum, let me see.
Low tick alert -800.
Okay, big drop off here in the S&P, big drop off. All right, somebody took a little sell right there.
Trading at Schwab is now powered by Ameritrade, unlocking the power of think or swim. The award-winning trading platforms. Putting your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
The biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, morning movers only on Schwab Network.
Okay, a little drop off there. Okay, the hedging flows dropping off a little bit, but not a lot. Not a lot. Mostly just rejection there.
Today's trading, and what looked like was about to be a green day has just turned red, at least for the S&P, joining the NASDAQ. We'll take a look at where the market sits now at the 2 o'clock hour here in Chicago at 3 p.m. on Wall Street. S&P's down small, but down after being higher just a few
Low tick alert -800.
This on some comments or posts, it looks like, from the president regarding not extending the tariff pause past July 9th and doubting that a deal with Japan will get done. So we'll develop that story as we get more details, but it does look to be the catalyst for this little bit of a washout that we've seen in equities in the last 5-10 minutes or so.
Okay, so president doing something with the tariffs, not extending the pause.
The Russell and the Dow have been strong all day long. Particularly the Russell has been out in front as it's trading up right now by about 26 points. Taking a look at some of the other asset classes.
Okay, everything's pulled back a bit. A little selling there. All on news.
By a pretty sizable margin, 2%, but it is a little bit more volatile than the other marketplaces we watched. Gold's been strong all day. It's up 41 points, or dollars, I should say, right now in crude oil, hanging out in the mid-60s, kind of watching a lot of that volatility ease over the last several sessions. We pivot here to some of the stock-moving stories. I want to welcome in the co-host of Next Gen Investing, market correspondent here for the Schwab Network, Jenny Horn. You see the heat map there. Obviously, Jenny, today a day where the winners are the losers.
Okay, we still got quite a few stocks advancing despite this little pullback. We have 385 stocks advancing on the S&P 500, 64 advancing out of 100 on the Qs, 64 out of 100 on the Qs. We got 1,000 stocks, 1,077 on the IWM. Okay, news. This almost always winds up being a buy after a little dip.
Saying that two stocks in particular have had these incredible bounce backs this quarter. Those being Microsoft as well as Nvidia, which he said is the poster child for the AI revolution, are really led by these two names. Both having these foundational pieces of building on the biggest tech trend we've seen in their 25 years, covering stocks all across the tech street right now. So Nvidia last week rallied for 5 straight days, hit a fresh record, putting it on pace for its monthly gain of roughly 16%. Also, quarter-to-date gain was around 45%. Microsoft also saw a consecutive 4-day winning streak, bringing its monthly quarterly gains to about 8% and quarterly 32.5%. So both had really strong second quarters. ISO particularly always been
Okay, getting a nice little reversal off of this. They buy in the dip.
every $1 spent on Nvidia, there's about $8 to $10 multipliers across the rest of the tech ecosystem. Saying, of course, that the godfather of AI, Jensen Huang, right now has taken on a vantage point to overall continue to be a huge, I mean, if not the player of AI enterprise demand and the appetite for NVIDIA's AI chips going forward. He does not see right now necessarily waning. The stalwart hyperscalers led by Microsoft, but he did also note Google and Amazon as well as major platforms to really find this momentum. I mean, so I think that no surprise to see his names that he's loved for quite some time are still those leaders as we look into the back half of this year. But all things considered, actually, he was a bit more cautious on Tesla today, just given the fray right now that we're seeing between, of course, Musk and President Donald Trump. But still like a lot of this tech, and I would say Nvidia, we've said it's like a freight train where you don't want to get in front of it, because every time we seem to hit this like sort of lag or sort of snag in the narrative, it comes back with velocity.
So I did want to just, for the record, the commentary from the president was while speaking to reporters while boarding Air Force One. So there probably isn't going to be much else on that, but that is why I think the market took that move. Back to this conversation, though, Jenny. Dan Ives, and I say this with love, in some ways,
Sure you do.
It's kind of a meme, but like you can't argue with the track record of success. The guy says just such outlandish things, but he's been so much more right than so many of his more, I guess we would say, prudent peers or those who are concerned about valuations. Dan Ives is just saying, hey, to the moon. And it's I say he's kind of a meme because it's Nvidia, Meta, Microsoft, Palantir, and Tesla. That sounds like a Wall Street's bet portfolio.
I mean, it does, and I think that it's even more impressive. It's not just like he necessarily.
Okay, so stocks pulled back a little bit there. President talking about not extending the tariffs or something along those lines, something to do with tariffs. The markets didn't like it. So you got an immediate algo selling on negative words, if you will. And we're looking for a bounce now. We're looking for a bounce. Is that going to be enough? Okay, so algos had a nice little trade there real quick. Okay, let's see if we get out of this. We're trading at all-time highs. We're just off of yesterday's high, inside of the lower half of yesterday's range, basically.
He puts like this price target that at the time it seems like, oh yeah, the stock's really going to double from here. And it like triples from here. And the whole time he's ratcheting things up and he's ahead of it. So, maybe it's lucky. Maybe he's just that good, I got to say. Notably, though, one of the names that's missing from this is Apple. And I thought Apple was a key story yesterday because I think we've had this conversation on our program, but I fully believe that we're in that point in this AI race now where we have a pretty good idea of the names that are winning, and it might not be certain what combination of them or how many of them, but you see the names that are falling behind. And Apple was one of the names that was falling behind. And I think they admitted that. They basically thrown in the towel and saying, hey, we're just going to jump on one of the other horses.
Yeah, I mean, they've definitely fallen behind. And so I think that if you're hoping for the broader participation of the overall market to continue to see this upside, I mean, I know NVIDIA has been, I've always said, I'm a believer that you have to see NVIDIA come back. You want the markets to come back. I think that Apple now is the next wave of hopefully return to
Well, this is where it's super important for me to preface. I actually think this is a good thing for Apple. Why
Okay, we're pulling back in.
you're going to lose? Well, hey, find the winner, jump on, do a little bit of these projects. When it gets commoditized, you got the team working on stuff, but it's a lot of money these companies are spending. And if you're nowhere close to the front, I mean, look at AMD. AMD keeps trying to research AI chips, but they can't sell them.
I know, like, look at Intel. I straight agrees with you today because when I first saw this story broke, I was like, this is awful news. And then, I mean, I think it's amazing the way the narrative can be rewritten by the fact that we've been higher all day in spite of the overall market.
And it broke yesterday, too. So some of this was even, yesterday.
Yeah, so basically, the fact that Apple's considering using AI models from OpenAI or Anthropic to deliver that more advanced, capable version of Siri, which was debuted first at WWDC 2024. So they promised they could deliver a new version of that voice assistant. The timeline's been pushed back. We know we're getting it now sometime in the coming year, but this would be very interesting because they've really been, I mean, like, there's been a whole fear narrative around
Okay, see if we can't get a bounce out of this. It's been a pretty decent day for the most part.
Intel, and they've been trying to build more in-house. This would be taking on a bit of a different approach, which is perhaps why I think I initially read this as negative. But also, as we know, developing AI is one of the most advanced types of technology that has ever existed. So that makes sense.
Expensive.
Definitely the most expensive. And if you look at it frankly, I know that all these companies are
boy.
showing reviews for AI. Their CapEx has also been fairly behind. Like Meta, for example, is expecting to spend roughly $65 billion this year regarding all things CapEx. Hugely.
Well, they're not jumping out of the race.
No, they're definitely not. But Apple, I mean, for the past 12 months, spent around $11 billion. So they need to, I think, ramp up some of this spend. But maybe
or back a lot and showing what these other names. I think they're taking that approach, which is really the more Apple approach. Apple is not usually, at least under Tim Cook, the Steve Jobs Apple.
Let's see what the hedging flows look like. Hedging flows. Okay, it did dip a little bit.
Once somebody else hits a home run, do it a little bit better. Think the AirPods. They didn't make up Bluetooth headsets.
They just did
the most popular ones.
Yeah, that is, I mean, and I think that is why we've criticized Apple as of late. That strategy has worked for them in the past, but with AI, I just feel like you have to be on the cutting edge for your technology to even be, frankly, impressive. That's been, I think, the huge issue with so much of the rollout of Apple Intelligence is nothing about it is cutting edge. It's in already existing smartphones. Like Google Pixel, for example, has a lot of the various AI editing software, for photos, as well as like your email could be. Hopefully, the idea is smarter, but I mean, to me, it's also kind of annoying. I've been using it for about a year now. So
Trading at all-time highs. These little news flashes, chopping the legs out occasionally. Intraday, a little dip there. Looking for a follow-through or bounce tomorrow.
Yeah, no doubt. And I guess the best way I can sum this up is Apple at this moment must feel the best way that they can deliver this service, this product to the marketplace is to use somebody else's technology. And unfortunately, they weren't able to.
Looks like we're going to dip a little more.
Of their investment. But to your point, they were a little bit more prudent than many of their peers. They didn't go all in on this the same way. And if it does get commoditized someday, they can figure it out from there. I mean, at some point, AI is going to improve a lot, and like the next layer below that will be a lot easier. Think about how smart TVs have advanced. Like, it used to be super expensive. Now they're pretty cheap. And so it's the same thing's going to happen with AI.
The depth of the loyalty in this ecosystem, as much as I've criticized their Apple Intelligence rollout, I mean, I'm not going to not buy an iPhone, frankly. And I feel like I speak for those Apple loyalists.
Yeah, they're definitely entrenched here in the U.S.
Yeah.
No doubt about it.
Not globally, but here in the U.S., definitely.
Good stuff.
UNH did try to make it back up to the high today about 15 minutes ago. UNH fading a little bit right now, but UNH having a good day. Should see a follow through in the weeks to come. UNH looking much better coming out of a squeeze. Running the upper Bollinger Bands, RSI turning up, MACD, stochastics all looking good. Volume picking up on the break higher.
Let's start kind of big picture of how you certainly appreciate all of the conversation there about the Mag 7 names and a few that obviously Dan Ives has been mentioning. But the broader market, now that the S&P is back up to 4,200, we fully recovered from all the volatility in early April. Where is the next leg of the whole market go? Is it going to be up 10% or is it going to be down 10%? I think there's still some pretty serious questions out there that lead us to believe we want to be more defensive in this moment. And the biggest one is interest rates. Rates being higher for longer have put a lot of negative pressure on earnings. We're continuing to see that in our research right now, going from Q1 to Q2. Earnings estimates coming down to the mid-single digits, 4, 5, 6% in terms of earnings growth year over year. That's down from the almost 11% that we just
Just
saw.
watching hedging flows, not doing anything at the moment, just sit tight. Okay.
Do we continue to see the pressure of high interest rates linger and erode the value of future earnings the way it has over the last year and a half?
Brian, this is where it's super, super interesting, right? Because you almost have like the most perplexing fundamental development, which is earnings expectations keep being lower, at least they're kind of going sideways, and they've been going lower most of the year. But the index is going up, and it's like these valuation, discussions, they're getting more expensive because the earnings are going down and the price is going up. When you see that, how unique is that? And if you try to pinpoint a time in history, what would you select?
Well, I think at the moment we've just kind of equalized the valuation back to where we were in February because none of the really bad outcomes happened when we were looking at things that were being proposed between March and April. We didn't end up in a recession. There wasn't a supply shock. We still had enough inventory for consumers to buy, and therefore retail sales were relatively durable during this period of time. So the market has come back up to really where we started the year because none of the bad stuff happened.
Okay, nice little bounce so far. Been a pretty bullish day until the last 20, 30 minutes. Always something the president says the markets don't like. They dip and then they resume higher. All the things he said since the February 19th low that brought us down to February 19th high down to the April 7th low. Everything he said since then, markets seem to shrug off. Every time we dip, buyers step up. The average is 2 weeks up and then a pause. So this is the second week up for the S&P 500. So I wouldn't be surprised to see maybe next week we pause a little bit. The only caveat is that the month of July tends to be a strong month, seasonally speaking, especially for tech.
Is fine, but it's a narrow market right now.
So looking at the industrials, right? It's only 30 stocks, but July tends to be a pretty strong month. If you look at SMH and you average out over 10 years, okay, 10 years, seasonality, you can see SMH tends to outperform during the month of July.
Investment-based revenue that offset some of the net interest income problems that were caused by higher interest rates. So a diversity of products, a diversity of clients, and really high-quality balance sheets. Obviously, they just passed the stress test with flying colors. This is a great way to hide out in some high-quality names that could stand to benefit substantially if rates do go down later this year. But also, consumer staples is another sector that tends to do very well. And inside of that, you can find some names that might bleed over into some discretionary spending, but the fact that interest rates have stayed high has anchored people to their homes for longer, and they're wanting to remodel. So we really like Home Depot in this moment. A big acquisition announced earlier today that helps them bolster that pro segment where they're connecting consumers to contractors, and again, just a really durable growth story here. Not the 30+% growth that you're getting from NVIDIA and Microsoft, but it's a place that's growing very steadily in a very productive and profitable way. Again, it's just a way to still be invested, but in a little bit more of a defensive posture in this type of market.
Yeah, so Walmart.
Okay, so that's the industrials, SMH, XLK. Okay, XLK. All right, XLK. Seasonality wise, we go back 10 years. Let's look at 10 years. The last 5 years, it's been a little more difficult. 10 years, July seems to be one of the stronger months. You go out 20 years, and again, 20 years average, July tends to be one of the stronger months.
Obviously looking for these companies that are growing organically, right? As the cost of capital remains high, if you're having to leverage your balance sheet at this point, it's just the wrong strategy right now. So really looking for those companies that have strong cash flow metrics where they can take in top line revenue and drive out better earnings per share on the bottom line. So that efficiency, that productivity is leading to better stock price growth in this moment in time.
Brian, appreciate it so much. Brian Mulberry of Zacks Investment Management, Client Portfolio Manager. Great insights, a good setup, couple stock ideas as well in there. We're going to take a short break. We get back. Big Tech on the Mind. We'll be joined by the Chief Research Officer at the Futurum Group, talk Oracle, a name that has made a massive breakout. Down a little bit today, but pretty much unchanged. We'll find out more on the company and why it's on the move right after this.
Okay, so just looking at semiconductors, during more optimistic turns in the market, like we're seeing right now, it's a cyclical sector. So semiconductors tend to perform well during periods of economic optimism or recovery. All right, so July is the start of the second half of the year, and often sees portfolio rebalancing, with investors rotating into high growth sectors like technology and semiconductors. So not surprising. We're looking for semis to perform during this period.
And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren planning for their college education. Someday it'll be their turn.
So we're looking for that seasonality to kick in. All right, so we got a nice bounce. So a little shakeout, it looks like a little shakeout. We came down to support this buy order block from a little while ago. We're coming back up to the high. So shorts are having to cover. Okay, so we got a higher low, lower lows on the NVIDIA. All right, so if you look at NVIDIA, we had higher lows earlier. Higher lows, higher lows, higher lows. And now we're coming back a lower low. So now we need to recoup these losses and turn back up. Okay. Got a sell order block right there. So I'm not doing anything at the moment. Just seeing how the markets react. If we can continue to see a bounce. Watching hedging flows. Hedging flows are pretty much flat, even though they're turning up a little bit. Hedging flows on the S&P 500 are, turning back up a bit. So if we see if we get a little run up again, get the shorts to cover. Okay. Circle with a bounce, circle.
Joined now by David Nicholson, the Chief Research Officer at the Futurum Group, to discuss the big names in AI today. Of course, being Oracle, as I mentioned before the break, but also we'll get some thoughts on Meta platforms. Dave, good afternoon. Thanks for joining me here. It's a holiday week, so it can be a big ask, but let's talk Oracle. I mean, I gotta be honest. I had this stock slated the last several years for a legacy tech, like an IBM, an Intel, but it's found its way onto my watch list here. The stock has been moving like
S&P turning back up. All right, nice little rally off the low. S&P, okay, looking good. S&P cash turning back up. Higher lows. Okay, we got a little sell block right there. That was just algos selling. They're quick to take some profits, so they're probably out of it already. Shorts covering now.
But in all seriousness, over the last decade, Oracle has methodically pursued cloud, moving its expertise from on-premises data centers.
There goes Amazon, blasting higher.
And they've landed in a very nice spot with data being at the center of the AI universe.
Amazon again, going. Amazon. There comes the S&P back here. Okay, S&P, we got Amazon hitting the high of the day, ripping higher now. Amazon, beautiful trade on Amazon. You took it. Amazon looks good. Super micro is kind of off right now. Super micro. Okay, it's got a buy signal on the 60-minute, 30-minute. Oracle. Let's see. What's Qualcomm doing. Qualcomm. Okay, Qualcomm. Okay, Qualcomm's just grinding along. Okay, there goes Amazon though. Amazon's kicking ass. There goes Amazon. Amazon with 35% implied vol. This is pretty cheap. Amazon's still cheap.
Who are they competing with then? Is it the Amazons? Is it the Azures? Is it Google Cloud? Or those what you're describing as sort of the cloud providers that it kind of teams up with in this journey?
Yeah, we call it co-opetition, and it's all of the above. I can tell you that a little less than a decade ago, it would have been a pipe dream to imagine the kinds of partnerships that are going on now.
Yeah, there's so much going on with Amazon.
They partner with and they compete with AWS, Azure, GCP, and others. Then you go into the SaaS providers, the Salesforce.coms of the world, and it's a similar scenario. A little more competition there than cooperation.
So as we kind of look at where this all goes,
Google going. Google nice.
Kind of how the hardware side isn't necessarily slowing down, but we kind of
Thanks, Paulo. Google on the move. Okay, there goes Amazon. Okay, Amazon taking the shorts to task. Okay, looking for that. The hedge flows still aren't turning up rapidly, so it's just shorts covering. We'll see if the dealers start to cover as well. We had a peak over here around 10:15, 10:10, something like that. We had a peak in hedging flows. It dropped off, and we've just been trying to come off the low. S&P bouncing though. That said, all right. So watching these hedging flows, we hit the highs around 10:10, 10:15. Pull back, and now we just kind of move sideways to slightly up. So we're looking for hedging flows to continue to point to upside. Okay, Amazon looking really good. Amazon's a long-term play for me. I will day trade back and forth.
Which horse to ride in that crazy horse race. But if you're a full stack provider like Oracle, then you have a huge leg up.
Speak about
Target, TGT.
continue competing or find the winner. It does seem like as we're watching this horse race on the AI technology R&D, some of them are pulling back on the reins. I think Alphabet has shown signs of that. Apple basically admitted to that yesterday. But one of the companies
Okay, Target's starting to go.
admitting defeat is Meta, as they are going beyond all in here. They have all the chips on the table. They have pushed them in, and they're trying to buy in for more, it seems. What do you make of the headlines that have come out of Zuckerberg and team with, how much they've been trying to
Okay, bought shares at Target about 6 weeks ago. Finally starting to see something happening with Target. Okay, here's Target. Target's starting to break out. Okay, so I bought shares way over here in May. Been sitting on this for a while. Let me just check Target, make sure I'm not misspeaking here. Target. Let me take a look at my positions here in Target. Target.
Getting the money for this. It's not from their AI operations. This is a bit of a desperation move. I don't see
Target.
precedents for people.
Yeah, Target. Okay, I have options. Okay, so Target's finally doing well. Okay. I have August calls. Sorry, I have August calls, not
If you think about kind of the private valuations, if you were an early, employee at OpenAI, maybe you have exposure to some of that equity. If it ever goes public, you're able to get out. Maybe this is the going rate of what some of those guys might be worth or gals might be worth. And they're just trying to get people off their roster. I'm with you. I don't see how their expertise could be that much more than somebody you could hire at a much more reasonable rate. Maybe you just get 20 of the people at reasonable rates.
Yeah, you said cynical. I thought you were going to talk about me, Alex. I'm with you. Look, I see this as a money game. It is not sound business strategy. Again, no battles will be won because of these transactions going back and forth. I think if you really dig into all of the money from funding, the fact that OpenAI is not
okay. Tesla turning back up. Broadcom turning up. Okay, so looking a lot better. back up to the highs, giving you an opportunity if you want to take profits before the close. If you're, just a day trader on S&P, like Lee Star used to do. Lee Star would close before the end of the day, and we got it 32 minutes to go. He would close low of the day, end of the day, and then come back in the next day. Sometimes he'd be carrying the slow mo trade. More often than not, he'd be carrying the slow mo trade, and he would day trade as well. So S&P looking good. Light bridge. All right, so see if we can't get more out of the markets here before the close. Okay, so UNH going for the high of the day. Okay, UNH is going for the breakout. UNH is going for the breakout. Here we go. UNH looking good. Okay, UNH is going for the breakout. Big bullish candle today. Look at the volume.
So I would say 5 years from now, we won't be talking
Okay, UNH daily volume is huge, as a friendly POTUS would say.
Those models will become features of operating environments. They will become features of platforms. I think that much like electricity permeates everything after the age of electrification, AI will simply permeate everything. So folks will be doing business on the SaaS front with someone like a Salesforce.com. It will be empowered by AI, but no one will talk about the version or the company or the name of the model behind the scenes. Same with Google, same with Microsoft, same with AWS, same with Oracle. And no, there will not be a single winner. Ultimately, this is all IT. It's information technology infrastructure. It's just a new
Okay,
kind of
S&P.
but there will be no winner take all.
Looking good. Looking good. Looking for some more follow through tomorrow. Qualcomm. Target finally turning up. Target. You guys looking at Target? Target looking good. Target finally coming off the low. Okay. So all of these stocks that have been lagging most likely will see activity. Okay. Going into the second half. Probably going to get evidence of buying. Makes a lot of sense to me. Portfolio managers want to outperform the markets. How do they do that? They buy the low, and we could see a 50% move in Target. Who the hell knows? We'll start getting upgrades and stuff. We could see Target up at say 150. Easily see 150 on this one. Mm-hmm. Okay.
Coming up, it's options quarter. KG is going to give us some of his levels. He's watching into the closing bell. Stick around. Market on close. Be right back.
IBD. Okay, what's Costco and Walmart and those guys doing? Walmart had pulled back, right? Walmart had pulled back, guys. Walmart, WMT, Walmart, BJ's. Okay, BJ's. No, BJ's is not too cool right now. Costco, TJ Maxx. This time of year, the place is always packed. TJ Maxx off the 200-day.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more.
Okay, so looking good.
Just for traders. And with guided learning methods, stacked with content curated to fit your unique goals, you can spend less time searching. Trade brilliantly with Schwab.
Welcome back to Options Corner Time. Alex Coffey now joined by Kevin Green, senior markets correspondent.
Okay, target, TGT target. Big move on target today. Cool. Very cool target. Thank you.
Given a little bit more confidence to the administration. What do you make of those headlines and where it shapes us up now with about 30 minutes left in the day?
Yeah, Alex, if you kind of look at the last couple of trading sessions, especially for Friday, these comments around trade policy and potentially holding off on having discussions with certain countries, we have seen intraday reactions, but we haven't really been able to hold, and that's exactly what we are seeing right now. We're still trading at around that 6,200 level, even though we might see a delay when it comes to this trade deal. Now, it does appear that the administration is really trying to put the majority of its weight, it sounds like, on India, and hopefully that trade deal can actually come to fruition there. But once again, we saw a little bit of intraday chop, but nothing that was too that we weren't able to kind of recover from at this point. Here, going into the close, what I'm looking at is 62.10.
Okay, Tesla, nice little pop there. Tesla. Okay, S&P pulling back just a hair. Okay, the trend is up. Trend is up. Trading just below all-time highs. I think we'll be talking about that for a while. Tesla turning back up. All right, so shorts covering end of day. Shorts covering with 24 minutes to go. 24 minutes to go. Shorts are starting to cover. Okay, looks like UNH wants to go. UNH.
So, Alex, I think the biggest risk going into this close here today is twofold. One is going to be, does the mega cap name really kind of hold up going into the close?
Okay, UNH. Very strong close so far.
So far in today's session, we do have broader participation in the rest of the market, close around 90%, around 85, 90% of the stocks in the S&P 500 to the upside so far. That's the other big risk that you have going into the close. You have some sellers into some of those other sectors or indexes taking some of these profits. We have seen some outsized gains for companies and stocks that usually don't perform in the manner that they are today. So I think there's a little bit more downside risk going into the close. More of a risk of a larger sell, market on close going up to the sell side than what we would normally see going into the close.
All right, looking for a strong close.
I do want to ask you a question, though. We're at basically all-time highs. I mean, within a handful of points, definitely on a closing basis with the S&P pretty much unchanged. Obviously, a stumble for mega cap tech today. That's not helping. But if this is the down day, isn't it still pretty bullish out there?
Yeah, I mean, if you kind of look at the makeup here today, I actually have a chart with the S&P 500 high yield dividend index versus the S&P 500. If you're a trader, you actually like seeing this type of price action. I would like to probably see this over the next couple of weeks, a little bit of a catch-up trade when it comes to value in this market. Now, this is showing high yield dividends, but even if you look at the value separately, if you look at the value
control.
Index, here at the S&P 500, you're seeing the same type of reaction. We've had this kind of correlation between both of these indexes for the most part until the S&P 500 really started to break out as the mag, if you will, as the mega cap tech names, as communication services really outperforming, pulling us higher and making new all-time highs. But right now, if you're looking at the high yield dividend index itself, actually you could say it's technically
Okay.
around another 200 points up from
All right, let's get another bounce in the S&P. Got a few minutes left to go. 22 minutes left to go. 22 to go. All right, it's been a decent day. A little chatter from the POTUS. Markets didn't like that, but we're looking okay. Looking for a follow through tomorrow. Looking for this trend to continue. We'd like to see junk bonds. I will say I'd like to see junk bonds bounce. Okay. So if junk bonds can manage a bounce, we're not seeing that right now. So it looks like they're taking profits off. HYG as well. Looks like they're taking profits off the table. High yield's been a little bit stronger, less risky. The 10-year yield, TNX, the 10-year yield. Okay. A little bounce, but still trending along the lower Bollinger Band. So this could get all the way back to the April 7th low. That would be kind of cool. Okay, TNX, the dollar, US dollar, is that bouncing? US dollar, continues to fade. So that makes more profitable for US companies selling abroad. UNH looking good. What is gold doing? Gold, GOLD, gold. All right, so below the 50-day yesterday, what's it doing today? This is the end of day chart. GLD, all right, back above the 50-day. Okay. So still basically in a range. Okay, so you could say a range. You could say this is the dollar. You could say gold is in a range or a slight triangle pattern. It's at the 50-day, trying to get above this level and push higher. Okay. Okay. Amazon at the high of the day. A little profit taking on Amazon, looks like. UNH looks like it wants to keep going. UNH. Woohoo! Look at UNH. Lots of volume. About to surpass Friday's volume here. UNH is about to surpass Friday's volume. That would be great in the next 19 minutes to see this volume pop even more. UNH strong close.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I want them to manage some investments for me too.
Let's move on, shall we? No can do. Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Binge watch the market with the Schwab Network. Tune in 24 hours on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Accelerate your market knowledge and shift your perspective into focus. Real-time example trading.
All right. Okay, Tesla pushing a bit higher now. Tesla. Last time they had that spat, Tesla was down a while.
And it turned back up. Many are thinking that this isn't going to happen this time. Maybe. I don't know. It's like two high school students fighting with each other, you know?
Conversation on real estate, joined now by the director and CEO of Allison. Austin, thanks so much for joining me and taking the time here on this holiday week.
Okay, UNH. Looks like it wants to go some more. UNH. ABCD pattern on UNH. Okay, UNH. Looks good.
It's a pleasure. Picasso is the global leader in luxury second home co-ownership. So we enable families to buy as little as 1/8 of a home or as much as 1/2 of a home, depending on how much you intend to use it. And then we manage the entire experience from start to finish. In another industry, some people are familiar with the aviation industry, where NetJets is a leading company that facilitates private aviation. Picasso is essentially NetJets for luxury vacation homes.
Was this going to lower the barriers to entry for those who want to expand their real estate portfolio and have access to the home? I saw in some of your company's commentary, you talk about how much these homes sit unoccupied if they're solo, ownership. Is it more meeting that is sort of the use case, or more that, hey, this makes this a lot more accessible to a lot more people?
Well, it's a combination of both. We're in the luxury home business where our home $2 million on the low end and $20 million on the high end. And we're certainly making luxury homes more accessible through this co-ownership model. But what we see more often than not with our buyers is they're leveraging the co-ownership platform to get more for their money. So let's say that they had $2 or $3 million to spend on a second home. With our model, they can buy a $10 or $15 million home because they're only buying 1/8 of it. So that's the more common use case that we see. The other reason why people take advantage of co-ownership is because it's the easiest way to own a second home. Oftentimes, if you buy a whole second home, you spend a lot of your time dealing with the hassles that come with home ownership, whereas the Picasso model is turnkey, which enables our owners to just enjoy the property without.
All right. We got 14 minutes to go. Congratulations. It's been a pretty good day. Okay. Looking good. Looking good. Congratulations.
Well, we are growing quickly. We've been at it now for 4.5 years. We already operate in over 40 destinations around the world, not just in the U.S., but also in Paris, London, and Cabo. We just announced expansion into Italy, into the Caribbean, into other parts of Mexico. So we are growing very fast, and we plan to continue that. We don't have immediate plans to announce with respect to going public, but when the time is right,
Nice look to it.
that's certainly a path.
All right. ABCD pattern.
Good stuff. Austin, let's take a step back. Let's talk real estate broadly. I know you have a certain subset of the market you talked about that you guys are focused on. Really high-end real estate, particularly second home, probably in nice areas, big price tags. We read all the time, we hear all the time how much commercial real estate is absolutely impacted by rates. Homeowners on the low end has been influenced by prices.
There goes UNH. Big move, UNH. Very nice. Very nice. There goes the S&P. Booyah, Kramer. Booyah. Okay, looking good. Here we go. Dun, da, 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 dun, 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 da, 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 da.
Course in the last couple of years. But what we've seen most recently is that in the luxury market, things are still quite active and stable. In fact, the luxury home market has increased. Prices have appreciated by about 3% year over year. And I think the reason why that is luxury home buyers are a little less sensitive to
looking good.
because they're less sensitive to financing, meaning we're seeing a larger percentage of people buy with cash, not just in
Very
the
nice.
whole luxury market, but we're also seeing the same thing in our Picasso business. I think the other thing that many of our customers see in real estate is they see it as a safe haven
during turbulent times. If you look at what real estate has done since 2008, real estate has appreciated by 5% on average per year since 2008. So this is an opportunity for people to redeploy their cash into a stable asset that they can count on over the long run.
Do you think that's how the people you're working with, the clients you're working with, are largely seeing it as an asset within a portfolio? Or is this also just like the same reason you mentioned you get the net jet or the nice car? It's fun to have, it's cool to have, or is it a little bit of both?
It's a combination of both. The first thing that people are thinking about when they buy a second home is they're thinking about creating a better life for them and their family. They want to create more memories with the people that they love. So that is the primary return on their investment when they buy a Picasso. But there's a secondary benefit of buying a Picasso, which is that
Okay.
you're also buying.
So what was the upper strike again? Okay. Iron Condor was
You're enabling your family to live a better life, parking your money in a great asset class.
Austin, Allison, I appreciate you taking the time and love the breakdown. Real estate
okay.
as a whole,
62.35.
insights into your business. Best of luck.
60. Where are we right now? S&P, SPX.
Austin, of course, the director and CEO of
Okay.
When we get back, Mike Townsend from Charles Schwab is going to join me. We're going to talk all things one big, beautiful bill, the big picture, right after this.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab. To over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Time for the big picture. Welcome back to Market on Close. Now joined by Mike Townsend, Managing Director of Legislative and Regulatory Affairs at Schwab & Co. Just the guy we needed on this afternoon. Happy to see you. Thanks for taking the time.
Okay, Amazon, Google at the highs of the evening session, Tesla highs of the evening session, Microsoft turning up. I don't have a good feel for Microsoft. Nvidia turning up, Broadcom turning up, UNH, ABCD pattern, UNH, strong close, 24 hours. UNH trades 24 hours.
What has to happen here, of course, Alex, is the House passed the bill back in May. The Senate now passed it, made a whole bunch of changes. House and Senate have to pass the same thing, so that's what the House has got to do in order to get this to the president by the self-imposed deadline of July 4th. I think they got a shot at doing it, but it's not a slam dunk. There are a lot of complications, a lot of changes coming back. Both parties are worried about on the House.
Now, Mike, absent hiccups, there's not a situation you're foreseeing where this is then kicked back again to the Senate.
Okay, 7 minutes to go.
Or is that possible? Is that the bad path in terms of timeline if you're the president?
Yeah, I think that's the bad path. I think you can't rule that out as a possibility. I'm guessing that the president is going to put the full force of his ability to twist arms and needle people and badger people into voting for this. But like I said, I don't think it's a slam dunk. So I think you could see some possible changes, and maybe it has to bounce back to the Senate. That would take it well July 4th deadline. So I think there's going to be a big push here in the next 48 hours to get this done in the House and be able to go home for July 4th and have this to kind of talk about and something for the president to sign in.
Oh boy, people are funny. All right, Tesla, a little profit taking there, end of day. Okay, so not a bad day. Not a bad day. Can we get a nice little flush higher or a spike higher? UNH looking really good into the close. Okay.
Yeah, I think you're right, Alex. That's the kind of thing we're talking about. A promise to vote on something, else that Congressman so-and-so cares about down the road or something like that. I think you've really got this breaking down in a couple of different ways. One is moderates concerned about the Medicaid cuts. Still got a couple of holdouts on the state and local tax deduction deal. But I think the bigger one is on the conservative side, where the savings and the impact on the federal deficit and the national debt is what is really concerning some conservatives. They don't feel like the spending cuts go far enough, and the bill looks like it's going to raise the federal deficit by $3+ trillion over the next decade. That's not really what they signed up for. They really signed up to try to bring the deficit down. So I think that's where you're going to maybe see some of those kinds of promises. We'll come back later in the summer and try to focus on some more spending cuts or something like that in order to get this bill across the finish line.
Well, that's where Elon and the promises to fund primary challengers and the like really.
Okay, here we go. D, UNHD. There we go. UNH.
Mike, let's shift gears though, because we also got trade policy. We actually had headlines at the top of the hour. President while either boarding or unboarding Air Force One, speaking with reporters. Japan was a topic of discussion, but I think the big takeaway was not looking at pushing this timeline out. So it seems like this July 9th date is written in at least, I guess intensely with the pencil at this point. Razor could still come out, but maybe not likely at this point, Mike.
Yeah, I think it's the key date to watch, Alex, next week.
Okay, good to see lots of stocks being traded in the room, in addition to what I'm looking at. Okay, Circle.
Do they extend the pause, for 30 days or 60 days? Do they extend it for some countries that they feel like they're making headway with?
Circle, big move on Circle. Popping.
A serious response. I think they're leaning towards something along those lines where.
Oh boy. Yawning in your ear, sorry. Such a rude fellow. So rude. Okay. We came down. Looked like we were going to test the 50-day on Palantir, but we had buyers come in. So maybe that was a fake out. Maybe institutions are trying to get people to sell. Portfolio managers trying to get people to sell so they can buy more shares. Okay, Palantir watching that one. Google still down a smidgen on the day. Google came back pretty well. UNH though, that's doing really well. UNH, we've been waiting on this sucker to move forever. UNH finally getting the breakout that we were looking for. We got 2 minutes to go. 2 minutes to go. I hope everyone had a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We have 2 minutes to go into the closing bell. I hope you had a good day. I have a hard stop again. My wife is going to leave town to go up to see a friend's wife's viewing, I guess. She passed away. Did not know he got divorced from her and has a new girlfriend. Sold their house in Kennelon. Beautiful home. It's like $1.5 million. $1.5 million. And so she's going to go up there by herself. I can't go. Got too many things to do. The kids are still here. Mother-in-law is here. Anyway, I got a hard stop. So have a good evening, everyone. Take care. Was hoping for a little bit better breakout. Just keep in mind, UNH does trade 24 hours on Thinkorswim, so it could be moving after hours into the wee hours tonight. Tesla coming back. Last few minutes, Tesla. S&P coming off the highs. Not a bad day. Not a bad day. We're only a few points off of all-time highs. Have a good one. Take care. I will see you in the morning. Ciao.